Good morning, and welcome to Emergence. Please welcome your host to the stage, Larry Cermak.
Welcome everyone. I'm Larry Cermak, I'm CEO of The Block. Obviously, The Block is organizing this event along with Foresight Ventures. Thank you so much for coming. I know it's early in the morning, it's hard to get people to come to crypto conferences in the morning, so appreciate everyone that's actually here. First thing I wanted to talk about is the elephant in the room. I think we couldn't start this conference with better luck than we had this year, which is on this day in the morning when we were all sleeping, Bitcoin surpassed $100,000, which all of us are super excited about. Huge milestone, and we were obviously hoping that this would actually happen while the conference is happening, so we're slightly disappointed. We thought it would be a little bit better if it was happening when everyone's here, but because of that, we prepared a little video in case that actually happens, and it seems like a huge waste not to actually use that video now that we surpassed that on the day of Emergence when we can all celebrate. So one thing I want to do is just start with that video right now, and then we actually start the conference. All right. Very short, and obviously not as good as if it actually happened while we are here, but still a huge milestone for the entire industry. When I joined The Block in 2018, Bitcoin price was about, I think, $5,000 or $6,000. So it just goes to show, back then, I think like none of us thought it would happen this fast, but we're here 8 years later, and it is happening. We're basically at the best point of the industry we've ever been. Highest prices, great time to have a conference, great time for all of us to celebrate that here. First off, I want to mention even though right now it's a little bit emptier, we had nearly 2,000 people attending, nearly full capacity. I think like 6 months ago, I was a little scared that we would not have enough people. Now I'm a little scared there's actually too much. We didn't order enough food almost to actually accommodate for everyone. So we're super excited that so many people could actually come here. It's going to be an amazing conference. There's about 50 different countries that are attending right now. Only about 40% people are actually local, so 60% came from different countries. Overall, that's pretty impressive. It's Prague in December, and not the best weather. Even though it's a great time to be in Prague, it's going to be an amazing conference. When it comes to speakers as well, we have more than 130 speakers. Obviously, you guys saw the agenda. You saw all the speakers. Only 3 or 4 of them are actually from Czech Republic. The rest is completely international. It's a global conference. And therefore, it is going to, global topics are going to be discussed. And so why did we actually do this conference? Why did we do it in Prague? First off, overall, we like the size. That's about 2,000 people. It's much more personal. It's much more exclusive. It also kind of forces people to actually go to the venue and enjoy it, have a good time, not the mega events where like you just go to a bunch of side events. We wanted to create really high quality information, high quality panels, something that you will actually want to go to versus just like go out somewhere else and drink outside of the venue. Like we really wanted to create something that's going to be interesting. We have basically every single researcher and every single journalist from The Block is here, and most of them were helping with the panels, with the questions, so it should be insightful. It really should feel like you actually want to go there. Obviously, like I said, like big important part for us was that we want everyone to actually hang around the venue. So even when you saw all the side events that we're doing, all of them are happening at a time, later in the evening, so that we actually are encouraging people to be here. There's going to be a lot of drinks, a lot of food. It's going to be a good time to be here. And in terms of like why we actually picked Prague, first off, like I'm not gonna lie, I grew up here, so it's a big part for why we actually did it. But really, it's a great combination of, it's a really affordable city. It has great nightlife, so people really enjoyed it. DEF CON happened here in 2018. It was one of the best conferences that I've been to. And it happened at this venue as well. So that inspired, a big reason for why we actually did it here. And another one is that the block, obviously, we're a US-based company. Foresight Ventures, who is the majority owner of the block, they're a Singapore company. We're also trying to connect East and the West. There's a lot of people from Asia coming, a lot of people from the US. It's nice to kind of meet in the middle and do that in Prague. So a few things I want to mention, like slightly more operational. On the website, you can find the agenda. You can find everything that's actually happening. You can also see it all around the venue. There's going to be agenda items. There's also another stage, which I'm sure you guys know. This is the main one, absolutely huge, like one of the biggest stages I've ever spoken at. There's another, like quite large one called Emergence Stage, so a lot of the interesting panels are happening there as well. And then I also want to mention that there's a lot of side events happening, so everyone that is attending can register for those side events. There's about 15 of them, so you can find all of them on the website. You can register for all of them. Obviously, most of them are overbooked at this point, but it's still, there's still a lot of really great ones done by Binance, Vintimute, Pyth, GMCI. A bunch of like really cool companies are organizing like nice things. So please actually attend those, come to those. It's going to be great. Also want to thank the sponsors that actually made this possible. It's hard to kind of bet on the first conference of someone, but we're obviously really thankful. We think this is going to be great, so we're really thankful for everyone that supported us in this. Another thing I want to mention, you guys can probably see, but there's a bunch of white hoodies similar to the one that I have. You can recognize the block employees that way. So if you have any questions or you're lost or like you want to figure something out, just speak to anyone in the white. Hopefully, not many people outside of the block are wearing white and are going to get abused, but most of the people are going to have the same hoodie, so you can find them pretty easily. Another thing which is important, this is one of my favorite things at the conference and something that we're doing that's different than most of the other ones. We're doing, you guys probably saw, but there are these quiz booths all around the venue. It's kind of a white little booth. In these quiz booths, you can compete with everyone else at the conference by putting in your badge number and taking a quick knowledge test. So the point of this is to try to find the smartest person here, smartest person at the conference when it comes to crypto knowledge. We really highly encourage everyone to do that. Not only is there a leaderboard where you can kind of just flex, like I'm really, I'm great. You can not only just flex your name, but also your company. So if you feel confident that you can, be the smartest person here, please do that. The block employees are not allowed to participate for fairness reasons. But for everyone else, I think this is going to be like one-of-a-kind competition. Now, that's also going to lead to another thing, which is the top 3 people that scored the best on this knowledge test then have the opportunity to compete in a game show, which is the last event of this conference. It's happening tomorrow on Emergence Stage. And the winner of that will win $30,000. And that will be the smartest person of the conference. So I think that would be a nice prestigious thing to win for your own name because we're going to be promoting that on the block Twitter accounts and all our social media, but also just a really cool part of the conference, I think. We have a very unique setup for that on the Emergence stage. So one thing I really want to do, even if you don't want to compete in these booths, please come to that tomorrow. I think it's going to be one of the last things on the Emergence stage, so the other one. And it's going to be amazing. I'm really excited about that. And that's also going to lead into one of the products that we're also announcing tomorrow. That's, overall, I just want to make sure that everyone, uses this opportunity to actually network with people, to meet with people. We've done it in this way so that everyone is here. There's plenty of opportunities, plenty of rooms where you can talk to people. There are media rooms where you can record content. But most of the time, we just really want people to have a good time, want people to like this concept, so that in the future, we can continue doing more events like this. Obviously, this is the block's first. It's a little scary, but we all feel really confident about this concept that barely even existed a year ago. So also huge thanks to the block team, to the production company. They all done an amazing job. All of this, all the branding, everything, none of this existed a year ago. And it's really impressive what they've been able to accomplish. So now, please have a good time. Now we're going to take a tiny little break, and I'm going to come back and interview Kostas Chalkias, who's the founder of Mysten Labs, which is the creator of Sui. So I'm going to be right back with the chairs, and in about like 3 or 4 minutes, we'll start the first panel. And then there's also stuff happening on Emergence, on the Emergence stage as well. So if you guys want to go to that as well, you can. That's going to be starting really soon as well. So that's it. Thank you so much. Thank you for coming, and hopefully you guys have a great time.
Time now for our first fireside chat. Please welcome back to the stage Larry Cermak and his guests, Kostas Chalkias.
So again, welcome everyone. Welcome the guests, Kostas. He's the co-founder of Mysten Labs, who is the creator of Sui, one of the largest blockchains in the world. And we're going to kick off this discussion by just allowing you to quickly introduce yourself, tell us a little bit about the backstory, and then we're going to get into some of the questions. But thank you so much for being here.
Thank you so much as well. Imagine I just came from Abu Dhabi and I'm coming back in 2 hours. Only for this one, yeah. I really appreciate it.
Appreciate it. And so can you tell us a little bit about the story of how you came from your background, which was actually in education, to then working at Facebook, Meta, developing the blockchain there, and then gradually making it over to Mysten Labs and Sui?
Of course. By the way, I was originally on the AI sector, as most of the students now, and I was doing machine learning. Back then, I was trying to figure out how we can predict soccer games, like the output, using like techniques from the stock market. And then I was hacked in the university. I used to have like a very good like space where we had servers and all of this stuff for AI stuff. And then because of the hacking, my professor came to me, look, you have to learn security. And then after this, in 2003, if I remember correctly, we created the first cryptographic library in Thessaloniki, one of the cities in Greece. And then after that, I started working for governments. I was the one who did all of the contactless biometrics in airports, like for security and all of this stuff. Then one day, someone knocks my door and they say, look, the only option if you're a cryptographer is to be in academia. Right? Imagine you're coming from a small country, maybe you can go to NSA and other like agencies. And then eventually I ended up in a company which was the first consortium back then, permissioned network. It was called R3. But why I went there is at the time that Bitcoin started, I was one of the like unofficial contributors on a few things happening in the backstage.
And I wanted to ask about that. I think this is one of the things that I didn't know after like being, for 9 years in crypto or something. But you actually like interacted with Satoshi directly, right?
Directly, yes. So my manager there was one of the first developers of Satoshi, Mike Hearn. Mike Hearn was the creator of Bitcoin J, and maybe some of you know the hash time-locked swaps, how we can do swaps between assets. And then Mike told me, look, either you stay in academia or you come here and work officially for the blockchain industry. So back then, imagine we had some messages indirectly to Mike where Satoshi, I don't know if it was one person or more, but there were a few patterns. For example, some of the emails had like double space, which implies, okay, this guy cannot be 25 years old. It might be 40 years old or something, because this was a pattern that happened in the past. And even like the way, like native English, so maybe British or like US, Australian, I learned a few things, but I never managed to decode who is actually behind it.
And you think it's better that it doesn't come out, right? Or are you like, do you think
what I know is it's not Mike.
Okay.
So Mike Hearn actually joined, he was a Google employee. He used to do like Google Maps and all of this stuff. He told me a few things about his story. I met other people, like even some, like not co-founders, but main developers of the Dogecoin. Imagine the same company actually brought a few people who used to work for Bitcoin and Ethereum. I was also an auditor. By the way, I broke many smart contracts, especially lotteries. Everything was a scam at the beginning, I'm telling you. But then this got me very close to to the permissioned networks back then. We were competing against like IBM, Hyperledger, and all of this stuff. And then one day Facebook announced, okay, we're going to create Libra. And then we're going to cherry pick a few people from the industry. And this is how I got transferred to the US.
And how did that eventually lead? Obviously, Libra was killed off, and there's a lot of information. I know some of the key people tweeted recently about like the full story of what actually happened. Like most people probably know, but like Libra was killed off largely by regulators and by the political regime in the U.S., and that led to you guys effectively like having nothing to do, right? Like the project got killed off. So how did that lead to the creation of Sui, Aptos, and like these other chains as well? And what is sort of the story behind that?
Yeah, this was a very interesting point in my life. Imagine Libra actually had some of the best people in the world. I think we were spending, I don't know if it's billions, but very close to these numbers. We had like indirectly about 1,000 people working on the project. And as you can imagine, it was a large organization, like a small startup inside a big funk company, like a social network. So Facebook tried to create individual teams internally. Imagine when I joined, I was surprised that there were not so many cryptographers at Facebook. I was shocked, like, how is it possible such a big network doesn't have so many? There was a small team, and then eventually they also used us, while Libra, it's not collapsing, but we knew, I mean, the resistance from regulators is so high, and there are so many things happening, like COVID and all of this stuff, and Facebook couldn't easily go and tell the story. I mean, we couldn't even fly. Right? And then eventually the project ended up into a situation where more blockchains emerged. At the same time, in my opinion, one of the issues is like Facebook tried to create a stable coin and at the same time a blockchain. Like two things trying to kill like two birds with one stone. This was very difficult to go into like a state where, okay, you're the social network, you have our social data, now you're going to have our economies and like our financials. Obviously, we managed to surpass this because the team was very, very strong. In my opinion, because I'm in the crypto space from the very beginning, I believe 10, 20 people were the top in the industry. Like out of the 30, 40, half of them used to work at Facebook. Now, Libra didn't manage to launch, and because of the technology being there, we were ready. Actually, I didn't take my paternity leave. I had my son back then, my second one, because every month we were launching. Okay, Kostas, you cannot go out because we're launching next month. And then, okay, I can wait. 12 months, I lost my paternity leave, essentially. And Libra decided, okay, we cannot do it, but the technology is there. And this is how, I believe, 4 spin-offs emerged after the Libra collapse. One of these companies, it's us, Sui. There was Aptos. There was another called Linera. And even the director of Facebook, who recently posted about why Libra collapsed, created Lightspark, another lightning network on top of the Bitcoin. Right. So 4 companies. I believe we're the strongest one because I can judge. I try to be honest here. If you see how many people from the research team, like great minds of Facebook, moved to Sui compared to all of the other places, you will realize that the brain substance is on Sui. And this is the reason I also left, because there is a risk, right? Imagine a European, small country, he goes to London, then to Facebook, you have like very generous salaries. Do you leave such a company and you go to create a startup? The only reason I did is because many brains actually followed us. That's the only reason.
We'll go back to some of the technical stuff, but I want to also address one like really cool thing about you, which is your middle name, right? Can you tell us a little bit about that and also, your son as well?
Kryptos, yes. My son's name is actually Kryptos. It's his first name. So Kryptos with a K. We're Greeks, and as you know, crypto in Greek means secret, like mystic, something. I managed to convince my wife because in the first permissioned network that I told you, my director, he promised me to give me one of the best bonuses in the company if I can convince my wife. We call our son Kryptos. And then Kryptos for a while, because that company had XRP, and XRP now, it's going up. He promised me to give me at this level, of a bonus. And my son was like richer than me for a while, than the whole family, because he actually received that. And then we said, look, it's a Greek name. Now it's the first name of my son. Let's put it as a family name, as a middle name for us.
Yeah. I would just feel a little uneasy about that. You remember when Do Kwon named his child Luna? Like, I think he's regretting that right now. But hopefully that doesn't happen for you.
I don't know. If I have an extra kid, probably I will try something else. Again, in the crypto space.
Can we go a little bit further, a little bit back to the technical aspects of Sui? Obviously, you guys are always compared to effectively 2 blockchains. It's always Aptos and Solana most of the time. And, people generally compare kind of the capabilities of scaling, And it's difficult, as you know, to compare, blockchain performance. Most people use like deceiving metrics. Some of them are, actually happening. Some of them are in simulations. How do you guys view yourselves in comparing to these two blockchains? And do you worry about them, or is it more like a friendly sort of thing? Because I know that with Aptos and you guys, there is some friendly competition, some firing from time to time.
There is a small friction. I can give you the story. What I believe, and the reason, at the very beginning, I had two options. I could go to Aptos even personally.
Oh, really?
And I had some discussions. And then I joined Sui. The reason I did this is because Sui, like Evan Zhang, who is the CEO of Mysten Labs, we decided to have individual teams for the multiple parts of a blockchain, which is not only performance, right? You have to have fast cryptography. And then Sui created the fastest crypto library in the Rust language. And then we say, look, we have an advantage now.
Yeah.
Like Solana is a Rust-based blockchain, but the fastest algorithms now, it's Sui's algorithms.
Yeah.
And then, this was one difference between Aptos, Solana, and Sui. If you have the primitives that are faster, even if you have the same consensus system, obviously you will be slightly faster. And then we had another team, which is my other co-founder, George Danezis. He's also Greek-British. And George was pretty much my idol when I was young. I said, okay, this guy is creating consensus. And then I didn't realize that Aptos, they had a few people who were not in top hierarchy at Facebook. And I said, okay, I will stay with George because George is creating algorithms that are battle tested. Some of them, he's an advisor to many companies in the past, compared to smaller, also smart people that went to Aptos. But I believe George was by far more mature and the innovation element was slightly higher.
Yeah.
So then we created the fastest blockchain at that time when we launched. And there is a race, right? Solana is mentioning, okay, we're going to have Fire Dancer, we're going to have scalability. Aptos is saying we're going to have another consensus scheme. And then all of the time, I believe we're a step above everybody else.
Right.
And in my opinion, this gives us also the edge that, okay, yes, Solana has a community. Aptos is behind us, but we're the only blockchain, I believe, that we're closing this gap.
Yep.
And there are some other innovations that are coming. One spoiler here, I believe that cryptography in general, which is expensive sometimes, we have zero knowledge proofs. Now we're even starting to have AI-inspired cryptography. Eventually, cryptography will cost zero to affecting the transactions per second. We found some ways that we can literally remove this from the equation. And I don't see it happening in the other blockchains at the moment.
And in terms of timelines that you have for this to get to the end state when you're really happy with what you have, how long do you think? What does the timeline look like for you? Are we talking about 2 years? Are we talking about a 10-year plan? I know Ethereum is always talking about a 5-year, and they're criticized for it quite often, right?
This is true, but I think at the moment we have an internal project. I can only mention the name, but I cannot go into the deep details. It's called Remora. Remora are the fishes that are attached to the sharks. If you see some fishes going to the shark, imagine the shark being the consensus system, and we have some other small fishes helping the shark actually to swim faster, to clean himself from all of the denial of service attacks and all of this. So Sui is at the moment investing a lot on changing even the way the messages are propagated through the internet, like the BGP protocol. We have a collaboration with a team in Switzerland, Sion, Adrian Perig, who is, I believe, the brain behind routing protocols on the blockchain. So you have to go and create innovations on the very short, the lower level possible. We do this. Remora is another thing where it's solving the problem I told you before. Cryptography will eventually cost zero. It will not affect consensus. And I have a feeling that many of these things some of them have been announced already. In 1 year, 1.5 years, you will probably see things that cannot be surpassed anymore.
Yeah. Couple of last questions. We're starting to run out of time, but one is, you guys obviously, you now have a token that's publicly trading. Was it easier before there was a token in terms of distractions and how much, do you get involved in that sort of stuff? Is it distracting that the valuation is so high?
No. Look, personally, because I'm a technical founder, I'm a cryptographer, right? Very deep cryptographer with some AI background. We're focusing on technology. Sui's motto is, we should be always the best on innovation. So the fact that there is a token actually helps many people to, partners coming to us, because they also want to follow, okay, if the token goes well, and if the technology is good, our investments into the Sui crypto will also go well. So in my opinion, it helped a lot to get extra decentralization to the work that we do. If there was not a token, you know what will happen? We will stick to our own team, and nobody else from the outside can contribute to this. But this is not decentralization anymore, right? So you need something. So eventually more people buy your vision, and they also try to create some new innovations. In my opinion, it's good to have eventually something that some other people can create on top of it.
Yeah.
Without a token, what would you do? You would
you-
have an algorithm?
You don't get distracted by like the token price just going so high, and like kind of lose sense of what actually matters.
Not us. There is a huge benefit if you're coming from Facebook and you know how it is to work for a big company. Your salaries are good. It's not that like you don't know where you're going to work afterwards. The token itself is obviously driving our like passion. We want to win against other blockchains, but it's not for, at least for me, and I believe for many other founders, it's not the goal. The goal for us is, if you ask my CEO, we want to be the Apple of Web3.
Right.
That's the stamp we want to get.
Last question: what do you want the audience to know about Sui? Like, what's something that you want to kind of tell the audience to look out for? What do you want them to be excited about?
Okay, so a few things that are coming, especially now with changing of administration on many countries and all of this stuff. I have a feeling that AI in particular will become like part of the everyday life. Smart wallets, if you're a startupper here, in my opinion, something that is missing, because you will see more attacks happening, like because people know now even the vast mass is going into the blockchain. They don't know how to maintain a password, right? So we will see AI on top of the smart wallets and all of this stuff. I believe someone has to do it even here in the audience. And the other thing, you will see parallelization that eventually blockchains will surpass even the Visa like speed on transactions.
Yeah.
So it will be the norm. I don't see how we can escape from this. So these are the two hints, in my opinion. If someone wants to invest now on something, these are the two things that I would personally, like if I had a startup, another startup, I would probably put some money as well.
Cool. Well, thank you so much for coming to Prague. Thank you
Thanks
so much
as well.
for this interview. Please give a round of applause to Kostas Chalkias.
Thank you, Larry.
Thank you so much. Thank you.
Very nice to meet you.
When and why token? The evolution of tokenomics. Please welcome moderator Ariane Murphy and her guests, Clay Robbins, Diana Biggs, and Michael Churchhouse.
Okay, good morning, everybody. I hope everyone is well today. We've got a very, very exciting panel this morning. As you would have seen, it's When and Why Token, the Evolution of Tokenomics. My name is Ariane Murphy, and I'm going to be moderating this panel today. So before I introduce the panelists, I wanted to frame the discussion. So tokenomics have become a cornerstone of this space and for blockchain projects, shaping adoption, investment, and long-term success. While 2024, as we know, hasn't been the best year for token launches, a very challenging year for projects, 2025 offers a much brighter outlook. This year has already started strong, highlighted by Hyperliquid's TGE last week, which stands out as being one of the most successful token launches in recent years. Whether the model is sustainable remains to be seen. Hopefully, we can dive into some of those questions today. In this discussion, we're going to dive into the critical elements of tokenomics, exploring design, timing, and valuable lessons from the past. So let me introduce our panelists. So we have Clay Robbins, founder of Coliseum. We have Diana Biggs, partner of 1KX. And we've got Michael Churchhouse, head of research at Split Capital. OK, so let's dive into the discussion. What would you say, and maybe Clay, since you're closest to me, I'll start with you. What would you say are the key considerations founders should take into account when they evaluate and decide whether they should launch a token and whether that token adds value to their projects?
Yeah, so I think you have to start with why, and all of that is specific to the product that you're building. Whether you are sitting at sort of the lower layer of the stack all the way up to the application layer, all of those are key components for consideration. I think there's also sort of the macro component of it in terms of are you ready to go public in reverse? Because as a founder, that has a lot of implications. Obviously the US election has changed sort of the regulatory landscape, hopefully, but it is worth noting that there is that specter of regulatory oversight that comes with it. And then internally as well, too, launching a token is a huge effort. It can lead to everything from resource consumption to employee distraction. They're incredibly powerful instruments, but I do think that they have the tendency to create distraction internally with price watching, but also in terms of how you incentivize employees, whether it's things like non-cash comp. That obviously can play a role in your ability to retain talent in a space where the opportunity cost of going out and doing your own thing as a talented builder is pretty high to remain internal. So those are some of sort of the big picture things that with Coliseum what we advise founders.
Very good point about distraction. The focus suddenly shifts to what that price action looks like. So projects do really need to evaluate whether it is the right time. Does it add value to the project? Diana, what's your take on this?
Yeah, well, I think that's a really interesting word in terms of of distraction, and I think it kind of comes down to also when we look at founders and really so for many founders, they're focused on, and technical founders and crypto founders are focused on their product. And I guess it could also be seen that maybe, okay, there's also this token that we have to launch, and is that a distraction, or can that take away? Whereas really, I think if you step back, the products that you're building when you're building open source, decentralized, essentially these are networks. That's why you're having the tokens are the tool for coordination, representing ownership and participation in the networks. So it's actually such a fundamental part that I think crypto founders can tend to over-focus on the product. Of course, that's essential and that's the heart, but when you're building a network, that token is also the lifeblood of that as well, and a product in and of itself that is going to take an enormous amount of work, preparation, management throughout, from pre-launch to the launch itself, and then post-launch. It's something that's live, it's out in the world. It's like being a very early stage project and then essentially becoming the equivalent of a live open market. Those are all really important considerations, but I think it's important to understand the essence of the network and the token's role in that, and to see that as the integral part of actually what's incentivizing people to join and also create that sustainable competitive advantage for a project. Because when we're building open source projects, and essentially crypto is an open space, this is one of the most fantastic things about it. Anyone can participate, anyone can reuse code. How do you create that sustainable participation and advantage to your own product? And a token is also a tool for that.
Absolutely. Michael, how do you view this? What are the key considerations to evaluate whether a project is ready?
Yeah, I think ultimately we trade markets, day in, day out in liquid markets. So for us, a lot of the focus is more short to medium term, and perhaps then the long-term vision for valuations. But I think I agree with all of these points. The other point is the token itself is a fantastic proxy for how well the company is doing in most cases. And of course, some projects don't need a token, but for us, I think it's a fantastic proxy for it. And ultimately, whether there's some kind of cash flow positive underlying business, it allows the token, the project founders, to raise capital in the market where perhaps the venture coffers are running dry, or some people have fully bootstrapped it themselves. So I think this is one of the most underrated kind of points of having a liquid token.
Yeah, I would have posited it should be bifurcated as, in terms of functionality, is the underlying product predicated on the token's value having some sort of monetary premium? And I would argue that L1s are basically the only place where that makes sense. Everything else is sort of open for debate. You can even talk about L2 tokens, where I would argue that those, especially in the EVM ecosystem, are basically the monetary premium for buying block space in the underlying L1, and that's kind of their only value. And so I think they're incredible tools for experimentation around user acquisition, but at the same time, in terms of the fundamental core of why you need a token, economic security is probably the only use case that has real staying power, at least today. Obviously, there will be more experiments in the future, but to date, that's the only one that's held water.
And so if we were to put ourselves now in the shoes of a founder that decides that they do want to, need to launch a token, how can they ensure alignment between token design and long-term project goals? Who would like to take that?
I can start. Long-term project goals, you want to be able to sustain the project for a long time, because startups, default is dead, right? And so obviously having something like this in a treasury at your disposal helps to give you optionality in terms of how you manage it and grow for the long term. But in terms of models for launching, look, I think we've lived through the previous cycle and ultimate drawdown. I think one of the key lessons learned there was raising too much money in private markets and allowing most of the alpha as it relates to sort of token price and token value accrual to be captured by private markets has been a net negative thing overall. Mm-hmm. And so I think one of the key lessons there, and this is true, right, is launching tokens is not terribly capital intensive, right? So why do you need to go and hoover up a bunch of capital prior to doing that when public markets are just sitting there? And in fact, centralized exchanges, businesses benefit from their users actually seeing that appreciation. And so on net, I would say that one of the most important considerations is how capital efficient can you be post sort of 2020 to 2022 cycle. And that's one of the key things that we instill in founders that we work with.
Yeah, I think there's an interesting balance between what you can plan and control for, and then the fact that this space is open and constantly evolving. So we've seen a lot of different metas over time, and we're continuing to see that. And there's always lessons learned from the ways that things have been done, and with sort of the attention span in the space as well. People are always looking for something new. So I think there is the importance of having the flexibility in there to be able to keep evolving in how your product itself and your community is growing, and how you want to incentivize those behaviors going forward. And then also, how are you capturing the attention and creating the flywheel within your network, and how that can continue to adapt as well. So, and then of course there's the backdrop to that of changing regulations, of the global nature, of people finding ways to gamify and to different attack vectors, and so really there's so much complexity to it, and to being prepared for that and putting that into your planning as much as you can. And then the space, the design space is so open with tokens. They can play so many different roles, and there's so many. I think the design space is really one where we haven't really seen what's possible, and we're constantly seeing new things happen, and then that changes previous assumptions, and we're still so early in the space. So that's what keeps it really exciting and interesting, but it's also hard to provide specific answers on anything, because everything is not only evolving, but very project dependent.
Absolutely. Changing constantly. This industry is all about change, and we're going to see massive change as we go into 2025, I believe, with obviously the US elections shaping regulation for the world, and so tokenomics will likely have an impact on the way we design tokenomics for projects. How would you say successful projects avoid the pitfalls of excessive speculation or underwhelming utility? Michael, maybe you can take that.
Yeah, I think one of the key problems here going into launch is ensuring you have a strong cap table of venture folk, or whether you bootstrap it individually, you have a strong team that are aligned with a long-term vision. I think a lot of the problems we're seeing with some of the tokens that have come to launch as of late is a lot of people shopping around, selling their SAFTs pre-market. Let's take a project like Scroll, for example. Their launch was a bit lackluster, and the narrative kind of turned quite negative pretty quickly. Sure, that may change, but I think that's really hampered the direction and excitement the team has for what they're building. I guess if you compare that to something like some of these ICO projects that raised a big war chest in 2017 to 2019, they're flourishing right now because they don't have the same overhead from venture and the team, and everyone is just kind of building in a free, open space without the need to worry about, panic raising capital.
Yeah, I mean, I think the biggest pitfall is misaligning the issuance, supply, and programmatic distribution of assets with the wrong rational economic actors in the system, right? So like if you look at the different components of who could prospectively hold a token, right? If your net flows are to speculation, that's probably a bad thing in the short term. And so I think with founders really focusing on, okay, within the particular system that you're building, whether it's an L1 piece of nowhere infrastructure, et cetera, it's sort of aligning yourself with the right rational economic actors in the system that create durability in terms of a holder base, and the primary people that those flows should be going to. I think failure mode is your asset is kind of treated like a pass-through to fiat or stablecoins, where you receive this incentive for doing some sort of work or engagement with a particular product, and then that just immediately gets sold into the base pair. And so that's probably the most important consideration coming in, because that's the biggest pitfall in terms of performance.
Yeah, I think that can't really be emphasized enough in terms of understanding who is behind you and what their intentions are, and if they are aligned for the long term. And then your ability to attract and hold that attention and capital. And I think there's definitely plenty of examples out there where we see that there's the misalignment, and it can happen unexpectedly and create like irreparable damage to a project. So it's really, really important to stay close to your backers and your community, and things happen on chain to the extent that you can also monitor that and try to understand how behaviors are versus what you might be being told. But I think that's really, really critical.
Yeah. I was going to say, you mentioned cap table, like having the right, because venture does play a role in all of this, but doing your diligence on sort of the behaviors of that venture firm in the ecosystem vis-a-vis how they manage tokens and manage projects, because some I think largely view it as the trade versus the investment, and you certainly want to align yourself long term with investors, because that's a much more stable base of capital relative to traders. No offense to traders, but
absolutely.
they play a role in the ecosystem.
Absolutely. I think we, and you guys can keep me honest, but I think at the beginning of the year we saw VCs get into projects and deals with no vesting periods, whereas now towards the tail end of 2024, that narrative is now shifted, and the focus is very much making sure that VCs are engaged for the long term, looking at 12-month vesting or more. How do you guys see that? And I'm thinking Hyperliquid, we can maybe touch on that. They don't have VCs, right? And that has been a huge narrative, and maybe a very exciting point for the community to get in. How do you feel about that play between sort of VCs getting in, the community, and those dynamics?
Well, I don't know if I've seen VCs getting in with no lockup. I think usually that is like pretty standard, and that you are like as a VC in your own time horizon as well. We're investing really for the long term and partnering with projects because we believe in their vision, which could be 5-10 years out. So I would push back on that as the perception of VCs for sure. A lot of projects, of course, I mean, for many people, it's simply not possible to build a project from scratch and put in the years of work often that's needed and building out a team. And I mean, yeah, creating a crypto network is an enormous amount of work, and the majority of people out there aren't independently wealthy and need funding for that. And VCs are the funders, and they're going to be providing that capital, especially in times when no one else will. Because that's our job, is to provide funding to new ideas and to spur that type of innovation. So playing a really critical role, absolutely. Obviously, crypto networks are about the community as well, so that's a really integral part. And I think we've been seeing some experimentation over time about what works there. Airdrops, you want these networks to be decentralized and be distributed, but we've seen, I mean, there's academic papers that show that I think like over 90% of airdrop sellers holders, yeah, sellers are sellers, and that's what happened. So I think I think it's really interesting that now we're coming back to where we came from. I mean, ICOs have been in crypto for 10 years, so kind of watching the different evolution of the space over time. ICOs also, I mean, I think maybe we're looking back rather romantically at them, but they were also not necessarily great for retail. They could be, but a lot of those projects never even came to fruition. So that was sort of really about like funding when there was with absolutely nothing. And that's why then we moved to airdrops, where it's like, okay, let's look at how we can find users to reward for participation in a network. But then, of course, with every change, people learn how to gamify. And that's something that will keep evolving, and what makes this recent example of hype really interesting. I don't know.
Yeah, I mean, I think we've seen this movie before. You mentioned ICOs. Like, I think the current trend around fair launches and issuance with meme coins. I mean, there's always been this sort of push and pull between sort of the value of venture capital in crypto. I think in the ICO era, it was like, yeah, we have permissionless capital formation, yada, yada. Like, VCs aren't going to have a place in that ecosystem, and lo and behold, that isn't true. I think the same is true today with sort of fair issuance with meme coin launches via Pump.Fun and others. And the problem with that, kind of getting back to rational economic actors, is like that on balance flows to speculators. I would also posit that airdrops kind of fit the bill in terms of flowing on net to speculators. And so, and I think too, like, you can't, like, if you, big picture, you sat down and you said, I'm going to create a business plan for like my token and my token supply, or my crypto native business, and you said, well, the business plan is predicated on community, and like community is such a squishy thing that you can't actually like build a business model around, and it sort of is one of these things that sort of just kind of emerges organically from the ether. Yes, you can forge some of it. It's great to have like the right branding and messaging, but you can't manufacture it, I think, is the upshot. And so building a business plan around community and fair launch is really difficult if your goal is to align sort of distribution of the asset with rational economic actors. That being said, like, if you are looking to basically just win the attention game, there's certainly the like YOLO version of the business plan where building community and hype is certainly plausible. But like, that is, I don't know, I live in a world of having at least some semblance of agency, and that really kind of punts the agency out the window as a founder.
Yeah, absolutely. Michael, do you have any particular views on Hyperliquid's TG and what worked there? Anything that people can take away?
Yeah, sure. Just to add on these prior points first, I think the big problem here is there's often a mismatch in investment duration for various people involved in the whole stack here. So like, I was chatting to Diana about this backstage, and like, for us, like, people on the cap table matter a lot. Some venture folk have a time horizon of like 10 years, and they don't sell at cliff. They're not selling during their vest. They back the founders and they back the project to be something big in the future. And versus others that can kind of take a bit of a dent to the project. Perhaps they're trying to shift a pretty sizable SAFT into the cliff, and no one's picking it up, and there's a lot of selling, and that kind of dwindles narrative expectations, the ability to raise, and perhaps also the ability to incentivize your employees. So the problem I really have here is founders are seeing this too, and we're seeing a lot of founders shift towards a different model, whether it be Kobe's Echo, for example, or Fjord, or I think there's another called Legion, like all of these different sort of crowdfunding projects. And I guess the root cause of the question is, like, would you rather have 1 or 2 venture names on board that have the majority of the token flow, or 200 angels that, like, kind of back your project? And I think that translates quite well to Hype, right? Like, Hyperliquid raised no venture money. I believe Jeff was given pretty significant opportunities to do so, but he turned them all down. And ultimately, the community got given an outsized portion of the token flow, being like 31% day one.
Yep.
And look, the tokens only traded up, and we bought
And
a
no one
bunch of...
sold, or very few people sold, out of that 31%. Yeah.
Exactly. And I mean, it's big, but whoever wanted to sell, sold down, and it gave the opportunity for funds like us to come in and step up and buy a bunch of the token. And we were buying day one, we were buying day two, and look, it's for me, like, I think what happens is that you really struggle to kind of converge on a viewpoint of all these different investment durations. And Hyperliquid, I think, in the short term has resolved that. I guess the question for you guys as well is, like, are you pushing projects to go to Binance and give a significant % of your token supply? Giving that away is pretty painful for a project. Yeah, I think that narrative shifts over the next year.
Yeah, I mean, I think paying the centralized, like, exchange toll booth fee or whatever is becoming less and less valuable, and in fact, I think it's an anti-signal in many cases. And so, and there's so much optionality today as well too. I mean, you mentioned Echo and Legion. There's fair launches. There's things like LFGE on Solana through Jupiter, and so there's never been more avenues and channels to drive launch and distribution for tokens. And so I think, as a founder, you should do right by your company and eventually your future token holders by evaluating all of those options and not necessarily just getting wrapped into sort of the behavior patterns that dominated sort of the 2017 through 21 era, is sort of my take on it.
Yeah, I think it's going to be really interesting to watch over the next year how that balance of power starts to shift. I mean, we already see it happening. Even last year, I think centralized exchanges had about 90% of volumes, and that's being continually eroded over time. Previously, it was certainly quite difficult if you launched initially on a DEX to then get a centralized exchange listing. The centralized exchanges are predominantly interested in primary listings, and yeah, it could almost be a blocker. And then on the DEXs, it would be very hard to get the types of volumes that those centralized exchanges require in order to fit into their business case and interest. Obviously, that's very different with Memecoins, so they've already started to kind of shift that balance, and yeah, it's continuing to evolve. And I think that only makes sense for a space where our focus is on disintermediation and open platforms and networks.
Yeah, it has been fun to watch sort of with the meme coin issuance trend, how like centralized exchanges sort of been caught on their back foot, right, where they've been reactive. But, the unfortunate reality is they win either way, just in terms of, they have the lion's share of volume and users. And in fact, like, I actually think meme coins in particular have been a saving grace for centralized exchanges because it's the only opportunity that they've had in recent memory to do primary listings that don't have this huge FDV overhang, where their users now actually can share in the upside, which is how you retain them versus them being sort of the exit liquidity for private markets. So centralized exchanges will win either way, and I think that will only continue with sort of the regulatory capture that's inevitable in places like the US.
Absolutely. I mean, Coinbase listed Mudeng and another meme coin yesterday or the day before. I don't know why, I never thought Coinbase would be listing meme coins, but maybe that was just my take. But it's happening. Looking at 2025, people are wondering what kind of models will succeed. Obviously, it's not a black and white answer, but do you have any takes? Are you forecasting something will work? We're talking about maybe ICOs making a comeback. What kind of models do you expect will be successful?
I mean, I think like it'd be funny if we got through this panel and didn't say the letters AI. Like, I think that one of the interesting things that we've been seeing, at least in my universe, is experimentation around token issuance, management, et cetera, through bots and these different types of LLM-based implementations. And so I think that in the way that LLMs can be infinitely derivative, so too will issuance models. And so that, to me, heading into next year is one of the trends that I think we'll start to see a lot of, which I think will be extremely diffuse in terms of the types of implementations that we'll see, but then there will be sort of this reconvergence around, hey, this is sort of the new thing, which is not terribly prescriptive, but I'm excited for the weirdness that's about to happen.
Yeah, I definitely agree with that. What could be more fair when even the team doesn't know because it's an AI that's launching the token when they decide they want to. And then I also think that definitely we'll see some, like the next evolution of ICOs or public sales where people are really looking for ways to allow the community and ecosystem more broadly to participate.
Any takes, Michael?
Yeah, I think, like, going back to what you're saying, ultimately give people what they want. Like, there's a reason Coinbase listed Mudeng, and that's because there's a lot of interest, a lot of people are holding the token, a lot of people are trading the token. And so I think next year we see ICOs come back. I think we see shorter vesting periods. I think we see founders spending more time due diligencing venture folk that are coming onto their cap table. And I think ultimately people probably get what they want because the exchanges actually listen to their community over time. It takes a while, but they listen. And I think that completely changes how the whole evolution of the token comes to the market.
Okay, well, we've come to the end of the panel, and I'm going to end on give people what they want as the quote for tokens, as the quote of the panel. So appreciate it. Thank you so much, guys. That was super insightful. Appreciate it.
Thank you.
Thank you.
Meme coins, financial nihilism, or the future of culture. Lawrence Litwin will be moderating our next panel. Please welcome him and his guests, Mike Dudas, Genia Mikolchenko, Christopher Newhouse, and Nikolai Sondergaard.
Oh, should we sit the other way? Nope. All right, we're gonna... No, I'm still here. Yeah. Oh, we know who we are. All right, here we go. Hello, Geneva. Wait, no, Prague. Okay. Sorry. How you all doing? Bitcoin 100K, the first meme coin allegedly. So... Here to discuss some of the meme. By the way, I'm Lawrence Lewitton. I am managing editor for North America at The Block. And we're here, of course, to discuss meme coins, which have emerged as a significant force in the cryptocurrency market, captivating both investors and the general public. Their rise prompts critical questions. Are they merely a distraction, embodying financial nihilism? Or do they represent a transformative shift in how culture and finance intersect? So luckily, we have a great panel for us today. First of all, we are joined by Mike Dudas. He's the founder and managing partner of Sixth Man Ventures, and early-stage crypto venture capital firms investing in Web3 applications and infrastructure. Mike is also co-founder of LinksDAO, the first community NFT membership-enabled golf club. And you are all here today because he is the founder of The Block. It came out of his head like Athena from Zeus.
Yes.
And I remember the days when he pitched it to me back in the ancient times on his laptop, and
He did not join.
I did not
he
join
wrote
at the
a
time.
number of articles, hit pieces, right, about
I
me.
wouldn't say they were hit pieces, but you do have a fun Twitter presence
Yes.
if you follow. But you know, we'll talk about the Pete Rizzo coin later.
All right.
So anyway, yeah. So thank Mike for this. Also, we have with us Genia Michalchenko. Genia is the business development lead at Duro Labs, where he drives innovative solutions for Pyth network, which is not it's not pronounced the way Mike Tyson would say that. He previously was the vice president of business development at BitMEX and a co-founder of Sig1 Capital. We have Christopher Newhouse. He is Director of Research and Business Development at Cumberland Labs, a Web3 venture studio and incubator backed by DRW and Cumberland. And his career has evolved from options trading and research to mentoring and advising and building with the next generation of blockchain innovators. He's advised projects like Pair Protocol, Sphinx Protocol, and Convergence RFQ. And he's mentored at institutions such as Cornell Blockchain and the H-bomb itself, Harvard Blockchain. And finally, we have Nikolai Sondergaard. He is research analyst at Nansen, recently joined. He, as you might know, Nansen is a blockchain analytics platform. Nikolai focuses on GameFi and decentralized physical infrastructure networks, DPIN, as the kids call it, analyzing how gaming and decentralized networks are integrating with blockchain technology. He's interested in how these innovations can enhance both industries. So together, of course, they bring a great wealth of knowledge, diverse perspectives to our discussion. So let us begin. Let's ask this question: how sustainable is this market when almost every trade, and this was a question somebody brought up to me last night over dinner, how is it possible that this market can be sustainable when so many trades, the vast majority, 90%, end in losses? Let's start, Chris, why don't we start with you? Because I know you have a lot to say about this. Why shouldn't I invest in the Haktua meme coin?
Yeah. I mean, from my perspective, so I think that this is definitely going to be a longer lasting narrative. We were kind of talking about it in the backstage a little bit as well. Pretty much every time, like we were discussing, 90% of traders lose. There was also some sort of data out here on Twitter. It was the expected value of $1 on pump.fun. And it was, kind of a roundabout way to get to it, back of the napkin math. But as you kind of looked at it, the expected value of the dollar on pump.fun is 8 cents. So everyone kind of goes in knowing that they're going to lose, but one of the biggest things that I think is super important about this is the proliferation of the wins on social media. As soon as you never see 999 people posting their 99% losses, you see the one guy post his 10,000% gains, and immediately everyone is back into the action. You can kind of see that with pretty much a lot of the meme coins this cycle recently. So from my perspective, just thinking about it from the lottery perspective, thinking about it from that kind of perspective and gambling, that's kind of why I think it's probably not going to go away.
So these are basically scratch tickets. I mean, we're talking about basically, why shouldn't I just go to my local bodega? Bodega, by the way, are convenience stores for those of you who aren't from New York. Dépanneurs for you Canadians. Why wouldn't I just go to a convenience store, get a lottery ticket, scratch? Why am I investing in meme coins? Actually, I want to ask that question to Genia.
Sure. So I think there's a few different important elements that kind of distinguish it between the traditional scratch tickets and Powerball lotteries. You have this online cult element, right? You have interaction with crypto, and there's just this like tokenized fun, right, element. So this like holy trinity, I think, really creates this. It creates this like wave of momentum that really tends to push faster and proliferates online a lot more aggressively than, hey, look at my scratch ticket, I won 10K, right? It's a lot more exciting to see people, like you said, post screenshots of their phantom wallets where they're up like 50x on a coin and they invested 1 Sol, and then that gets shared around. So there's this like social contagion element. I think what people that don't pay attention to the space tend to write off is this element of fun, even though most people lose money, 92 cents on the dollar. The fun element is still kind of the underlying piece of this, and I think that can't be understated.
So speaking of pumping and fun, Solana's Pump.Fun, arguably one of the most innovative applications. It reached $100 million in revenue in just 217 days. But 10,000 meme coins launch per day. So what exactly, we look at the model here of Pump.Fun, and all these coins being dumped on the market all at once. Mike, is that actually a problem? Is Pump.Fun hurting the meme coin market, or is it still this excitement of seeing everyone show their tendies on X and more exciting than drinking a scotch while playing the craps table in AC as a degenerate?
So I'd love to just kind of level set a little bit back. First of all, memes have existed, since the beginning of man, right? Scratched on cave walls, since the beginning of the internet, in terms of Reddit as a home for memes, and basically memes are like a universal language. I find myself, I'm a social media addict across every platform, and I'm getting more and more meme focused even in my non-financial social interactions. My kids are sharing emojis. They'll see something and say they're 10 and 7 years old. They'll see something on my computer and be like, oh, that's a cool meme. So it's an increasing language. I just want to start there. So what we're doing in crypto now is we're attaching money, to memes and social interactions, not just in the meme coin segment. We've done it with NFTs. We do it with serious coins. I mean, we've seen the whole class of XRP and sort of last cycle's serious coins are now effectively trading like memes. Many people say Bitcoin is the best money meme in the world. But anyway, things often start out as memes, then turn into communities and cults and become big. So what we've been talking about for the first 10 minutes is mostly this like casino and this really rapidly moving thing, and your numbers are actually outdated. Pump's launching 50,000 coins a day, and they've done 285 million in revenue since March 1st. So, it's the fastest growing startup in the history of technology from a revenue perspective. It was founded this year. So there's clearly something here. Last week, Pump basically got to the point where it literally turned into almost like crack for the attention economy. They started a live stream product and paired it with token launches, and you were marrying social and streaming, and the most extreme things started happening. So insane product market fit to the point where they did $14 million in revenue in one day. And then obviously, so we're investors in Pump, and we said like, guys, you gotta shut this off. So they did shut off the live stream. The point of all this, though, is it's clear we were talking about fun. People absolutely love and are addicted, and we know about social media addiction. Okay, so they have hit on the mother of all products. They're approaching it in the way internet video started out, right? It was grainy and slow and hard to distribute because we didn't have the bandwidth. And now I wouldn't say anybody says YouTube's bad because there's tens of millions of videos uploaded daily or more. The best ones rise to the top, and the best personalities rise to the top. That's what you see happening with meme coins. Sure, most coins are going to go to zero. Many people are going to lose money. But honestly, only the most degen people are even interacting at that stage. What you're seeing now is the exchanges like Coinbase and Binance are listing meme coins fairly early in their life cycle. I actually think it's starting to move to where you're going to see retail and general, just people out there in the audience discover something. And I actually don't think we're going to see a class where 90% plus of people are losing money. And frankly, if you'd held Doge from 2014 through ups and downs, you'd made money. These things do have duration, the top ones. And if you look on any given day, the top 30 coins in terms of trading, it usually has 10 or 12 meme coins on it. So people love these products. I think they're good. My motto in investing, we invest across the entire application suite from DeFi to social trading, business in the front, party in the back. You need a complete economy and ecosystem of things to do, or you can't disrupt what's happening in the traditional finance and technology world.
By the way, anybody who saw those Pump.Fun videos and you need to see a counselor, reach out after me afterwards. I'll provide referrals. Yeah, definitely something. We're all scarred from that. Nikolai, I kind of want to ask this question along the lines here because we have a change in management at the SEC about to happen. We have a change in a regulation in the largest market in the world, GDP-wise, where we might have more utility go into crypto. Do you think that will ultimately hurt the meme coin economy as people find, as capital flows into more, I know you guys are going to scream at me, but let's say more useful tokens and cryptocurrencies. Do you think that will suck the money out of the meme coin excitement now that Gary Gensler is going to be packing his bags and going off to MIT to, fail students?
I mean, first of all, I don't think that the meme coin mania, as we're seeing it now, I don't think it's a sustainable thing long term. I think it's probably going to be ups and downs, likely with funny memes or specific things happening in the world as a whole. So I do think money will be leaving meme coins and likely also going into these utility tokens. As for utility in memes, I don't necessarily think that it's going to put a cap actually on the memes themselves, because in the end, it is inherently speculative still. And I also don't think that institutions are going to start, doing Excel sheets and saying, okay, even if it's actually making money by, posting on Twitter, for example, like an AI bot. I don't necessarily think that's going to cap it. I think it's more going to be the additional factor to what is already a popular meme. And an argument for why people would actually put their money into it, because you already talk to your friends, hey, this is pretty funny, but it's actually also making money now. So I think that's where we're going, as opposed to just saying, okay, now it's making money, so we can't actually say it's going to go to $1 billion anymore.
So we'll kind of go down the road here. Chris, what do you think?
Yeah, I mean, from my perspective as well, just thinking about going back to the NFT cycle, whenever people were kind of using NFTs and saying, hey, there's utility here. I mean, a lot of the utility that I saw from NFTs was exclusivity and access to events and things like that. Not really any sort of kind of excessive revenue generating activities or anything like that. Even whenever you think about NFT lending markets or NFT marketplaces in general, it really seemed like, from my perspective, there wasn't really too much active utility going on for a lot of the popular NFTs in terms of like the profile picture stuff. Behind the scenes, there are obviously use cases for them, but also from my perspective in the meme coin market, I think that adding utility to memes kind of just, I agree with you as well, like being able to add utility to memes and be able to generate revenue off the back of those as well, I think that's going to be an additional factor that you can't really write off in terms of just like, hey, this thing's generating money now and it's also funny. I completely agree that I think that'll be a case going forward.
The Dogification of meme coins. Yeah. So
I'll actually take the other side of that. I think utility is turbo bearish. Because if you look at how people treat these things, and if you look at the intended target audience, people are not like doing discounted cash flow models on like, where is this going in 6 months from now or whatever. They're just buying a picture of a hippo or a frog or, or insert, animal du jour, right? So I think in general, it's actually quite irrelevant for the intended target market. But there's going to be some of these edge cases with Bonk, for example. So Bonk is actually party in the front, business in the back. So if you look at like the Bonk ecosystem, they have BonkBot, for example. They have like staking and lending protocols and a bunch of other stuff that's actually kind of it's used in the background to proliferate the concept and the idea of the meme. So I think you're going to get a few of those, but in general, if we're looking at like the top 20, top 50 memes that people are trading and the ones that like rise to the top from Pump Fund and other platforms, I actually don't think utility is relevant at all. And the average degen trader is not looking at it from that perspective. So yeah.
Then I would say, I'm not sure I'm going to answer the question, but so basically my argument, when we talk to founders, we've backed more than 100 companies early stage, we basically say, like I'll ask folks, when you launch your token, is it going to trade on memetic value or is it going to trade, on sort of fundamental value? The answer I like to hear is like, there's going to be a lot of memetic value in the beginning. We want something that people can kind of quickly grok and say, hey, I want exposure to this, and then use that momentum over a period of many years to build out utility. I think a good example of that would be something like Chainlink, where they had the Link Marines, and I think a lot of people were skeptical about it, a cycle or two ago. But now you see it's trading above $25 billion value, which it was even a few years back when it wasn't doing, it didn't have the sort of breadth of usefulness across ecosystems that it does today. So my point is, like, if you're a Hive mapper, like, honestly, they should just call the token maps. Like Helium, they call it mobile now, one of the tokens. People don't want to have to, put a spreadsheet out, read your white paper, figure out your equations. They can't. Even, like, honestly, I hate to say it, but like fund managers, a lot of them get twisted. So, like, even quote-unquote utility coins tend to, like, the reason Ondo's trading above 10 billion is because, like, in Korea, it's like, one Ondo's a condo. It's like a meme that people are following and bidding this to irrational levels, but that then gives them a currency that can help them credibly beat their competitors to build a business with BlackRock and others. So again, memes are important no matter where you are. Bitcoin has memed itself into a globally relevant money over 15 plus years. And so I think there's a lot of instructive things as we see different forms of memes emerging now. Now we're at the panel's title, is this financial nihilism? I do think right now, and the things that aren't sustainable are these 50,000 coins that go to zero launching per day. I think you're going to see folks, a lot of those will just die on pump.fun, won't make it out into the real world. We see, anyway, I can ramble on.
To jail is going to be a utility token, though, at some point. What goes into making a meme coin popular? I mean, we're talking here about, we've been talking about what happens, but why?
Yeah.
And
Can I start with one? Yeah.
Yeah, start with one.
So I'll start with one. There's many different, so there's no playbook. Okay, just like there's no one playbook. There are different types of memes. So somebody mentioned Bonk. I helped launch Bonk, right? So there are 21 of us. And so basically the key here is you have to do a couple things right, typically. You have to launch for a reason. Hey, sometimes it's a fleeting moment or meme like Peanut, and it's a cultural moment. But the ones that are going to have long durational value, you really you want to do a couple things. What I tell people who are launching memes today, one of the most important things, certainly it's the meme and the brand, but it's equally it's the distribution. So so with Bonk, 50% of the supply was dropped to the entire Solana ecosystem. So developers, NFT holders, DeFi users, and people who had used applications. The folks who were really deep in it, basically went out over the first months after launch and sort of integrated Bonk into over 100 applications. And then, 9 months later, 12 months later, the Bonk core contributors started to develop products and an ecosystem. That's one way of going to market. It was launched at the bottom of the bear when nobody was using the chain. Solana was between $8 and $10, and everybody said it was dead. And this group of a few dozen people said, hell no, it's not dead. Let's get some on-chain activity. And the beauty of it, just as the beauty of Pump today, is that memes done well, people love them, the trading volume's massive, and it battle tests everything else in the ecosystem such that when the serious stuff comes along, it's really been tried and tested. I'd love for somebody else can talk maybe about cult meme coins and how those work.
Chris, you've been shaking your head furiously. I'm not going to keep you from saying it. Go in.
I've got a great anecdote for this, especially, so there are 2 coins. There's one that I actually caught and traded, and then there's one where I continued to see it pop up. I caught it, but I wasn't thinking, hey, let me go check the Solana chain and see if someone's already built a meme coin. And these are literally 2 coins that I found scrolling on TikTok, and I was like, oh wait, Mooding, this is pretty cute, this is pretty funny. Let me send this to my wife. And then I sent it to her maybe 5 or 6 times because it was relevant in every scenario. And I'm like, oh, wow, okay, I'm sending it to her. And now there's these different communities as well that are starting to post Mooding as well. This is super interesting. I completely missed out on the coin. But just looking at TikTok, seeing it be able to proliferate amongst many different communities, reach many different communities, that kind of distribution, I thought that was super interesting and powerful. So I kept that in the back of my mind, and the one that I caught, there was like a 70x, was Chill Guy on TikTok. Like I said, I was just scrolling on TikTok, and I was like, oh wait, this is kind of funny. Like, let me send it to my wife, let me send it to my friends, and I started realizing, like in the back of my head, oh, this is exactly what I was doing before. I'm sending it to many different people with many different applications. A lot of people are receptive to this. They've seen it before. NFL started posting it. Walmart started posting it. I'm like, okay. But that was whenever I was in the mindset of, okay, I need to go check Solana and see if it has a coin. And that's the one that I got into early. So in terms of like being able to find mimetic value in a lot of these things, one of the things I like to think about is how many different communities can this reach? If it goes viral on TikTok, if it goes to Twitter, if it goes to anyone else, how relatable is this meme going to be? There was another anecdote. I was in Telegram, like, just talking to people about meme coins. And maybe there's also like a generational gap as well, just like I said, in terms of TikTok, Instagram Reels, like nobody, actually kind of looks at that except for Gen Z, honestly. So you go to that, and I'm talking to someone, and he's like, oh, dude, this is going to be the next Mooding. It's going to be the next Chill Guy. And I'm looking at it, and I'm like, there's no way that that is going to happen. There's no way that it's going to reach as many different communities as those other 2 coins did. Like, you're kind of looking at it from the speculative investment of, oh, this looks really fun, like it looks like it gets 1000x. But that looks like, to be able to quantify that is very difficult and very rare. But yeah, it's kind of a couple of anecdotes there.
Yeah, to be sure, I was the one sending those. I'm trying to pump my bags, actually. Jenny?
I'll hit this one as well. So I think the general theme that we're all hitting on here is it needs to have this like mimetic drift and mass appeal, right? So there's a few ways that this happens. One is, an animal is cute. You agree, you agree, you agree, I agree, right? We all agree. You do the wife test, you do the group chat test, and you do that like 10 times, sure, it works. That's like one version of it. The second version is the meme has a versatile like use case. So like the Chill Guy example is great because it's like you can take that concept and apply it to, oh, I'm just like a degen trader who loses all his money, I'm just a chill guy. Or like, I'm 100xing my portfolio, I'm a chill guy. Or like, put it into different scenarios, and it works, and it has this like stickiness to it, right? So I think, most of the coins that we talk about that like fail in spectacular fashion, there are just ones that are like way too niche. It's like, it's far too specific, or it's like a really terrible copycat or a derivative of something else that was successful and they're trying to ride its coattails. So I think the big thing and the overarching theme is for people that are trying to capture an idea or a concept, you have to think about like in terms of like, is there mass appeal? Is this versatile? Can I use it in this scenario or in this sticker or in this pack or or in this Twitter conversation? And if it doesn't have those elements, frankly, like the chances of success are probably quite low.
Nikolai, I don't want to leave you out of this, so if you have anything to add, go right.
I mean, I fully agree with Genia and everyone else for that matter, that for something to be popular, especially long-term, I think what you're saying, that it has to be able to be altered. In the end, a meme is something which can be shared, can be altered, can be told, whether visually or auditorily. And I think that's what really matters in the end, because a meme coin is in the end is just going to be the financial instrument of the popular thing, the viral thing. So that's why you just need to look at, okay, what is viral, what is funny, And is it actually funny long term? Can you just change it into a trader losing money, but I'm just a chill guy?
So, the name Solana came up just before, and I think when we think about the gold rush of the 1840s, which was, my time, the people who made money, Levi Strauss and the guy who sold shovels made all the money. So now we're looking at basically Solana that we're talking about as kind of like being at the forefront of the meme coin infrastructure, but do we have any possible rivals coming up? Are we going to see even on Ethereum, Ton and Tron or Base? Where are we going? Where's the next step, if possible, to, let's say, I don't want to say dethroning Solana in this ecosystem, but making it as a, maybe the next investment on the back end? We'll start off with Nikolai. What do you see happening?
I mean, first of all, I think it still has to be accessible. I think that's been part of the success of Solana, because it was easily accessible, especially through like the Phantom wallet, And speaking of which, they're raking in money of all these people coming in using Phantom to trade memes. And I think also in terms of then like developments that will come in and kind of change, we have then, okay, we can now also do a base on Phantom. Maybe it was something they already thought about before, but I think that definitely there's like this push from meme coins to actually get it out quicker, because in the end there's a market to capture in terms of like all the virtuals that are popping up, which is essentially like its own segment of, memes.
So Chris?
Yeah, sure. I mean, from my perspective as well, I think you should probably think about why did meme coins on Solana really take off in the past, 6 to 9 months, all the pump fund ones. And it's pretty much, from my perspective, there's multiple reasons. So first of all, from my perspective, is Solana had a massive wealth effect happen. You had all these different airdrops, right? You had kind of Jito and Jupiter. You had Solana going up from like 8 to 10x back whenever the meme coin craze kind of started. You had the tooling, you had the infrastructure built, you had everything on Solana combined with this massive wealth effect that had this thing where people got free money. Like they had their airdrops, they had everything on Solana already. They were already ready to use the wallets. They were already ready to deploy capital. And what's the one thing you can do if you have some spare money? Instead of investing in ETFs and stuff, you could throw it on the lottery. And from my perspective, like being able to see chains that potentially have this wealth effect coming, whether it's a layer 2 or a layer 1 or something like that. So I think that, Ton has this very interesting thing as well with the Memelandia. So they've got like good marketing. They have things like that as well. I think that Base is probably going to have like an interesting area of competition, just because I think that's where a lot of the next wealth effect could be, specifically because all of the AI stuff is being built on Base right now, and it's a pretty hot narrative. There's obviously like AI16Z and stuff being built on Solana as well, but just thinking about meme coins in terms of market caps, I think the Base, if you look at, CoinGecko or whatever, Solana meme coins around 20 million, Base 3.3, so it's around 6x Solana than Base. But yeah, I think in terms of all these different chains, I think the one that might be able to compete with Solana would probably be Base.
Jenny, you agree?
Yeah, I'll take the Solana Maxi approach, and I think there's a few reasons why this will continue to proliferate on Solana. Number, like we've all, you guys have all touched on all the relevant points, right? Low barrier to entry, it's normie friendly, lots of great infrastructure. I think one thing that I'll underscore that other ecosystems don't do as well is, for example, on Solana, a lot of the coins that launch, a lot of the popular ones, at Pyth, we launch price feeds for these coins, and so then those coins can then be used in perp dexes and borrowed lending protocols, right? So we unlock all sorts of use cases with the price feeds that we launch that you don't necessarily get in other ecosystems. So I think that's a big kind of forcing function for the proliferation of these memes. But ultimately, there's this, like you said, there's a wealth effect, but not just from previous airdrops. There's a wealth effect from successful companies, successful meme coin launch pads, and the whole ecosystem that surrounds it. So like all that money is just going to get recycled back. Like no one's going to want the party to stop. So we're going to keep putting it back in and trying to push it through all these different avenues. And like think about like how much money like Radium and Jupiter, right, and Drift and all these, and Jito, right, all these infrastructure infrastructure players are making from the ecosystem. It's like everyone's just printing millions a day. Like no one wants the party to stop. So I think from that perspective, everyone's going to do their best to, to kind of to keep it going. So that's on the Solana side. I am actually quite a big fan of Base, and shout out to Jesse Pollock and the team there. I think they've done a very good job. But it's just like the user experience for normies, like bridging to Base, and going through that whole process. It's not as seamless as you have with Solana, and it's not a knock. It doesn't mean that they're not going to catch up or that there won't be kind of fixes in the future. But the amount of attention, liquidity, and like ease of use, it's very clear, where that's at.
Mike, you have a lot of opinions on this stuff, so
Yeah. So just Solana is clearly going to be the dominant meme coin and sort of speculative and fun chain. It's always had the best user experience, even last cycle. The best applications, the best Phantom, Magic Eden, Stepin, number of crypto games like Photo Finish, a horse racing game. Like it's just so basically the developers are very focused on building fun applications, exciting and interesting applications, and making things easy to use. So Solana's been easier to use since 2021. I do think that with Base as an L2 and a few of the other L2s, the experience is getting closer, but it's certainly not at par. Base just doesn't have enough tokens yet, not only meme coin tokens, but like you need to have a robust set of tokens. Like the thing we're doing here is creating tokens, trading them, using them, sharing them. But that's what this industry is for. I use the example of like Ripple is a financial services blockchain and company. Its value is $270 billion because they have a token. Circle is a real business, broadly similar area, and their value is $5 billion. They don't have a token. It's a very simple example and not perfectly intellectually honest, but the point is, I don't think the Base ecosystem has enough. I think Coinbase realizes that, so they're now trying to say, hey, bridge your token over to Base and we'll list it. But ultimately, like that's the game. So I do think Base will be the other chain. I know Sui's making a push, but they're still a little bit out there on an island. And like I said, they don't have enough like legitimate utility tokens and applications on Sui to support a meme coin economy yet. You need other things to do.
So speaking of, actually, we're talking now about that end, but also secondary markets. So you have opinion on secondary markets as well about how it affects ultimately.
Yeah, I want to make sure I understand what you mean by secondary markets.
Well, yeah. So as we were talking about basically Slurf and things like that, and what its influence on the life cycle is of meme coins. Is there any effect that they have?
Well, so if we're talking about, so basically these things are like meme coins are like this big psychological game, and so the reason central exchange listings for tokens are so important is because we were actually talking about this backstage. It's like there's this guy Murad who's like meme coin Jesus and has like a list of like 10 meme coins. He's like, everybody buy, and we're gonna be a cult, and we're like new religions, and we're gonna, he's a smart guy, by the way. He's like a proselytizer. Like you might catch him at one of those Texas churches on the weekend, just speaking to the congregation. But what he's done is he's financialized that. So the challenge is the guy can't sell. The minute he sells, this thing's going, all his tokens are going down. So I think when you talk about secondary markets, or like how do you like exit these positions in a psychological game of like musical chairs? What happens is there's these centralized exchange listings, and you want to kind of see people, like these people are going to have to move their tokens out of public wallets and find OTC ways to sell. It's really challenging to realize value when you have size in a meme coin. And there's also, and there's not as significant liquidity in a lot of these early meme coins. So, what you're seeing is market makers step in, OTC desks step in, and a lot of people who will not transparently absorb, sell pressure outside of the sort of on-chain economy, so that these tokens don't crash.
And Chris, I kind of want to. You're handling it from the trading perspective, and you kind of touched on this earlier. About how ultimately, as a professional firm, you look at meme coins, and the difference that you might take with even NFT. So, can you get into a little bit on that? And the people out here want to know what you guys are thinking maybe try to outthink you if that's possible?
Yeah. I mean, from my perspective, you really need to basket it into different market caps. The stuff below 5 million, the 1 million stuff, like that is completely dominated by snipers, that is completely dominated by retail. Like if you think about it, Mike touched on it as well, liquidity in these meme coins is not enough for a sizable institution to put on a real position in these. There's no desk at any institution, I feel like, that just is, hey, let's just, run 2 SOL and try to 1000x 2 SOL. From the institutional perspective, it really needs to have some sort of at least some sort of listing on like a central limit order book DEX, either deep liquid, like very, very deep liquidity on AMMs, or a CFI exchange listing. So if you want to think about it from the institutional perspective, a lot of the stuff that institutions are going to be trading is going to be, probably the big majors like Doge, Pepe, things like that. Another thing that I want to touch on as well, because I keep seeing it on Twitter, is these people who have tagged these institutional wallets and they say, hey, look, this institution is accumulating. Well, these institutions are also in the business of running a client-facing business. They may be taking that order to execute for a client. It doesn't mean that they are necessarily like accumulating a bag or a position. Like these tweets get like, hundreds, thousands of, hey, look, this large trading institution is accumulating this meme coin, we should all buy. Well, it could have been an OTC client who sent it over to them so they could run a TWAP execution and get out of it on a central limit order book. So that's how I think about it from the institutional perspective.
And you, Genia, because you also were at one of a fairly large exchange, BitMEX. So how would an exchange, for instance, view all this?
I mean, listen, the reality is the exchanges love this stuff. Think about it from their perspective. Like they're trying to do 2 things. One, onboard new users all the time, even if you're a Binance or Coinbase. Like one of your KPIs is what's our user count, right? And then the second thing is just earn fees from trading, right? So the common thing that we've seen this cycle is that a lot of these exchanges, especially the ones that have both derivatives and spot tradings, they'll do the perpetual futures first, right? So they can make money off the volatility, and then they'll list the spot token afterwards. So listen, they love this stuff. Like, why wouldn't you, right? And Xiao from Alliance DAO brought up this really good point where he was discussing the politics of exchange listings, right? Because it doesn't seem like there's a rhyme or reason to it, especially recently. And his point was the exchanges should be listing sooner, not when it's at $1 billion or when it's at 500 million. Like list it soon so that your customers can go and make money. They can make a 2, 3, 4, 5, 10x, generate fees, and then recycle that money back into the exchange, right? So I think they, just to sum it up, I think they love it. I think they should be listing more of it. Obviously, they all have their own kind of process to filter it out, but it's great for business.
And Nikolai, I mean, what factors do you think are going in here in whether or not people should take on a particular meme coin product?
I mean, for sure, we already talked about popularity. Can it be altered? I think that's, anyway, what is most important long term. If it's short term, anyway, I just want to look at stickiness of who is already in it. What is the distribution? I do like, is it 30%, top holders, then I probably want to keep my hands off of it. Likewise also, I mean, I'm in the business of on-chain analytics, so of course we also look at large wallets accumulating. Are they clipping in 100 SOL at a time? Maybe that's indicator that they know something that we don't, for example. So things like this is definitely what I'm looking at when trying to get into a meme coin.
So this last question, because we only have like 12 seconds left, is this going to last? So is this going to have a lasting impact on the financial industry and the cultural landscape even, or is this passing fad? I kind of know the answers, everyone, so please bear with us. Nikolai.
I think financial nihilism is a short-term thing. I think it is part of what a meme coins is right now. It's you want to risk it for the biscuit, so to speak. But it's also culture. That's what memes are already.
Yeah, from my perspective, I think meme coins are here to stay. I feel like this is something that recently with the tooling, the execution, like everything is in place now to kind of translate attention into this economy. I think that meme coins are here to stay.
Yeah, agree. It's tokenized and financialized culture, and there's obviously extreme product market fit, so all signs point to yes.
Yeah, I go further and say I think the ideas of meme coins, tokenized attention, are going to, and they already have with meme stocks, but I think they're going to pervade increasingly additional asset classes. And you're going to have tokens representing everything, things like physical place, like I own the meme token for Manhattan real estate and this and that. And so I think we're going to live in a world, and many people think this, of tens and hundreds of millions of tokens in 6, 8, 10, 12 years. And by the way, the machines will be trading them, all of our AI agents. We can do that panel next.
Looking forward to that dystopian future. All right, well, Nikolai, thank you very much. Thank you, everyone, for coming. Nikolai, Christopher, Jenya, and Mike, especially for...
Thank you, guys. Appreciate it.
Thank you all. Good night. Actually, enjoy the rest of the sessions. It's going to be a lot of fun.
The state of crypto venture, narrative shaping deal-making in digital assets. Please welcome Jay Maracus and his panel, Victor Fisher, Charlie Sandor, and Matthew Graham.
Not very stable. Hello.
All right. How we doing? Okay. All right, so this is venture panel. I'll tell you what, we'll do quick introductions among us, and then we'll get right to it. My name's Jay Maracus. I run M Group. We're a comms firm in the space. I'm the least important person on the stage. You really don't need to listen to what I have to say. These are the guys that matter. Matty?
Hi, Matty from Rise Labs. We invest all around the world and support our portfolio companies in emerging markets from Latin America to Southeast Asia and a lot of cool countries in between. Pleased to be here today.
So, ahoy, my name is Victor. I am originally from Slovakia, but lived in Prague for something like 12 years. And I founded and I run Rockaway X. We manage roughly $2 billion. $1 billion is typical VC. We were seed in Solana, seed investors also in Wintermute and others. We have a booth just there. And we also have a large engineering division. From Prague, we run proof-of-stake networks, around 50 blockchains.
I'm Charlie Sander. I'm an investment partner at CMT Digital. We're a global venture firm based in Chicago with offices in Singapore and London. And we have about 500 million AUM and invest primarily at kind of like the pre-seed and seed stage.
All right, we got some serious experts up on the stage. So let's start the conversation with just at a macro level, right? So the industry has been sort of like transforming over the course of the last 2 years, since FTX has been about 2 years ago. What are you guys looking at right now? Like, what's interesting to you from an investment standpoint? Within the sector, what are the micro verticals? What do you see that's hot? What do you think is the next thing?
That's actually a super easy question at this point in time for us to answer, because we're spending an overwhelming percentage of our time on AI. Which is a huge turnaround for us. The initial wave of AI projects that intersected with crypto did not super make sense to us, very openly, but now that we have these concepts of AI agents that are exhibiting, that are so compelling to people that they are actually inspiring and influencing real-world actions, I think it's an enormously important trend, and we're spending almost all of our time on this specific subsector. Actually, I think it's the most important thing in the industry since DeFi. I think it's a very, very big deal.
Okay, Victor or Charles?
Yeah, sure. I would just stop here and say, let's enjoy the moment, because you remember, 2 years ago, and it's crazy how things change rapidly in crypto. That's why we love it. So 2 years ago, Bitcoin was at 16,000, Solana was at 14, and Pamir Gelenbe, if you know him from Libertus, my friend, he says, in crypto, when it's bad, it's really bad. When it's good, it's really good. Yeah, and it's such an emotional roller coaster. So with Matt, you were saying you have to somehow take care of your body and your mental health. Otherwise, you just go crazy in this industry. And But I fully agree. Like, I am right now excited about where we are in terms of applications. I was excited, in 2018 when proof of stake was the next consensus algorithm. And so we launched basically our infrastructure where we manage $1.2 billion and we run 52 blockchains. And then second was DeFi Summer in, when was this? 2020, I think. Yeah, when Compound launched their token. And we launched a credit fund, which is even today still providing liquidity into DeFi protocols to grow their TVL. Third time I am excited now is actually AI agents. And AI agents you can launch on platforms like Virtuals or Olas. And those AI agents are then doing some work on-chain, then transact on the blockchain. They are now even giving work to humans. So you get paid 1,000 USDC if you buy an AI agent, if you post something on Twitter, for example. Other than AI agents, I'm also excited about retail apps, retail trading apps. So Moonshot, Vector, and if you look at Apple App Store, the most downloaded applications, so Phantom is now before Coinbase. So people are actually onboarded directly on-chain through, DeFi wallets. And it's exciting because it shows that right now people want to trade directly on-chain. So we invested, for example, into Breakout, breakoutprop.com. It's a company which you pass, a test, you pay $300, and if you pass, you get $100,000 loan that you can trade with. And they launched before summer. They're already trading $5 billion monthly.
Okay, Charlie?
Yeah, similar to both of them, our research team has spent a good amount of time looking at AI agents and verifiable inferences on-chain. But another area that we've spent a lot of time on, I think, is kind of at an inflection point is global payments. And just looking at the payments on a broad scale, obviously, Stripe acquired Bridge for quite a hefty sum. I think it was a $1.1 billion acquisition. And I think it's the first time in recent history, right, where the oligopoly of Visa and MasterCard is truly threatened via using blockchain to settle global payments. And Stripe obviously sees that. If you look at Stripe, they do about the same top-line revenue that Visa does, but Visa is a 60-70% profit margin. It's at like record highs because they have a monopoly on payment networks. And so I think what you've seen with stablecoins and a lot of startups building that space is kind of decentralizing that payment network and allowing others to compete there. So that's a spot where we've been spending a lot of time on.
Okay, yeah, I feel like it's been a long time for the payments industry, and it's really starting to move now, right? Mm-hmm. Okay, so when you guys identify sectors you're looking at and you're looking at companies, right? I'm really curious. How do you judge valuation? Like, what are the factors? What are the metrics when you're looking at specific companies? How do you take a look at it, and how do you base what your valuation is going to be on? To change over the last couple of years? Anybody? Charlie, Victor, Matt?
Yeah, I can jump in there. I mean, compared to 3 years ago, let's go 2021, it's very different. I think in 2021, you had a lot of valuations across the board. That it was definitely a founder environment where it was like, here's the valuation, take it or leave it. And it ran up where even Series A and Series B were getting done without kind of like underlying traction. And then I think today, at the early stage, it's obviously a give and take, right? It's thinking through how much money does this company need to succeed? What's the proper amount of dilution, knowing that they'll raise additional capital in the future? But really, once you hit the Series A, what we've seen Series A and later, it's very much metric-based. And so everyone's looking at your traction and comping it to either on-chain what your kind of cohorts trading if you're doing a token outcome, and then if you're equity basis, it's really looking at like multiples. Are you a SaaS business or not? And are you service-based business? And really benchmarking on kind of more traditional venture multiples, especially given that the IPO market and public comps have been depressed. And so I think the bar for Series A and beyond has really raised, and it's really focused on what's your underlying metrics in revenue of the company.
Okay.
So in crypto, what's specific is that everything's narrative driven. So it's not what we think about valuation. It's about what other people think. So when you are doing an investment, of course, like you have a target exit valuation, but it's a bit like having double personality, because when you think about exit valuation, it's not your valuation. you have to think about exit valuation, how other people will think about it. And what we realized is actually it's very much narrative-driven, and within a narrative, it's comps, it's comparables. And so if you have a DeFi lending platform, it's like, you know, fully diluted valuation over TVL, for example. And then you have to kind of like do these metrics, and then you have to help your portfolio companies to also like find the right narrative. So sometimes you have to combine narratives. Yeah. So for example, Jito initially started only as flashbots, like, you know, just MEV on Solana, and then they extended this, and they also did Lido narrative. So, you know, so it's flashbots plus Lido, because it's MEV plus liquid staking. And now they are bridging even more. They are saying it's also like eigenlayer. It's a risk-taking protocol. And you kind of just simply add those valuations, and as a result, like Jito now has, I think, like 3.5 billion valuation versus Flashbots 1 billion, Lido 1.5 billion. So that's what's important. Bottom line is you have to think about how other people think about the valuation, not you yourself.
I would frame it kind of like this. I think it's quite a thought-provoking question, actually, because, and way deeper than you think, because there's an unusual combination of hyper-competitive aspects to this problem and extremely inefficient aspects. So I frame it more in terms of avoiding some simple mistakes, and to give an example of that, in the context of all these hyper-competitive features of valuation, you have these weird edge cases sometimes where companies will raise mammoth rounds, and you'll have funds that raised a $2 billion fund, something like that, slamming into these rounds that they find a way, finally they can deploy $100 million, $200 million at a time, something like that, and they're just slamming into it. And you got to really, and so those are the inefficient, you got to really avoid these weird inefficient situations that occur amongst this broader landscape of a hyper-competitive funding process. I think of it kind of like that.
Maybe just to build on that, so I would urge our American colleagues not to go crazy again. Like, I know you have dry powder, I know there's a lot of positive mindset right now, you know, across the ocean, but, you know, like 400 million valuations for a new L1, it's not going to help the industry.
Right.
Yeah. I'd rather wait and then buy it once it's liquid, you know, in the next bear market at like 80.
I would like to support that as well.
Yeah, let's do that.
Okay, let's convince them.
Yeah, it's not wrong. Okay, so kind of following along with the valuation type question. Next question is about risk mitigation, right? But I also look at it as when you're looking at portfolio companies or potential investments, right? With respect to whether it's executive team, whether it's the technology, whether it's token economics, or like in terms of the, you know, the within a company, the sort of verticals that you're looking at, where do you value sort of each aspect of a business in terms of A, growth of that business, and then B, sort of like risk in terms of risk mitigation for the investment? Does that make sense? Mm-hmm. You know, anyone?
I would just say, like, when I think about our anti-portfolio, like where we basically had a deal on the table, we passed, and it's $1 billion company, yeah? Without saying names, for example, Ethena. We had Ethena, and we have a large credit fund, and the credit fund guys were like, yeah, this is amazing, like we'll provide liquidity. But the VC team was like, yeah, 300 million valuation is like too expensive. Maybe it can go to $1 billion, it's like a 3x, so we passed. Ethena is like 10 billion, yeah?
Yeah.
And so it's all about the team. And every time we made a mistake, it's because we were too smart. We thought like the product would not work, like for example for Lagrange, but then the team is so smart that they actually change the strategy and they change the product. So I think the team can also de-risk like plenty of other risks, like technological risk, product risk, regulatory risk. So again, it's all about the team.
Okay. Anything else you guys to add?
Yeah, I mean, there's only so much you can do, right? It's really being aware of what the risks are. Like we were seed investors in BlockFi, and obviously that didn't end well because of third-party risk, but it's really quite hard to underwrite when it's outside of the company, but anything can happen in crypto. And we had another company, right, that ended up getting tripped up when Silicon Valley Bank went down, and that caused USDC to depeg. And they were a payments network built on USDC, and all of a sudden you had something that should be $1 depeg to 90 cents. And it's like intrinsic risk that exists like that you just can't really price in. And then beyond that, though, when we're diligencing, we have a pretty deep kind of technical and research team, so we'll always dive in. And as Victor said, it's really about making sure the founder's thinking about it right the way, versus especially at the early stage, like you can't expect them to have everything answered, but as long as they think about it and approach it the right way, and it's a good team, that's kind of the most important aspect.
Okay. Maddie?
From my perspective, I would start by suggesting that one thing that we probably mostly can agree on is that risk, like many aspects of crypto, is magnified across the board. The industry is extreme in so many different ways, and this is certainly one of them. All the different types of risk are going to be very significantly more than you would see in TradFi, Trad Tech, Trad, et cetera. But I think that what's interesting also is that you have two types of risk that from a venture standpoint, credit and things like that are, and traders and things like that, it's a different situation. From a venture standpoint, you have two types of risk that swamp everything else. And the first, you mentioned team. The first is founder and team risk is just on an overwhelming degree is going to swamp all the other types of risk that you have at the time of investment. And then the second type of risk that's going to swamp everything else is bull and bear market cycles in terms of timing of exit. So you have risk that is very dramatically magnified all across the board, I would suggest, but it's swamped, but two risk factors swamp all the others. One at the time you're cutting the check, and one at the time you're trying to determine whether it makes sense to exit or how to exit, et cetera. So I would kind of frame the problem in that way.
May I ask you guys, like, how are you thinking about the current cycle? How are you thinking about exits? Is it like the next agony is selling too early, or are you still kind of like holding your bags?
Well, it's a very personal question. No, I'm just kidding. So I still think that, I mean, it's not, Americans always want to use these dumb baseball analogies, but I don't think it's the 7th, 8th, or certainly not 9th inning of this cycle yet. I think it's more like 4 or 5 or 6, maybe 5 or 6. Mm-hmm. So we're still pretty comfortable. But, when, like if I were to see, if you tomorrow tweeted like you bought a yacht or something like that, I would be freaked out a little bit. I'd start to, but all kidding aside, and obviously not you personally, but all kidding aside, when people are starting to buy yachts and do all this weird things, then that's a pretty good time to sell. And when people are, it's not my framing, it's Warren Buffett's framing, right? When people are crying or bleeding in the, I think he said bleeding in the streets. He was pretty vivid with his description, but he said that's the time you want to be buying. And when people are partying and dating supermodels and buying yachts, and that's probably a good time to sell because most of us aren't that good looking, to be honest, right? So I kind of think about it like that.
All right, makes sense. I like your hypothesis.
I still remember like breakpoint, November 2021, when Solana was at 250 and people were walking around with Louis Vuitton and off-white shirts. It was time to sell.
Yes.
What's your perspective on the cycle?
Yeah, I agree with Maddie that we're pretty early, or not early, but I wouldn't say we're that late yet. And I think that's kind of a unique facet about doing venture capital in crypto is you always have to be on the pulse and always evaluating it because I think most venture firms have a pretty significant portion of their portfolio in token outcomes that have liquidity to some extent. And so it makes you, like for us, we have an individual who just focuses on all of our liquid positions, and every week we have a meeting to go over the performance and basically re-evaluate like, hey, if there's a huge movement, like what's causing this? Are we still underwriting this at this valuation? And then also looking at like who's buying it, right? And what's really the cause of this? Is it kind of if there's a fundamental reason for that, or is it like, hey, this is just like way off of even what we underwrote, like let's take some off the table here. But it's, I'd say we're still pretty early. I think I'm pretty excited. Obviously, I'm based in the US, and you didn't really realize how kind of a tough of a space it was for founders to really build blockchain-based companies for the last 4 years. But that bottleneck has really opened up, and I think you're going to see some amazing innovation and even just kind of broader adoption now that there's kind of less pressure on the regulatory side.
If you ask me, I would say, to use your baseball analogy, I would say we are in 8th inning out of 9, but I would push the number of innings to 12.
Well, extra innings. There'll be two extra innings.
You're going to extra.
Exactly.
Yeah. This is a very European take on baseball.
Exactly. Or we're in the 6th inning.
It's like me talking about football, basically.
Okay.
But okay.
So I don't play baseball, but I would say like there is definitely a lot of positivity within crypto community.
Okay.
Like Twitter is very bullish right now. You know, US, even government politicians are now like, you know, shilling crypto, Powell sell Bitcoin, digital gold, like there's a lot of positive signs already over there. However, I don't really see retail in yet like it was in 2021. You know, like my friends are still not calling me, you know, like, should I buy Cardano? Like, you know, it's still, we are not there yet. So that's why I think this bull market will be a bit more prolonged than the other ones.
Okay, well, listen, that's a perfect like sort of segue into, let's talk quickly, we only have 10 minutes left, about the sort of the regulatory landscape, right? Because you're talking about the US opening up. So look, it's no secret, the market's moving because of the US, you know, appetite, it seems like, for crypto. But outside of just where you see the US going, where that's going to move the entire sector, I'm actually very curious, how do you guys deal with multi-jurisdictional risk, right? Or different, because all the projects are global, right? So from a venture perspective, how do you look at that? And do you provide support and help, or do you look for outside agencies to provide support and help when you're looking at different jurisdictions? What's your sort of thesis on it?
I think really it just starts with risk mitigation and taking adequate steps to geofence where you need to geofence, to tick all the different boxes, and to kind of have a safety first perspective is what we frequently advocate for. But it's certainly a very thorny question, and it's especially thorny for a startup in San Francisco or Berlin or Hanoi or wherever to be able to be instant, you're global day one in crypto, which is an enormous difference. It's a magnified version of traditional finance and technology, the extent to which you're global day one, and it can certainly be extremely tricky. But I would kind of advocate for a safety first approach.
Okay.
I would say the only two jurisdictions that matter is US and Europe.
Okay.
China, India, irrelevant. But it's for us, we are early stage investors. But I am originally born in Czechoslovakia, so I would urge my country, this country, to really be proactive and take this opportunity and stop the, you know, evasion of brains to Dubai. So make sure 3 things happen. So my bank here in Czech Republic is Komerční banka, part of Societe Generale. I just got debanked. Because I asked them for a mortgage and they said, okay, we Googled you and you are in crypto, we are stopping your account. And I asked them why. They're like, we cannot tell you, it's our like personal like banking policy, but you are out. We are closing your account, get the money out. I don't think it's fair. So number 1, change the banking system, local banking system, to be crypto friendly. Second, make regulation easier so that we get even like foundations here. Why are crypto foundations being created in Zug or Cayman Islands or BVI? What if within Europe we had a like great country like Czech Republic, Slovakia is a separate discussion, like Czech Republic, where, you know, we could have foundations here, foundations would issue tokens, it would be clear whether those are utility and security. And lastly, you know, make taxes, you know, easy. So I have to report every single crypto transactions. I got Jito airdrop, I, you know, earned some money there, then I aped into this layer 2. I even forgot the name because it's like down so badly.
I was going to say Mudong or something.
No, I aped into, let's say, Polkadot. And I'm like down, you know, 60% on that. And I still had to pay taxes on this, you know, Jito kind of airdrop, So make I'm not saying 0% tax would be great, but at least on crypto. Or what would be amazing, I think it's 0% tax on tokens issued by foundations from within Czech Republic.
Okay.
I think the U.S. just, or at least somebody in the new administration touted that for U.S.-backed. Part of that was the narrative between XRP. U.S.-backed like tokens would be free of capital gains. I'm be surprised if that actually gets passed. But yeah, on that note, I mean, we invest pretty globally. We have offices in London, Singapore, and it's really important in Frankfurt to understand. It's a pretty complicated space, but if you put in the time and effort, you can kind of understand the different policies, and it depends on what the company's doing. Like if you're building in derivatives, like don't touch the U.S. Like that's very clear. Like like if you look at DYDX, right? They've never no airdrop. Like you have to silo the U.S. and I don't think that will change in the near term. But outside of that, right? There's kind of the codified, as we mentioned, BVI, Caymans, and then for the teams that have more resources, they go to a Swiss foundation. If you want to do like global ex-US, ADGM in Abu Dhabi is a good license to have, or VARA. Obviously here in Europe, the big change is MICA. And then if you're in Asia, it pretty much all comes down to Singapore. And so those are the current like status quos. I think as you see over the next year or two, there'll be a lot of forward-looking regulation across the globe, which will change the landscape. But in the current state, it's really like understanding where the red lines are and what their target market is, who their customer profile is. And then a big factor too, are they truly decentralized or is it like pseudo-decentralization? And I think that has a huge component to it as well.
Okay. Looks like we have time for about one more question. All right, so I think I'm just going to jump to the last question. I think this is a good one. Okay, every VC says they have this like value add, whatever your secret sauce is, right? Outside of the cash that you're deploying, it's some form of, you know, like extra benefit that you're going to provide to the portfolio. Is this real or is this bullshit? Like, honestly.
It's both. I think that I think that in most cases it's bullshit, but I think it is possible to stick that landing. I think where people miss the boat is when they try to do a little bit of everything, which is really not going to work, or if they try to be like, so Paradigm, we all know, for example, that they do a fantastic job and that they have an extreme level of technical competence, right? So why would you want to be like Paradigm but not as good or something like that, right? So you have to find what is actually going to be your lane, what is going to be your best in the world, what is going to be your superpower, and that's how you can actually have value added. I think people sometimes get stuck on that first step and they try to be Paradigm not quite as good, or we'll do a little bit of everything or something like that. So for us, our superpower is when we invest with you, we have experts in all these different countries that have four things. They have finance and technology, and they have global, and they have local, which means that they are an expert in that specific emerging market. That allows us to bridge you to these very important countries in Latin America, Middle East, North Africa, Southeast Asia, India, China. We just added Nigeria in recent weeks, as I may have mentioned. Nigeria is a country with 200 million people, and the percentage of them that use crypto is way higher than the United States. So these are pretty important markets that are highly idiosyncratic, in that it's going to be pretty difficult for someone to reach on their own if they're building their startup in, you know, San Francisco or London or wherever. So that's what we do best in the world. That's our superpower, and I think it's up to every VC to find what theirs is going to be, because second best, that not as good Paradigm or a bunch of other things
doesn't
doing
right.
You know,
there's no value.
just okay. That it doesn't work that way.
Mm-hmm.
Yeah, I view
Victor?
it like that.
What about Rockaway?
So we are a bit different because we have different divisions. So we have engineering division, which runs validators. Then we are heavily, involved in operating the blockchain here from Prague. So for example, when Solana was down in 2023, from Prague, we were the ones who created 60 gigabyte snapshot of the blockchain and sent it to other, 1,400 validators to download until they booted up their validator and until 80% of stake was achieved. And then the chain restarted. So I think that, but we are just very specific. Then we have another division called Credit Fund, which provides liquidity to grow TVL, total value locked, of DeFi protocols. Like we invested into build on Bitcoin, like in layer 2 on Bitcoin, we also provided liquidity, so founders value that. But I would say for typical VC, like what founders tell me, just get on a phone once per month, like be my friend, listen to me. Like being a CEO is a very lonely job, so just, be there when CEO needs, and second, help with introductions and networking.
The council, right? Okay. Charlie?
Yeah, I'll just, to that point, I think like the biggest value add you can be is just make the founder's life easier. Being a founder is extremely difficult, and ultimately, like no VC is going to be the reason a startup's successful, right? It really comes down to the founder and the core team. And so as a job as their supporter is really to make their life easier. For us, one of the areas we focus on is obviously the broader CMT group's a trading firm, so understanding markets, understanding liquidity, how to navigate, and then when it comes to a trading platform, we're often like one of the first customers in providing product and design feedback or borrowing on the platform, and being hands-on, I think is really important to understand the product at the core level and to really provide value for the team. But generally speaking, I think most of the time it's really finding the founder and trying to make their life easier in any way possible.
Okay, look at that. We hit the time like right on the nose, right? Thank you, panelists. Thank you everyone for the time.
Thank you.
Our next keynote of the day comes to us virtually. Please welcome Justin Sun from Tron.
Hi, thank you everybody for attending this summit. I'm Justin Sun, the founder of Tron, global advisor to HTX. And today I would like to give you a brief introduction of Tron Network itself and the initiative we are doing here to scale the network for the real world adoption. So first of all, let's take a look into the Tron metrics. Tron was first founded with a mission to decentralize the internet and empower people by creating a secure, scalable blockchain network for borderless transaction. 8 years in, Tron now supports over 276 million user accounts on the blockchain and has processed over 9 billion transactions with over 15 trillion in volume transferred. Tron is also the blockchain network with a single stablecoin surpassing $60 billion in value. In Q3 alone, the revenue surpassed around $577 million. And actually yesterday, Tron has just surpassed $21 million revenue for a single day, which is tremendous metrics yesterday. So the Tron revenue just hit all-time high. One of the most excited developments in Q3 and Q4 is rise of the meme season with the launch of Sun Pump. Of course, Sun Pump launched in Q3, August, and got extremely popular among all the meme coin traders. And in Q4, last week, we just launched live streaming functions on Sun Pump platform. Sun Pump is also one of the earliest protocol among the Pump Fund launch platform to launch live streaming services. So now there is lots of people live streaming on the Sun Pump for their meme tokens, which is very new to our industry. And also, Sun Pump is a fair launch platform let users create and trade meme coin securely and easily. We will continue to make commitments to support the Tron meme coin ecosystem. And also, Tron's DeFi system has become world's one of the most largest DeFi ecosystem in the world. Tron recently announced the integration with Chainlink, making the official Oracle solution for the ecosystem. Chainlink will further secure JustLand and JustStable, which is two largest DeFi application on Tron, representing over $7.9 billion in TVL. And in Q4, Tron team is also ready to launch USDT, a new version of USDT on Tron platform, making USDT one of the most secure choice for decentralized stablecoin in the industry, which of course is one of the Tron's most important strategy on stablecoin. We already support one of the biggest stablecoin on the whole industry. And second thing we are doing here is to deliver a most secure and decentralized stablecoin to the whole industry. Another major initiative on Tron is the T3 FCU. Tron, Tether, and TRM Labs have joined forces to establish T3 Financial Crime Unit, a first-of-its-kind initiative aimed at facilitate public-private collaboration to combat illicit activity associated with use of USDT on the Tron network. Since launch, the initiative has facilitated the freeze of over 23 million USDT in the funds collaborate with global law enforcement. So this is also very important to bridge the global law enforcement with Tron and Tether all together. Looking ahead, Tron roadmap also includes some very exciting developments. Last week, Tron announced a $30 million investment into World Liberty Fund, making us the project's largest investor. The US is quickly become a major hub for blockchain, with President Trump's pro-innovation stance. The future looks brighter for the crypto. Tron is also excited to support the momentum and continue to leading the way in the blockchain innovation. Additionally, I'm honored to join World Liberty Financial as an advisor. Its role aligns with my broader vision of advising financial freedom and fostering a global adoption of blockchain technology. World Liberty Financial is committed to driving the innovation and making crypto accessible to a wider audience, especially in the United States, which we are happy to do it. Other ongoing initiatives is the gas-less stablecoin transfer, which will also be launched in Q4, allowing users to make transactions without paying gas fee. This aims to make blockchain more accessible and cost-effective for both individuals and business. It will be implemented across Tron, Ethereum, and BNB chain. With this system, developers can cover gas fee for users, making transactions easier and more user-friendly. And also, of course, later this year, a major update is developed of the Bitcoin Layer 2 solution. I have become advisors to a global Red Bitcoin solution, WBTC, and Tron is happy to collaborate with WBTC to deliver a Bitcoin Layer 2 solution, which is one of the most important infrastructure in our industry, considering Bitcoin has surpassed $100K US. In conclusion, there's a lot happening in Tron ecosystem, and I expected we will see a lot of progress in the coming months. We have been committed ourselves to develop the most decentralized and secure blockchain in the industry, and we will continue to doing so. A scale blockchain like Tron has the potential to become a global settlement layer for the truly boundaryless financial transaction. Tron is on track to be one of the most first network to reach 1 billion users. I encourage developers to explore the innovation happening with Tron network and join us in shaping the future of decentralized finance. Thanks for you participating for today's summit, and I'm looking forward to it. Thank you.
We hope your lunches were satisfying. Let's get back into it. We start our afternoon session with a fireside chat. Please welcome to the stage Frank Chaparro.
Great voice, doesn't it? Guys, Bitcoin's at 2.4 million Czech crowns. Thanks so much for taking the time to sit in on this fireside panel with myself and the CEO of Tether, Paolo Ardoino. We're excited to have him. He should be somewhere on the screen, hopefully. Paolo, thanks so much for joining us.
Hey, Frank.
Bitcoin's at over 100,000. Can you believe it?
Well, yes, I can believe it. I told you so, I think, in the past.
Yeah, you did. So walk us through sort of how business is for you guys. Obviously, market cap is at an all-time high. How is sort of these new all-time high prices manifesting in your business?
Well, just in the last 20 days, Tether market cap grew around $16 billion. And I think that is, well, one of the most remarkable results that we could expect. Of course, part of it is due to the fact that there was a very important inflow from into ETFs. Michael Saylor, many others started to purchase Bitcoin at a very fast pace, especially after the election. And so that required an injection of liquidity from the traditional financial world into, let's say, the crypto trading world. And when there are these big inflows of liquidity, they end up in being, transformed in USDT. That's how our market cap grew so rapidly. I think what we are almost approaching to put $100 billion of gap between us and our biggest competitor. So that is quite exciting. I mean, all 2023 and 2024 has been great years for us and for Tether, from the diversification of the company business lines and just the success of our main product, USDT.
The growth of stablecoins is part of a larger story playing out with the growth of RWAs. When we think about that market, right, when you were on the podcast a few months ago, we talked about how we go from billions or hundreds of billions of dollars in market cap for stablecoins and RWAs to trillions. What does that path look like?
So I think that is clear that the world sees the potential of blockchain technology as a way, as a mean of transparency, but also disintermediation. Right now, in the entire financial world, we started from money, right? USDT is money, but then expanding to many other areas, right? So cross-border payments and infrastructure, commodity trading infrastructure, and normal stock bond trading. All that can be reformed through the usage of the blockchain technology. And Tether and also myself, we have been advocates since a very long time about the importance of the real world, right? So when we talk about real world assets, we are referring to how actually the technology that we built over the last many years can be applied to the real world. And while from 2020 to 2022, 2023, most of the industry was focused on DeFi and other primitives like that. At Tether, we always were focused on the last mile, the people in the streets, and how we could bring access to millions of people or 100 millions of people that never had or had very scarce access to financial services. And I think blockchain is the tool that helped us to reduce the cost of infrastructure by a few order of magnitude compared to the traditional financial industry. And so that allowed actually to apply the concepts of blockchain into the real world, right? So I think that when an industry mature, especially an industry like the Bitcoin and crypto industry, it's all fun and games when we talk to each other. We brag about the latest NFTs that we have and so on. But the real change in the world that we can apply is actually the real world, right? So feels to me that we finally are out of the niche of 0.1% of the population, world population, that is us geeks and nerds, crypto nerds, and we are actually talking to people that run a bakery, that drive a taxi, that teach a school. That is, if our technology and everything that we built over the last 15 years makes sense, we have to show it, we have to demonstrate it in the real world. So that's why 2 years ago we started at Tether this project called Hadron, that is a tokenization platform that allows institutions and companies to use our technology, the technology that Tether created over the last 10 years, with all the security, with all the KYC, AML, ecosystem monitoring, know your transaction, everything that you can think about, was packaged in this platform that allows customers, institutions, and enterprises to tokenize equities, bonds, shares of funds, but also list or create new stable coins out of existing fiat currencies or gold backing. So we have many different flavors. We tested in Europe with a couple of with a partnership with Quantods, and that they issued, this company issued 2 stablecoins subject to MiCA regulation, USDQ and EURQ. So that was the first real world product created by Hadron. So I'm pretty excited about the fact that we came to launch Hadron by the end of 2024. It was definitely timely.
I want to apologize to the crypto nerds. That's not pejorative. You guys are great too.
I'm one of them.
Obviously, if you pay attention to the headlines, you know that Tether is one of the most profitable companies in the world by headcount, at least, making billions of dollars a quarter. Paolo, what are we doing with all of this money?
Well, interesting fact is that we had a quite interesting success over the last few years, especially last 2 years. I think up to the latest attestation, we made around $13 billion in profits, if not slightly more. And the vast majority of them has not been distributed to the shareholders. They are being kept in the stablecoin business in part, so they are part of the excess reserves. So USDT in this moment is around 4% over collateralized. We have roughly 130 billion, 35 billion in market cap, plus we have around $6-7 billion dollars in additional excess equity. So that is, first of all, the one of the best ways we could prove the trust and repay the trust of our community, showing that while the banking industry is doing fractional reserve and is lending out up to 90% of their reserves and keeping only 10% in liquid buffers, Tether has more than 100% in high available liquid assets. So we are very excited about that. But that is portion, like $6-7 billion of our profits when they are staying in the stablecoin, and the rest has been invested outside of the reserve. So not from a separated point of view, from a separate company called Tether Investments, have been invested in different areas. From artificial intelligence infrastructure. I'm a big fan of creating alternative infrastructure providers compared to the big one, Google, Microsoft, and Amazon. We purchased a majority stake in a company called Northern Data that have 24,000 GPUs, H100s. That would make it very, very soon the biggest independent AI infrastructure provider in the world. And on top of that, we have been investing in neuroscience and neurotech. One of my preferred investments is called BlackRock Neurotech. Doesn't have to do anything with BlackRock, but I would say that Neuralink is a competitor to this company. While Neuralink has two patients installed, BlackRock Neurotech has more than 40 patients installed. The latest news was a patient affected by the ALS, that is form of sclerosis, that could not speak anymore. We were able, with our technology, to bring the speech back again using, in part, a brain-computer interface and artificial intelligence. So we could read his thoughts and the words from his brain at a pace of a speed of 62 words per minute. That is very, very cool. Shows what this technology is capable of. Then on top of that, we are big fans of Bitcoin mining. You know, Bitcoin is $100,000 now. You know, many people sometimes ask me why you are mining Bitcoin when you can buy Bitcoin directly. And I think in general is quite a great point. 99.9% of the time, if you buy Bitcoin, if you have, let's say, $100,000, is better if you will have a better return if you buy Bitcoin rather than if you mine Bitcoin. But given that Tether has around 82,000 Bitcoin of its own property, we want to participate to the security of Bitcoin, and that comes through also Bitcoin mining. And you know, we are set to become one of the biggest miners in the world. So you know, our approach is mining outside of the big jurisdictions. Have some sort of predilection for Central and South America and other boutique smaller countries around the world, just because we think that is very, very important to decentralize Bitcoin mining, especially, you know, also outside of you know, few listed companies. So that, you know, it's nothing against any of it, right? So it's all great. The more miners, the merrier, but that's the point, right? So with Bitcoin, we cannot rely on 2 companies, 3 companies to mine, to be, you know, 90% miners. And so we need to add additional forces from across the world to make Bitcoin safe and sound. So that's one of our major investments. We recently announced our interest in participating to TradeFi and commodity trading. We started with few deals in the TradeFi world where Tether acted with its own liquidity still outside of reserves, very important. We acted as a short-term lender for facilitating different operations, starting from oil, purchasing of oil barrels. We are receiving very, very good feedback about the usage of USDT for cross-border payments for commodity trading. You know, sometimes imagine when you have to, you know, buy large quantities of oil, and you have, you know, the way it works is simple, right? So there is a ship that is waiting on a dock to load a ton of thousands of oil barrels. And that process cannot start until the wire hits. And the wire can come in 1 day, 3 days, 5 days, 7 days, 10 days. You really don't know, right? With USDT, the beauty is that, first of all, on one side, through blockchain technology, through blockchain, you can see that the money is there because the USDT wallets are public. So, you know, if you have the buyer will give you his address and can prove the ownership of that address. That's great. It's much better than a letter of credit from a bank. And second, the transfer takes 5 seconds. Yeah. It's confirmed in 10 seconds, and you have it available right away. And so the efficiency that USDT and stablecoins in general can bring to the commodity trading business is just insane. And the level of transparency, it's even bigger. So that's one of the areas where we are planning to dedicate a lot of resources, because we can see how USDT could be a game changer. And then lastly, we have invested in tens of small companies all around the world, especially in emerging markets, developing countries, that are helping us with the last mile. I think that Tether, if I can summarize it, is building one of the biggest boots on the ground distribution channels and networks in the world available today.
and obviously spending a lot of time talking with governments around the world. I know you guys are well known for your partnership with El Salvador. Are there any other things happening in terms of maybe working with governments to get Bitcoin on their in their treasury or CBDCs? What are you talking with them about?
So Hadron, our tokenization platform, has been of huge interest from more than 300 institutional customers, among which there are a few governments as well. So we are talking to a few governments, for example, interested to create a gold-backed currency, fiat currency. So that's quite interesting. There are others that are interested to launch some experiments in the country for example, for remittances, or simply to digitalize their money. I think that that is something. I mean, money is already digital, for most of it, but in certain countries the implementation is very fragmented, and they might not have, especially small emerging markets. They don't have the payment infrastructure, maybe of Visa, MasterCard. They are struggling to actually, do the leapfrog into the digital payments, and so they are trying to avoid copying the Western world from in the current form of digital infrastructure, and they really are interested to leapfrog and using stable coins or a form of stable coin, that can be applied to also their central bank to modernize. So jumpstart 30 years of payments infrastructure, arriving direct to the best form of payment solution that are stable coins for their own country. So we are discussing about that with many. We are advocating for Bitcoin in their balance sheet. I think is very, very important. El Salvador did great. I think that they have probably around 6,000 Bitcoin. That it's quite a good amount of money for a small country. Think about, I think El Salvador GDP is around $10 billion per year. Wow. So having a balance sheet of Bitcoin of 7,000 Bitcoin is something that that is making a dent in the country economy. So Bitcoin advocacy is one of my preferred things.
Makes sense. Well, sir, thank you so much for taking the time today. We'll see you soon.
Thank you very much, Frank. Have a great conference. Thank you very much, everyone. See you soon.
Grazie. Ciao.
Grazie.
Martina Boris-Liska will moderate our next panel discussion. Her guests include Samantha Bobat, Rachel Conlon, and Himanshu Sahay.
I love this music. Hi, everyone. I guess that's it. We're going to be talking about exploring the events of the past year. Lots have happened in the 2024. So let's start with some introductions. Himanshu, you want to go first?
Hi, everybody. My name is Himanshu Sahay. I'm the co-founder of Arch Lending. We provide secure, regulated crypto-backed loans in the US and soon abroad.
Hi, everyone. I'm Rachel Conlon. I'm the Global Chief Marketing Officer of Binance. And what that means is I drive growth operations at the global and local level for the app and .com.
Hi, everyone. Is this working?
Yes.
I'm Samantha. I'm a partner and chief growth officer with Rockaway. We were actually founded here in Prague, so we're excited that everyone's on our home turf. And we're a digital asset crypto investment firm. We run venture strategies, so investing in early stage projects, and credit, where we act as a private lender to crypto companies and liquidity provider to protocols.
And my name is Martyna. I'm a senior PR director at Serotonin. We're a Web3 native marketing agency. I focus on PR and revenue-driven activities, how PR fits within the wider marketing functions. And yeah, I feel like we have a lot to go through, so I want to start right away to set the scene. The first question I actually have for you guys is, what moments in crypto history from this year will we still be talking about in a decade or in a century? Rachel, you want to kick us off?
Look, I think, we woke up this morning to incredible news. We can say Emergence has had a role in that, but, I think this year has been just momentous for our industry, from the ETF approvals, Bitcoin halving, what we've seen is this incredible surge of institutional funds, which has given the legitimacy, which has driven the retail interest. So I really feel like there's too many moments to share. I think while we don't operate in the US, I think the most recent development with the final outcome in the US from the election, while it was going to be a marathon and a sprint with different candidates, I think that has now laid the foundation for what is going to be a very strong 2025 from regulatory clarity and further institutional funds surging in, which has just driven this incredible spotlight. I was with the Google team a couple of weeks ago, and they shared with me that Bitcoin was the most searched financial term of 2024. I don't think any of us could have imagined that 2 to 3 years ago. So it's that, we've captured the cultural zeitgeist, and I think we're going to continue to see, the industry thrive on that.
I think one of the biggest points from this year, which we'll look back on as an inflection point, was the election.
Yes.
And the changing regime starting January 20th, because people like Paul Atkins coming in on the SEC, Jerome Powell yesterday said that Bitcoin is an asset just like gold. These are big changes which will have massive downstream effects that we haven't quite realized, and we won't realize until next year. But we're going to look back in history at 2024 as the year things changed and we had a massive inflection point.
Yeah, I think for us, so there's the price action impact of all of this, obviously today's milestone, maybe anticipation that comes with a looser regulatory regime, right, that has seen a lot of enterprise token prices go up. But from where we sit, we look a lot at what it means for innovation in the space, and can we see new types of projects, new types of companies emerge from it. And I think a big part of the new regime is just thinking that a lot's going to happen on DeFi. We're already seeing, so the tokenization stuff, I guess, is another aspect of this, right? So big companies looking to put assets on chain because they believe the capital is going to stay. And I guess I'll just toss one hot topic out, I guess the meme coins, which maybe will, I don't know if it'll be enduring, but it's a memorable part of 2024.
It's a marketer's dream. It's driven incredible spotlight. Friends who are crypto skeptics are like, this seems like fun. Should I invest? So look, it's driven a lot of interest, and it's up to us then as industry players to help educate and pivot people to the right path to go down.
That's really interesting. And I, as a marketer or PR person myself, I wanted to follow up, Rachel, on that kind of all the trends you've kind of mentioned and meme coins just now. Has that influenced how you approach marketing? Binance is such a big brand, and you overseeing that across different regions and markets. Have this year's event influenced how you approach your strategy when it comes to marketing?
I think every major milestone and event influences marketing strategy, whether you're in Web 2 or in Web 3. I think for us at Binance, I'm really lucky, and I joined Binance 2 years ago, but I'm really lucky that Binance and the founders, I joined with, they built the playbook for marketing. And we've continued over the last 18 months to really double down on our community. And that commitment from them is what helped us thrive, in the bear cycle and through the many headwinds, that we had last year. But I think over this year, we've really kind of doubled down on 4 main areas. I think one, look, there is still a lot of distrust and misconceptions. and myths about our industry. And we've really tried to focus through our campaigns, through our content, through our partnerships on debunking that and ensure that we're educating people and bringing them then to the right tools where they can understand how they can navigate this place and where we can meet them at a place that's relevant for them in whatever stage of their journey they are. I think secondarily, I think one thing about this last year is there's been much more, of course, hype is an ongoing part of our industry, and I think those hype cycles are what drive so much interest. But, I think for us and many other industry players, you said, it's really focusing on the value propositions and the utility. Right. And I think that's been a wonderful thing over the last 8 months, is that focus on why this is relevant for you. What are the benefits? How do we show users, why they need to be in this industry, the next generation that are joining. Thirdly, we focus really heavily on, and it's a different type of marketing, but it's as important, is on, the regulatory and policy advocacy. That's a big part of my job. I work with our leadership team more broadly to help educate those regulators on how we need to set this up in the right way to ensure that we continue to see a thriving foundation for founders, for users, for traders, for industry players and institutional players. So I think those 3 areas have been a big focus. What I'm most excited by, though, in this next period is really, the proliferation of channels we get to use. We've done a lot of research at Binance and where our new users are. They're on YouTube, they're on TikTok. So we're really focusing on obviously Discord and Telegram are critical for the OGs and for the core community and for the technologists. But as we look at balancing and personalizing our strategy more to the different segments of users we're speaking to, YouTube and TikTok have become these incredible conduits for us to share more educational content and engaging content, that what I like to say, edutainment, that we're entertaining at the same time, as bringing them on our journey. So that's, we're always looking at adjusting, at fine-tuning, at improving. But, those are the big 4 pillars I would say we're focusing on. We'll continue to focus on, over the next kind of 6 months.
Yeah. I'm glad to hear that, from someone like you, like Binance, that you are still focusing very much on educating and meeting the customer where they are, whether that's TikTok, YouTube, because that's still very important. And I think, Bitcoin hitting all-time high today doesn't mean that we are there yet when it comes to adoption. And I think we still have a long way to go to make this digestible to everyday users, right? I know you guys mentioned elections, and I want to touch on that in a second. But before we go in there, ETFs, finally here. How do you think they will shape adoption? And maybe, Himanshu, you can kick us off here. I know you're focusing on simplifying liquidity, and I wonder whether there is some type of shift with introduction of ETFs, of how you guys evolving to stay competitive and also relevant to user, and whether ETFs are actually helping you, or is it kind of another thing that needs to be debunked and explained?
For sure. Good question. I feel like people forget the ETF buyers are distinct from spot Bitcoin buyers. And a lot of ETF volume comes from IRAs and 401ks and other retirement accounts, as well as other regulated accounts that can't actually invest in spot Bitcoin. But if you can, you're not going to want to pay someone 1 or 2% as a management fee for buying Bitcoin for you when you can go buy it from Binance or somewhere else, right? So we don't view that as competitive. I think more liquidity in the spot market, which comes from ETFs as well, is very important. And for us, the way we are seeing the change is just more interest in Bitcoin in general. There's a number of net new borrowers for us. And we've seen our volumes go through the roof this year. Every month is our biggest month ever. And I'm sure other lenders in the space are seeing the same thing. So I don't view that as competitive. I think ETFs coming in are a very valuable tool for people to invest in Bitcoin and get exposure, dipping their feet in. And then once they learn how to actually go buy Bitcoin spot, which is also very easy to do now, and always has been, they can go do that and do that from outside the retirement account, maybe get more exposure beyond the 5% you get in your Fidelity IRA or something like that.
Perfect. So definitely like a good catalyst for the space, the ETFs, which is what makes this year very, very special, I guess. And yeah, I guess you guys said it yourself, right? Hitting 100K Bitcoin is definitely a historic moment. We're probably going to be looking back at 2024, and that's going to be a highlight of that year. So with kind of crypto prices going up again, does this cycle feel any different from past bull runs? And if so, how?
I don't know if it's that it feels different or that we're just at a different moment and certain aspects haven't come on yet. And so I can maybe speak from the like venture company formation side. I guess first off, and this might be totally new and not changed, but I think right now a lot of new founders we see are crypto native. So the space is further along, they've worked at a company in the industry for several years, or they had another project, and now they're taking their first shot at it. I was thinking of this actually when Rachel spoke, because in a way they need to stay cognizant that people on the outside need to be educated and kind of learned up. I think a lot of kind of crypto native teams who've been at this for years have that tunnel vision and can feel overconfident. And so in a way, outside people in give that fresh perspective if they're on leadership teams. But so yeah, I'd say right now we're still seeing kind of crypto native people who are starting companies that the herd is pouring into. I'm not seeing kind of people who have domain expertise coming and saying, how do I use this technology to disrupt this space yet? I hope I see more of that, or at least that those who are doing it find us and we fund them. And I don't think yet there's the talent crunch, so they probably go hand in hand. Like in past cycles, we work closely with our portfolio companies. There's a moment when your phone proverbially like never stops ringing, and they're like, any engineer, I don't care if the guy, thinks Java was a type of, like, only knows the coffee. I don't care. If he's even looked it up online, we'll train him up, Like, that starts, and then you're suddenly like, any recruiter, could my cousin be a recruiter? You get into this frenzy of blocking and tackling for companies and so many requests, and I'm not having that yet. I still sleep, I wake up, and my phone's not crazy. So I guess, yeah, we're seeing the price, but it hasn't yet trickled to kind of, I think, operational overload for companies in the space.
Yeah, I agree with you, Samantha. I think we're still at the nascent stage of this. I think, I was consulting in this space at Creative Artist Agency. That was my route into crypto when I joined, Exchange World 3.5 years ago. And what I would say, being on the outside at that time, looking in and meeting with all the founders of, the exchanges, the big ecosystem players, it was very much defined by what I would describe gold rush mentality. And that's what when I was formerly in Web 2 world, defined that as. And I can already feel that this cycle, you can see the maturation that's happening. We're still early stage. Like, we're still in early adoption. We still only have the same number of users as the internet had in 1997. Yeah. And they still said at that point that the internet could die. But I feel like it's more built on credibility, on innovation, on what are the use cases, which I think are going to be so critical in order to hit that point of mainstream adoption. But I think we're on the right path to this. I think all of us can feel among our kind of normie friends, we can feel the energy about this space. I can't go for coffee or go for lunch or dinner with a friend without them saying, so what should I be doing now? Yeah. And these are the same people I spoke to, 24 months ago that were like, never. Yeah. I'm too conservative, I don't want to do it. So I feel like we have, going back to what I said at the beginning of this momentum at the moment, but it's being defined by more maturity, hopefully what will be more regulatory clarity, hopefully what will be more and deeper understanding. And I agree, Sam, with you, we haven't yet kind of reached that point of true chaos and overload. It's definitely I feel like we're getting there. We definitely did a lot of building in the in the down cycle and the bear to be able to prepare for this moment. So I feel like as a company, as Binance, we're much more prepared. But there's always things you can't plan for. Yeah. So
I think one of the things that happened the last time was people started taking undue risk, and we saw this in the lending markets, which caused massive failures in 2021 with Celsius, BlockFi, Genesis, etc. And those risks aren't being taken anymore. I think people have learned what happens when you take undue risk, especially in a lending book. You blow up and lose 35 billion of consumer capital. That's not being done. People aren't doing any uncollateralized lending anymore. People aren't taking capital from retail, lending it out further. So I think in some ways, people have learned from the last mistakes, and then they're doing things a bit better. And obviously, we're still in the early days, so things might change. Hopefully they don't. But we're definitely seeing more credible companies being built this time around than the last time around, I would say.
I think just on that point, though, from an exchange perspective, so looking at through the point of retail, we have much better security and governance in place this round to ensure that retail users that are new to this space aren't putting themselves, like, okay, you have to do your own research, that's critical, but, I was in Australia last week and we were just launching a margin trading product there, and, we've got like quite a strict evaluation criteria before you even get access to the product that you have to do, and I think that type of, not barriers, but those checks and balances are, and that type of governance
from themselves.
Yeah, exactly, and that's really critical for the retail audience. And I think obviously institutional are much more sophisticated, but as they learn, that's important, as well.
Yeah, and I think users are more savvy to that point. You mentioned margin trading, so we invested in a company that sounds similar. You pass evaluations to get capital to trade with. So it would be the opposite of taking full risk of your capital with a margin account, but you get some funding. And we just keep hearing from them that they're getting asked by their users, like, how is this book set up? Are you fronting my trades, right? Because they all got, everyone was around for GameStop and Robinhood, and why did they, what happened there? And like, why am I not the market maker, right? That I think is also causing a lot of people to move into things like perp dexes, and where they can feel like they're getting the trading fee, not someone else or not someone who's fronting them. Yeah, so it feels like that's across the space.
Yeah, you're so right. The users are. We, as Binance leadership, you have to do a day of CS training where you work on CS desks for 12 hours a day a month. And it's incredible, over the last 2 years I've been doing it, it's incredible to see the savviness and how the evolution around product knowledge of our users. They often, sometimes they're educating you on things, so I think that's going to be an important kind of, I suppose, attribute of this cycle. So
yeah, that's really interesting, and I do sympathize with a lot of that you guys just said. One of the things I wanted to follow up on was what Sam said about the talent. That's kind of really close to my experience. In the previous bull markets, there was a lot of kind of just looking for people who can, if someone understands the product or understands what we are building, can we make them a marketer? Can we get them to help us with community? So whoever who understands what we do, can we hire them and use them for something, right? Whereas I think this year and each bull market teaches us that, marketing or community building, this is like a craft on its own, and it's actually quite nice to start encouraging people from outside of Web3 to come and build and help us with all those things that kind of is lacking when it comes to talent in a Web3 native space, which I think that's what kind of you were getting at as well from your experience. So yeah, I would love to see more talent come into that space.
But this is incredible as an industry. We're all at the ground level of seeing it being built. Very few of us are going to have that opportunity.
Yes.
Again, I was one of the people that turned down a job at Facebook when it first launched because I was like, oh, I don't know whether this is going to stick. I was wrong, I admit it. But I think, and it was one of the reasons I was so drawn to this industry. The innovation, the pace of change, the brains you meet, the opportunity to build. I just think for anyone looking at, people can be intimidated by the vernacular and but what feels like a closed community. But actually, I would argue it's one of the most welcoming communities, and we need more talent and more diverse talent because that's how we're going to build the products and services that are relevant for the next generation. So, I would argue that this industry is more welcoming.
Yeah.
It's just about finding your spot and being able for the pace. I think, it is 24/7. It doesn't sleep. I try and explain that to people when they're joining, and it's one part of any interview I'm doing. The last question, I'll be like, "Are you sure you're ready for this?" It is, almost vocational in terms of joining. So, but hopefully we'll see more brilliant minds come into it, and then we'll see it continue to grow.
Yeah. Yeah, and I think that's brilliant what you just said as well. We are in this unique opportunity, have this unique opportunity to kind of build a playbook for what's going on in crypto and how we want to navigate the shift and bring this to everyone, right? As marketers, as community builders, as investors. So that's really important. Even now, I think this past year, what I've recognized is clients and people being way much more savvy. And it's not just, are you experienced in Web3 marketing, but it's more like, have you done a node sell? Have you worked on L2 launch? So people are very specific in terms of what they need and what expertise they need. So I think that's a also nice signal of the space maturing. Should we talk about Trump's election? How do you see this win kind of impacting US crypto policy, but also the global ecosystem? And I don't know if maybe you guys have any insights into specific regions, kind of maybe outpacing US as well, when it comes to fostering innovation and kind of being ahead of the curve with their regulation.
I think the US has been behind for many years, and there's been a stronghold on control over US policy. We haven't had much interest there. Ironically, with the new administration, J.D. Vance introduced a bill recently as an update to FIT21. That helps define more clearly that Bitcoin and a couple other assets are not securities. We're also seeing more interest now from the SEC coming in with the new election in actually defining more policy in terms of so in the US today, even lending is defined not as a crypto policy, but as a consumer and commercial lending policy, just like mortgages are. So there's not a lot of clarity on what you can and can't do. And I think that's going to change. Having said that, foreign countries are definitely farther ahead, where your base is probably the best example of that.
Yeah, so from where I sit, one way we experience the regulatory changes is kind of where are founders choosing to set up shop, and do they move before critical events like launching a token? So I'd say like in 3 years ago, last couple of years, we would have a lot of founders that anticipated a launch, or maybe particularly if they were in a gray area, right? So maybe, I don't know, throw out there like a fee generating DeFi protocol or something. And we would see them say, okay, what are jurisdictions where I feel at least there's more certainty, right? I don't want to live with this kind of over my head. So some were looking at Switzerland, some European jurisdictions, some Middle East. I would expect to see less of that, right? Just people who say, just have an unbridled enthusiasm to be in the US because of the market strength, and I don't feel that concern for something I can't foresee. So that's what I'm looking at. I don't really have a verdict yet. Or not one that's like robust statistically, but that's what we were feeling over the last years.
I think if we take a step back just before the election result was revealed, what was incredible was to see that crypto was on both candidates' agendas. That's why I was describing, I think with Kamala, if she'd gotten in, it would have been a marathon. But I think with Trump, I think we're all anticipating and hoping for, what will be a sprint and a lot of, positive momentum there. I think you cannot underestimate the power of the US on policy at a local level in other countries. And I think that that's where this is really promising. The Trump, even the moves he's made with putting Paul Atkins in this morning and how it's going to transpire. But I do think that this is a moment where the US fell very far behind on an innovation strategy in an industry that could have unlocked a lot of growth for them. And I think, I live in Abu Dhabi, as you had shared, and it's been incredible to see a small, cash rich, oil rich, but a relatively small country see the potential and set the right policies in place. Not perfect, but set the right policies and frameworks in place that have invited in the founders, invited in the ecosystem players, and it's really become a meeting point. For East and West. And it's the right meeting point, given, this industry. If you look at the penetration rates, they're much higher in East, Middle East, than in Europe, than in the US. If you take out, from a retail perspective, if you take out the institutional investments. So I think that, I think we all see that it's going to be positive, positive regulation coming off the back of this. I think that alongside MiCA then in Europe is opening the door for, a first, pan-regional policy where we have clarity. At the moment, I have 250 people on my marketing team, and we're operating and using 100 different guidelines from a financial promotion perspective. I think I spend about an hour and a half a day on regulation and compliance to make sure, we're not sending any wrong messages out for users. So, look, I think it's really promising, and if it's done in the right way, it's going to set up, users in the right way, and in turn, unlock all of this potential with founders. And new, and open up market for new builders, which is what I'm excited by.
I definitely echo that sentiment on spending time on regulation. I think in the past, people didn't spend much time really focusing on what the regulatory clarity on your products are before launching them. A prime example is BlockFi got fined $150 million by the SEC for running an unregistered securities exchange, which essentially was their yield product, where you can get yield on Bitcoin and other assets. We're now launching something very similar, but in a fully regulated manner. And it's been months of just working with lawyers across the spectrum on exactly how we can do this and what the regulatory clarity is. And there isn't like a clear path on what you can do. It's like, let's pull this exemption from here, let's pull this ruling from here, and let's see what we can actually do together. So I think we're still behind, as you mentioned, but with the current administration, it's going to be top of mind to make these things clear, because as you said, it's going to be a sprint. And they have 4 years, as they know, to make things much clearer than they were before, and they've put the right people in place to incentivize them to do that.
And what's really impressive is they're spending time in markets. The administration and their advisors and the transition team are spending time in markets where they have been more proactive, and they're doing the right discovery and taking the right learnings, which I don't really know any other industry where that's happened. I think that's a first for a U.S. administration.
I'll give you an anecdote about that spending time. So I was at dinner with President Trump a couple months ago, just very close to the election, and it was a group of 40 crypto founders and such in this room talking about crypto regulation with him. And no president-elect or someone going so close to the presidency after a rally has taken the time in the past to speak to an industry that's so nascent and ask them what are their worries and how can we fix them. So I think that was a very positive signal in the intention behind what they want to do in this administration.
Yeah, and I think, when we would be asked in past years, so I worked closely with the Blockchain Association over many years, and part of some similar conversations, they would say, so you want no regulation, right? And we would say, no, our founders and businesses in the space just want clarity. We do want regulation. We just want clarity and certainty to then build businesses on top of. And I think this will be a test for the industry that we stay true to that. I certainly hope that's the case, right? That it's not, no, we want nothing. I don't think Rachel's sitting here saying, in my dream world, I can send out a marketing campaign that says guaranteed, you get a mansion in a day or whatever. No, you have to still abide by prudent, how you communicate and rules on this, right? And be sensitive to people's knowledge levels and what you're telling them. And even on the lending, I feel that, right? Just because we're not fretful of whether a product is a security or that they're totally a qualified investor and that we're going to get breathed down our that people are going to breathe down our neck. I think, I was at DCG Genesis, right? We had a far too big loan that should have been syndicated, right? That is, whether there's going to be regulatory enforcement or not, the industry has to step up and be responsible this time around, and even more so if they're not fearful of retribution.
Yeah, I think you're right. And I think, let's be clear, regulation exists for users.
Yeah.
And that's what we need to stay, and that's what our industry has done so well, and we need to stay focused on that. It's about a safe and secure environment for users. So that's why, we as Binance and other companies are spending so much time educating those regulators who don't understand the space yet and don't understand the product suite and need to, because unless we take a seat at the table and act as the voice of the user, we can't guarantee that the right regulation has been put in. And I'll be honest, it's painful in the short term. It's painful. I'd love to have unrestricted marketing, but it's important for us to ensure that we are building a long-standing, legacy business. So I think it's critical.
I think, we had no choice but to be proactive and, enforce some collaboration. But now, hopefully, with the clarity that's coming out of US, which is quite certainly an agenda setter when it comes to the rest of the world. Even though crypto is global and there are local markets and local policymakers, I think, as you say, a lot of people look up to US as agenda setters. So that's definitely positive. What's next for 2025? Do you guys have any big narrative that people should watch as we are going into the new year?
I mean, there's a number of narratives that people have been interested in and that have been getting traction. I think DePIN is a very interesting thing. DePIN is decentralized physical infrastructure networks, so bringing the benefits of decentralization into things like mobile networks or other physical infrastructure networks out there. A good example is Andrej, which gives you cheaper internet through something similar. So I think that's a very interesting trajectory. I think there's a number of other things. People are very interested in meme coins. I think that stays for some time, if not longer. Especially with exchanges, like major exchanges now starting to list them. There's going to be a lot of interest in perps. I think every major exchange is focusing on perps, given that perp volume is much higher than spot volume. Lending's going to be a big one. I think lending died in 2022 in a big way, and it's come back very meaningfully this year and continues to grow in 2025 and beyond, especially as traditional finance comes into it. Cantor Fitzgerald announced $2 billion in Bitcoin-backed lending in June or July of this year at Bitcoin Nashville. And after speaking to them, I actually learned that it's actually $10 billion over the next 4 years. So that is going to be a significant part of liquidity in the market. And as credit grows, there's more trading operations and beyond, because everything is cyclical, right? So I think that's a very interesting trajectory for us moving forward.
I think for me, I'm going to focus on accessibility as our narrative for 2025. And I say that through the lens of we have to put crypto and blockchain in the hands of more users in order to be able to really penetrate and get to that point of mainstream penetration. Because at the moment, we still are very early. So whether that be through optimized UX and UI as an exchange, that's something, our direct competitors aren't our biggest competitors, it's the indirect competitors. So that's critical, whether it be through a proliferation of more Web 2 and Web 3 partnerships. We just announced one with the department store in France, Printemps, where we did an integration with Binance Pay. Small, relatively, it's like 20 stores. It ended up getting one of the highest reaches in terms of press and community sharing among mainstream audiences, because they were like, I can use this. It's like, makes my everyday easier. And I think, also what I've just been blown away by in the last couple of months, I spent 20 years, aging myself, but I spent 20 years in media, marketing, entertainment, and there was a lot of doors that closed to me 2 years ago when I joined, saying, we're never going to work in crypto, we're never going to do this again. Last 3 months, that's all changed. It feels like we're suddenly on everyone's speed dial, whether it be sports, whether it be entertainment, fashion, again, I'm happy about that. I don't hold grudges, about previous, but I think that's really important, because those type of, using those partnerships as ways to share narratives and show use cases and build more meaningful stories around this space. And I look at this from users and marketing is going to be critical as we look to 2025.
Yeah, and I think for me, it's whether asset prices, speculation on tokens translates to direct participation in these markets, right? So like something like Chainlink going up 500%, that is a project that lives to bring data on chain for actual products that live there. If none of that happens, then that was just speculation, right? So it's a question of whether these price upticks are a precursor to actual usage that make them worthy of that. And we're looking, and kind of for us, that boils down to just on-chain volumes, new applications, new financial activities being conducted on-chain, things that are actually novel, and people using them. And kind of the north metric, I guess, would be DEX market share versus centralized exchanges, right? Do people pull off their assets and put them to work outside of traditional financial architecture?
That's right. And I think, Himanshu, I must ask you, because you've mentioned DePIN, how about apps? how about applications, right? That for people to use to actually, because we've been talking about UX to make sure that this is usable for like everyday users. But deepin has been a trend, and I think it's like a growing trend. But I keep hearing that we don't have enough people building applications. Do you think that's going to change in 2025?
Is the question, are people going to build more apps around deepin? Yeah, I mean, I think it's a natural progression, right? As the protocols gain more traction, there's going to be more applications around them. I think we're very much in the early days where no big there is no big deepin project. Helium is being touted as one, but it's still relatively very small. It's primarily available in Mexico. And Rena is also still very small. There's not that many other big ones that I know of. Maybe you guys know of more. Yeah. But I think we're in the early days. And with deepin, it's a very interesting concept because that brings in Web2 users. It's something that they can understand. They're abstracted away from the crypto side of it. Yeah, they get the rewards. But they get the benefit of usually cheaper prices for whatever service or product they already use. So I think it's going to open up a whole layer of other applications around them that we don't even know of today.
Yeah, I think it has to be for the right thing. So just, I think we defined it previously, but deepin's kind of, there's this thing that exists that's provided by a big company like wireless coverage, and I'm going to create a community-owned and maintained one, right? So we're all going to chip in, we're going to bootstrap a new network, and we're all going to have a stake in it. I think the question of how many are going to win out is like, what things are actually meant to be collectively owned? I don't need a collectively owned Uber. I like my Uber, right? I don't need that. But if there's something that I'm afraid of a centralized, or actually the thing can be cheaper when we're all contributing, then it makes sense. So it's going to be a question of what that is. I think, like, we just backed one that's global data scientists basically contribute to optimizing algorithms. And the idea is that that mine hive is going to create outcomes that are better than just one company hiring people, because these are people, scientists, this, that, contributing. And that in time, what they produce is going to be worthy, and someone's going to come, big enterprises, and pay for it. And all the people who were token holders early have a stake in that. I think that makes sense, right? Like, a lot of smart people can make something great, but I think it's just choosing the spots, right?
Interesting. Is there anything, and I guess that's my last question, we're running out of time. Is there anything that's really surprised you this year in terms of you didn't anticipate that happened in this past year?
I don't think anything surprises me about this industry
You've been
anymore.
in crypto for long enough.
What I've been excited by is the shift in narrative from what was a very negative, very focusing on what I would describe the clickbait negative stories that drove so much of the narratives around crypto and blockchain about the transformation in recent months. I think that's been extraordinary, and then how that has ignited retail interest, it's further cementing institutional interest. I think that's been exciting. But the resilience of the community, I think this community is one of the most resilient ever. I think none of that surprises me, but I think that the shift and how quickly just a couple of little, political, regulatory, innovation, changes merging together can create that momentum is pretty incredible.
I think speaking of narrative, something that's very interesting to think about, maybe a bit surprising, is how short people's memories are.
Yeah.
The same people who were naysayers 9 months ago are now all in. And for good or bad, but at least they're all in, right? And people's memories are very, very short. So as quickly as things change, people change with them.
Yeah, we did an exercise on the team about how many times tier 1 publications had said crypto was dead.
Yep.
And those same publications are now saying, Bitcoin's the future. And that's across everything. But, again, we can't hold grudges. It's all part of building an industry. We've got to move forward. But, on your point, I think what's going to be incredible in this next period is that merging of blockchain and AI. That's some of the innovations that I think are going to help set that up more.
Lovely. Well, I really enjoyed that conversation. Thank you so much, guys. Anything to add before we go? I was just asking if you have anything to add before we wrap up. No? Okay.
Thank you for coming.
Yeah,
thanks,
so
guys.
Coming.
And
give yourself a clap on the back.
Should we do the picture?
blockchains at the speed of light. Please welcome moderator Abraham Eid and his panel, Luigi Di Maio, Ada Vaughn, and Liron Heyman.
Okay, good to go? Nice. Hey everyone, how's it going? I'm excited to moderate this panel, Abraham from the Block. We're going to be talking about blockchain, scalability, payments, and just real-world applications. I'm joined by Luigi from Ava Labs, Ada from Stellar, and Liron from Starkware. If you guys want to maybe just introduce yourselves really quickly, just kind of like what you do at your respective orgs, and we can kind of start with some questions. Cool.
Sure, I'll kick us off. Hi everybody, my name is Luigi Di Maio at Ava Labs. I hold the COO role there. I've been in the company for almost 4 years. Avalanche is basically a blockchain of blockchains. It's allowing people to deploy their own L1s as blockchains, but also focused on scalability horizontally, while also improving on the vertical scalability, and that is basically single chain performance. A bunch of different use cases that we're focused on. I'm sure we'll get through it in the time for this panel, but excited to be with you all in this beautiful city.
Hi, I'm Ada Vaughn. I lead DeFi at Stellar Development Foundation. The foundation is tasked with growing the Stellar network, a layer 1 blockchain for real-world use cases and payments.
And I'm Liron Heyman. I've been at Starkware for 3.5 years. I lead up the CEO office there. We've developed Stark Proofs, which is the leading technology with zero-knowledge scaling. We think we're the leaders there for scaling Ethereum and also now Bitcoin. And that's what we're building. We're building a network called StarkNet.
Awesome. Thank you, guys. So today, kind of on this panel, we're talking about, as I mentioned, kind of scalability overall and how it's evolving to meet real-world demands. We constantly hear about how scalability has been sort of the biggest bottleneck overall the past few years, but I think we're finally getting to the point where, we're able to accommodate real-world use cases at scale. So, we'll examine initially what your technical approaches have been thus far, and sort of how that has, evolved over time, and what kind of went into the design decisions early on to accommodate for scalability long term. So I'll start with you, Luigi.
Yeah, sure. Avalanche, I think, launched initially in 2020. The vision from the very beginning was always many chains acting and feeling like one. So previously, there was something we used to refer to as subnets. And those are basically different blockchains within the entire ecosystem, all sort of coordinated by the primary network. Those subnets have recently been rebranded to Avalanche L1s, and that is in conjunction with a new upgrade that's going live on December 16th. And that basically reduces the cost of launching an Avalanche L1 about 96%, and makes them much more available to the market. So basically, from this roadmap, we started with horizontal scalability, which is sort of increasing the block space by allowing others to deploy their own chains with their own custom rules for their own set use cases, whether that be gaming, institutional, DeFi, et cetera. And we are also very involved and focused on vertical scalability, which is single chain performance. So many people who ever have interacted with Avalanche probably know it from the Avalanche C chain. There's a bunch of different DeFi apps there, et cetera. And we've been trying to scale that, with a variety of approaches. One is the Hyper SDK, which is our own SDK built in-house. We've been running that on testnet with different benchmarks for about 100,000 TPS. That's one approach, non-EVM based. But we also have internal efforts that are scaling the EVM directly. And so we'd like to sort of improve single chain performance while allowing others to deploy their own blockchains.
Yeah, at Stellar, I mean, we obsess over scalability. We really have been kind of singing this song since day one. I think we're probably the oldest, technology sitting on stage right now. And so from the inception of Stellar, we were obsessed with enabling real-world payment use cases, especially in geographies where the traditional financial system might be letting people down or causing friction and for cross-border payments. So we think about scalability as enabling the kind of cost and timing that's needed to enable these real-world use cases. I think, with all due respect, I think like the gajillion TPS numbers. Like, I don't think that the average user cares if their transaction is completed in like 1 second or 2 seconds, or if it costs like a penny or 2 pennies to transfer 100 euros. And so we really index to these like kind of metrics that impact the real world and the end user.
I was just saying before, it's nice that there's diversity with the different approaches to scalability here. So on our side, the belief is as follows, that blockchains have self-custody, decentralization. You don't need to trust other people. So as these blockchains scale, you want to be able to independently verify, not have to trust. And therefore, ZK technology, Starks more specifically, is what unlocks that, because for those who don't understand, or not familiar with it, you can verify execution of computation through a ZK proof exponentially faster than re-executing all of the computation. So you now use this technology as a building block to verify blocks in chains, and therefore you can scale that way, because running a node is incredibly cheap. You can literally be running a node on your phone that every 12 seconds is verifying a block, and scale that way because the security comes from verifying the proof and not necessarily generating the proof, because you can't generate a false proof. It won't be verified. That's what we do.
That's awesome. I think like there's a common theme there where all of you mentioned some sort of modularity to handle scalability overall. As you guys know, there's a current meta where, are we going to launch 1 million app chains for every specific use case, or are we going to sort of perform more of a vertical scale, like sort of approach? Curious what your guys' thoughts are on that, like at a high level.
Yeah, it's a great question. I think part of it is really where you are on the adoption curve in a lot of ways. I think, the initial approach of many chains is a function of regulation in a lot of ways, where not, certain institutions or different types of enterprises aren't comfortable deploying on a public chain. And so they decide to roll their own chain, for lack of a better term. And in addition to that, it's also a scalability issue, right? Fee isolation hasn't been done very well on a single chain so far, and because of that, different use cases have migrated to their own chains. For example, I think like Pyth started on Solana, ended up moving to their own chain. How many different Ethereum apps have moved to their own chain? A lot of this is probably to solve the fee isolation, but there's also an economic problem where too much value gets exported from that application to the public chain, and they start to look within at a certain point, especially when they achieve a certain level of product market fit. So I think there is like sort of this balance of, at the current stage we're in as an industry, people will prefer their own chains, and then if the technology is able to sort of scale, not only in terms of TPS or bandwidth or fee isolation, then people may migrate to public chains, obviously. So I think it's sort of, it'll change over time, but for now I think people will prefer their own chains if they have a certain level of product market fit.
Yeah, it's an interesting question. I think we work hard to serve the needs of the applications that are already built on Stellar and the ones that are coming, right? So like this year we rolled out Sorb on smart contracts. It was something that was about scaling to DeFi applications in a way that Stellar never could before. And so we think a lot about these like different use cases and how we can meet the needs of the market that exists now. For example, like, as a blockchain that's been around for 10 years, it's like, does a current like validator really need to copy information about a crypto kitty that was abandoned in 2018? But like that data's out there. So we've come up with solutions for this. Like we recently rolled out a solution called State Archival, and so this allows like just the active ledger entries to be managed by the nodes, and then there's like a place where they can go and retrieve archival information for an older transaction. But it dramatically improves efficiency, and so it keeps people building on Stellar. I mean, that's obviously our goal, because we look for solutions to problems like that and try to prevent them from rolling their own.
So I think app chains will continue to proliferate. That's what the teams want. It increases scalability and stuff like that. I do want to, perhaps to make this more of an interesting thing, call out like. We're here to provide self-custody, decentralization, security, and a lot of these app chains, you end up running an optimistic roll-up without fraud proofs, not even by a centralized entity that comes with the broad proofs. There's no economic security at all. Nobody's actually put up a stake for this like layer 3 optimistic rollup app chain. Is that really what we want to build in the industry? So I do, perhaps to answer the question a bit tangentially, and by the way, you can call out ZK rollups, including Starknet with some of this stuff as well. Make sure that we're here for the right philosophical reasons. When we do have these app chains, are we providing self-custody, security, false transactions, censorship resistance, et cetera, that we're all really here for, which we do not have today?
I think it's a great point, and I think in a way to piggyback off of that, do you guys believe that sort of scalability has become a meme in and of itself, and that's sort of like there's a financial incentivization to say, we can do this much TPS, we can do this, we can do X, Y, and Z, but to your point, ultimately, it's maybe sacrificing on other aspects that are critical for those real-world use cases. So it's almost like a chicken and egg where we're financially incentivized to chase scalability, but we're not necessarily meeting the other needs that are
I can start. I'm not happy with where product market fit is in the industry. I think stablecoins are amazing, but there were all these memes on Twitter last week, like with Pump.fun with some like meme coins going bonkers there. Like, that's not really why we're here. It's good. Maybe it's part of the story, maybe it's part of the journey, but it's not the final stop in that journey. So I hope things do mature. We've got a way to go.
Well, I think at the end of the day, it's all your fault, Abraham, right? Because it's all about headlines, like the TPS number or the this or the that. It's all like, it's an environment where everyone's trying to one-up, another tech, and sometimes like it's up to us to go back and say like, well, what value is this really delivering?
I think it is a meme, but it is a metric. I don't think TPS is like a great metric. There's a lot of ways to game it, frankly. But scalability of a single chain is definitely something that could be measured, benchmarked against, and it should be something that every single chain is striving for. It has been clear from not day one, maybe day two with CryptoKitties that you mentioned, that EVM is not scalable today on its own. On any single chain, it cannot handle multiple different use cases that are all getting loaded at the same time. And so, with the emergence of things like Solana, Sui, other monolithic chains that have taken different trade-offs, it has been clear that the market values that. It values taking a differentiated approach to scalability. And I think that a lot of people in the industry had a very religious view, maybe in a lot of ways, to just the EVM or economic security and these kind of things. But the reality is this is technology. This is technology that needs to continue to grow at a very rapid pace in terms of scalability and the amount of bandwidth and lower latency that can happen. And so until teams are constantly pursuing that with a religious focus, I think that they'll lose because somebody else will do it.
I think to that last point, you kind of just mentioned some of those elements, but ultimately, when it comes to scalability, maybe it's not TPS, maybe it's the wrong metric ultimately. So should there be a sort of benchmarking system that we should adhere to, like across the industry, and what might those metrics be?
I would love to see the industry, there to be like a sort of a board, across the industry that actually looks at this stuff, measures it, benchmarks it. I think as a media company, that's probably a great business to be in, being a, objective third party looking at benchmarking different systems across the same standards. I think people would be really interested in that data. It's hard to do, and I think that's part of the challenge, but it's actually really important in a lot of ways because people can game their own benchmarks a lot of times, right? If somebody puts out a high TPS number but doesn't give you the script to run it on your own node or doesn't allow you to run it across multiple nodes geographically, then that there's probably something wrong with the benchmark.
I think that the advent of a more composite benchmark is probably needed. Like the TPS is so unidimensional, monodimensional. It's just like all you see is one thing. And it may or may not tell you about whether that chain is suited or that technology is suited to what you want to do. One thing I'll point out and give props to one of our partners is Dune. Actually, if you saw Dune's keynote at DevCon at their conference, they were talking about a new kind of composite metric that includes volume, includes something. And I thought it was pretty smart, actually. And like you said, they're not totally impartial. Nobody's totally impartial. But I was interested to see that, and I'm interested to see if it gets traction.
Good question. TPS is not the right metric because what's a transaction? What's a second even? But no, like ERC20 transfers. I'll give you an interesting anecdote. With us, we have account abstraction, so you have many transactions in a single initiated transaction. So we measure user operations, which will include all the individual ones. And also because of the account abstraction, what we saw is even as our TPS, observed TPS on mainnet declines, like it's down like, if it's down 90% from the peaks, the actual Cairo steps, which is our unit for provable, like how much we're proving, how much, think of it as executed computation, that's actually at all-time highs. So we actually have like these, by an order of magnitude, more complicated transactions that each user is running, but in TPS it's not reflected. So L2 Beats is a good like independent party comparing different L2s, but it's scaling in general. They now look at user operations. Internally, we look at amount being proven. And a bit of a slightly different answer, but another important metric connected to the previous point that I talked about is protocol, not to the blockchain revenue, but app revenue. Because that's actually like users paying for like a service, not just for block space, but for a protocol providing them a service.
Yeah, I think I've seen fee revenue incorporated as well. We have a similar, I mean, even all L1s are not created equal either. We have a similar kind of conundrum with operations versus transactions on Stellar as well because of the structure of the blockchain. So, you know, when you look, there's really no apples to apples comparison because a transaction to you is different than a transaction to us.
It's cool to hear that there's a kind of a consensus that, yeah, there should be something that's more unifying. Otherwise, we're comparing apples to oranges a lot of times. Yeah. A little bit more on the human side, I think that we hear about architectural decisions in a Twitter post, you know, after the L1, the L2 has made that decision. We don't really know, like, sort of, like, what does it look like internally, like, in the war room for you guys? You guys like a democratic process in deciding on, like, architectural differences, you know, what wins out? How do you guys approach that at your respective orgs?
I was going to say, you should go.
Go ahead.
Me? I didn't fully catch the question, but like, how does like the war room look like?
Yeah, like how do you guys kind of come to consensus in a way?
I'll tell you the like, there's this existential question about what is the long-term equilibrium in the industry. In one world, you've got the entire internet moving. I can do this with these fancy buzzwords, but like the internet, the whole international payments moves onto blockchains. In another world, it just stays in this niche of like stable coins and meme coins. And there's just this existential question of like, where do we see the app layer heading in the future? It's not just us specifically, it's for the entire industry. And we give a lot of thought to that, the go-to-market and the app side of things. Yeah.
Yeah, I mean, Stellar Development Foundation is almost like close to 200 people now, right? So it's a lot harder to make decisions the more, you know, the kind of broader base you get, but you also get a lot more inputs. And so I think the results of those decisions are generally better and more powerful. So it's a combination. I mean, there's very much a strong leadership, like love our leadership team and our CEO and the direction that the organization has gone since she started, which I think is like 5 years ago now. And so some of it comes from the top, but there's a lot of mechanisms for bubbling up from our ecosystem as well. And I think putting developers at the kind of front of the line in terms of their needs, creating mechanisms to listen to our developer community and having all these ecosystem events, like the care and feeding of developers is absolutely a priority for us. And so making sure that they have a voice and we're listening and that we're serving the needs of that population. I mean, generally the market will tell you, you know, what they need to build the applications that are meaningful.
Yeah, I think there's some similarities there. We have what's called an ACP process, the Avalanche Community Proposals process, that allows people to sort of comment or post anything they'd like to see. I think what the reality is that these are super complex systems at the deep engineering level, and it isn't common to find people like who enter the GitHub and post something that will dramatically move the code of an actual protocol. Like the core engineering team is usually the ones that will decide at some point in time if something new gets added, although they'll do it with all the feedback of what the developers are looking for. But the ability for somebody to come in and contribute in deep protocol stack is not the same as like contributing at a Solidity smart contract level. There's a lot of context needed. The code bases are huge, so you just don't see that. We would love to, but it's not common. So I would say, like, there's feedback loop comes in, and then decisions have to be made based on the architecture and technical trade-offs.
Yeah, every protocol release of ours goes through a community approval. So it is very much like a, two-way communication between us and the stakeholders.
It's awesome to hear. It's not like an echo chamber where you're just only listening to yourselves, but you're listening to the community first, and then you're deciding. Transitioning from scalability into real-world use cases of that scalability, idealistically, that block space is used by applications. So curious for each of you, what are you seeing in your ecosystem are like sort of the near-term uses of scalability for certain application types, certain vertical types? People talk about payments a lot. People talk about gaming. What are you guys seeing on your end, and how do you sort of support your developers with those?
Yeah, I think there's a lot of different things to talk about here. I would start with gaming, specifically to Avalanche. We've sort of seen a lot of adoption on that front. Off the Grid's a game that probably a lot of people have sort of played lately. It's a PS5, Xbox game with the blockchain in the background that nobody knows about. 11 million real users using it. I've played it a lot. I've actually had a lot of my friends who never touched crypto tell me, like, oh my God, I can't believe this is on a blockchain. They're owning their own digital assets, which is pretty cool to see. I think, like I said from the beginning, everything has to move in stages. And if you've been here long enough, you've sort of seen that happen. And so I think that's a really great use case. We have a bunch of other games deploying as well. I think it's a perfect use case for crypto, not only because of the demographics, but also because owning your own digital asset that you spend hours, months of your time investing in is actually pretty unique in a lot of ways. We're also seeing a lot of adoption on the institutional front. That's always been a main core use case for us, albeit slow. I will say, that's something that's always been sort of blocked by the regulatory atmosphere. I always tell a story about the week after FTX collapsed. We had been working with a major bank for a long time on a use case, and they basically canned the whole thing a week after. Now that's starting to open up again, which is really cool to see, and that's basically improving the financial rails across the world. And then I would just add that there's a bunch of activity happening in the DeFi space on Avalanche as well.
Yeah, I'll answer. There are obviously many use cases for a blockchain, and Stellar's an open network that people can build whatever they want. But the things, obviously I'm biased because I'm in the DeFi space. The things that I get most excited about are these opportunities to build and preserve wealth, especially in countries where their home currency is maybe unstable or unreliable. And so in the DeFi space, it's just absolutely exploding right now with the advent of smart contracts on Stellar this year. So we're seeing protocols that are doing amazing things like embedding other services. So you have let's say a classic fintech app that's based on Stellar that's been up and running for a while, and then they offer their users yield from another Stellar project that has liquidity pools, or they have a mechanism for generating yield. And so the users of application number one don't really notice that they're interacting with a new thing. Like, they didn't have to make a hard decision or get a new wallet or do anything other than click a button and say, yes, I'd like to earn 7%. And so those kinds of applications are really exciting because they just enable ordinary people to access crypto. I feel like that's like the holy grail, right? Is blockchain that you don't notice, blockchain that isn't hard. And so, like the example I just said, this like Meru wallet in Mexico connecting to Blend, which is a DeFi application, and the users are just having an improved experience. So that's really exciting. Stellar is number 2 for real-world asset tokenization. You can see us, our ranking on rwa.xyz. And so, we've definitely been very regulation forward and crossing all of our T's and dotting all of our I's from a regulatory standpoint so that institutions can get more comfortable. But yeah, it doesn't happen overnight. So we're excited. Especially in the DeFi space, it's just there's so much innovation going on right now.
Good question. I think might have talked about this earlier, but on the stablecoin front, there's a lot on the UI UX to improve. It's clunky to use a wallet today. The browser extension on your desktop most of the time. There should be something seamless on your phone with high security. So with account abstraction native to Starknet, you can like use Face ID on your phone to sign a transaction, and that's baked into the protocol. It's not like a centralized party verifying that first. The signature that your hardware signs when you get the Face ID, that itself is being sent on chain. You can get really creative with that and really get stablecoins globally. On the DeFi front, yeah, we're really bullish perps. We just think there's like a good product market fit. You understand where the revenue is coming to the exchange. You understand why there's a demand for it. And if you do it right, you can get self-custody, censorship resistance. Like we powered DYDX v3 with StarkX and did over $1 trillion of volume there. And it's not Starknet, but it's the most, I think, secure chain out there because you get censorship resistance and self-custody there. On the gaming front, it's interesting how things evolve. I think that just like looks like there's like this niche of super passionate on-chain gamers that the rest of the gaming community wants to distance themselves from. I went to Gamescom, and the first thing everybody said, even without knowing my job, was, we're not interested in blockchain. But that there is more of a shift in the past 12 months, a good shift to on-chain gaming, not just like, oh, you have these assets on-chain, but everything else is centralized, and what are we actually gaining? It's a long way to go, but that's something we're super interested in. We've got a lot of teams in the ecosystem, Dojo, Cartridge, a bunch of others, Ethereum, building there.
Beautiful. So it sounds like obviously DeFi, gaming, and just sort of general TradFi use cases. I think specifically on the TradFi side, we're all wondering, how do we onboard them in? Ultimately, it's you guys that are having conversations with these TradFi providers. You're figuring out sort of what is the UX needed, what can you offer in terms of scalability to be able to port over X amount of users. How do those conversations go? What are some of the learnings that you guys have had over the last year in working with these TradFi orgs and doing POCs and potentially like full-blown use cases?
Yeah, I mean, a lot of burned brain cells might be the way to start. It's a very exhausting process. You have to educate. It takes years. They have their own sort of vested interests to protect in a lot of ways. And in a lot of ways, they're sort of, it depends where you are, obviously, and TradFi is a very loaded term, but I think I'm talking more about capital markets. And the capital markets and really like the banking side, I would say like they're grappling with the fact that in some ways this technology removes some of the businesses that they're in, while also understanding that there is a real value add to this technology for what they're doing on the operational front. So, they are an intermediary. Like that is their business. And a lot of what this industry brings forth is being able to transact value without intermediaries. So that's a discussion that is always kind of a back and forth that takes time for them to realize what they want to do in the space. But there are very key areas that they can participate. We've done a number of POCs with, we did a few with JP Morgan, which was basically asset tokenization. I think one app that they built was called Crescendo, which basically allowed people to invest in alternative assets and tokenize those and reduced, I think, I don't remember the exact figure, but reduced a lot of the operational costs by a significant margin. We also did a POC with Citigroup that was foreign exchange RFQ, which is request for quote. It's a way that people trade on Wall Street. And so that was another great use case. And then more recently, we were highlighted in a JP Morgan paper on privacy. And I would say privacy is probably one of the more important and yet overlooked parts of the stack that haven't matured yet. I think for payments to get truly adopted, we will need a higher level of privacy. Otherwise, people's complete data is transparent for anybody to see. And I don't think that most people will accept that. Probably Venmo's transparent enough for a lot of people, but I think we can do better. And so that's a solution that if you really want payments to go to the next level, I think you'll have to see privacy sort of level up.
I think our biggest Achilles heel as an industry has been a lack of understanding of where blockchain is actually needed. And so, I mean, I came from the fintech world and sort of TradFi world, and there are a lot of things that work really well. Like, does the average U.S. citizen need a dollar stablecoin? We have pretty fast payment rails. I can Venmo you. I can, Apple Pay, Chase, whatever. And so there's not really a need for it. So like getting the banks excited about something that they don't need is a losing battle. And I think we tried to do that for a while in our industry because we were just so in love with our own tech. But now I think we do see, we've started to become better listeners, I think, and we've gotten embedded in some of these organizations too, like, Franklin Templeton's fund, like they tokenized their Benji, product on Stellar. We were like, and they just did it. Like, we didn't have to convince them. We didn't have to like argue, like say, go do this. Like they needed it, they wanted it. And so I think like being good listeners and being ready to answer the need in an elegant way is our secret to success. Cross-border payments, bank-to-bank settlement, anything that's got T+2 settlement on it, like that we can improve. Like these are meaningful use cases. One thing that we're seeing in DeFi on Stellar right now is this sort of PayFi subset of DeFi, PayFi use case where you see payments, like a stream of payments. Like I need, let's say I'm operating a cash machine, essentially cash machine business in Mexico, and I need to give out cash, right? Like I need that cash. And so I'm getting paid from banks, but it's taking a while. Like there's slowness that can be resolved with crypto. And so financing that stream of payments, which is virtually risk-free, right? The transactions are just needing to happen faster than they do. These kinds of, invoice financing, like credit, buy now, pay later with crypto type products that can really be amazing in emerging markets where they don't have the TradFi mechanisms to do it. That's where I think we can really improve people's financial lives.
Yeah, I couldn't agree more. You always need to work out what the problem is, and a lot of these TradFi teams don't even know the problem. They just know it's this place they need to explore. Like Luigi can probably identify. You speak to an agile innovation unit in a bank. Like they're not agile, they're not innovative. It's just like such a waste of time. And but having said that, there's a huge opportunity here. One of the most bizarre experiences I had at was Visa, like out of nowhere, published this paper on account abstraction on Starknet without even talking to us, and because they just talked about how it can solve recurring payments, self-custody for people who don't know how to use stored private keys. So there is definitely this hunger to work out stablecoins at scale. The other area, this is less a blockchain, more like regulatory, but like stablecoins, all the yield of the interest is going straight to Circle, Tether, etc. And there are a lot of TradFi teams trying to sort of capture that interest themselves within the regulatory framework that they're allowed to do that. And tokenization beyond that, we're seeing the early stages. Just curious how it plays out.
It's very interesting. I think to your point, Ada, what's cool about the space is that ultimately they get to, Benji, Franklin Templeton just gets to deploy on their own, and you just find out about it, oh, wow, that's great. We built the infra to allow for this to happen. I think there's also an aspect where, from a payments perspective, for instance, do you go after certain corridors in emerging markets that have these gargantuan fee structures that are just not feasible, and you just see it as a low-hanging fruit? Do you kind of schemorphically go after those markets, or do you just ultimately build the infra, build the scalability, and ultimately they'll come? Is that how do you guys approach that sort of as an org?
Yeah, we definitely do. We look to support projects, and that's, again, as part of our ecosystem and our whole strategy of giving access to funding is finding people who are boots on the ground in these places. They know the pain themselves. There are amazing examples of these sort of payroll use cases in emerging markets where people need access to funds faster. They literally don't have a bank, these sort of bank deserts. So yeah, there are dozens and dozens of projects like this where we tell the story of a decaf wallet. We have a great case study on this wallet called Decaf. And so we tell the story of Decaf, and that's happening in Latin America, but somebody in Africa sees that story and they're like, oh, well, I have the same problem. And so there are a lot of these sort of bootstrapped projects that we support that leverage blockchain in very intelligent ways. And I think it's kind of do you remember, okay, I'm going to date myself here, but do you remember mobile phone coverage maps from, whenever you first got a phone? And it was okay, this part is, it's 3 blue dots over here, and then it's oh, there's an area around Chicago, where I'm from. And then eventually it just went boom, all color, right? Like you could go anywhere. And that's kind of how we see like the adoption of networks like Stellar is like there's obviously a network effect. The more people do it, the more powerful it is. And so there's like these, right now, I think we're kind of like blotches, right? Like we have a blotch here and a blotch there, and they're getting like really good value in this tight area, and like it's starting to fill in the gaps.
Beautiful, beautiful. Yeah. Any thoughts?
We're super bullish also payments on emerging markets. We've got somebody in the ground in Africa, like we're talking to early stage teams there. Just, I think governments don't understand how this privacy being an Achilles heel to our industry is actually, like, they shouldn't be worried about AML and compliance, all stuff. Like these things, stablecoins are traceable in a good way, meaning you save the hassle of physical cash, like all the stuff that we're trying, like, it solves a lot of issues, and it can be really, really empowering to these people, and we're super bullish that, yeah.
I would just add that, you know, to answer your original question, I think BD is incredibly important, business development as it relates to blockchains. You know, it's a very competitive market, the blockchain and, you know, L1 space or L2 space, for example. And so if you're not out there, you know, proselytizing what you're doing and finding new use cases and interesting entrepreneurs to build on the chain, then I think it's a very naive approach. So that's definitely a key focus, entering different emerging markets, finding the right builders, finding the right existing businesses that can benefit from using this technology is the right approach, always.
Beautiful. I think to round out with a few minutes to go, I'd just love to ask you guys, somewhat antithetical to the title and the topic, you know, what elements, what things should we be talking about more than scalability, sort of in the space, the next year, the next 3 years? Like, what is more important to discuss than scalability?
I mean, use cases, that's probably the most important thing. I think the industry has a very perverse incentive to not explore new use cases or not explore them enough, and that's probably been what's held us back the most. People get rewarded handsomely so financially for not, you know, for deploying the same thing over and over again, or for deploying things that actually don't move society forward too much. So I think the industry needs to really figure out from like a capitalism perspective how to actually move value into the places that generate true value.
Yeah, I think if scalability was yesterday's word, I think usability is today's word. From a standpoint of the way we interact with these digital assets, it's still very clunky, and we all, like, probably, everyone in this room has a digital wallet or multiple digital wallets and has like no problem interacting with these digital assets, but we're still in the minority worldwide, and like the digital assets are still just a tiny, tiny subset of all the things that go on financially in the world. And so I think making things like really, really usable should be our priority going forward. I saw a guy with a sweatshirt yesterday that said, and somebody else's tagline, now I'm advertising some other company, it said, onboarding your mom since 2017. I don't know whose tagline that is, but it's brilliant. It's like, yes, I want my mom to be able to use these things, and that's when we get like real value.
Yeah, so use cases UX. I'll just repeat what I said earlier. We have to hold ourselves to higher standards with security and the ethos to why we're here, like having centralized sequences for an indefinite amount of time. We should really hope in 3 years it's not here. Optimistic rollouts without fraud proofs. Why is that okay? Like, okay, I'm biased, but as an industry, why are we letting this happen? And I hope that next 3 years we return back to our ideology that this whole industry flourished from.
Exactly, decentralization. Yeah, I think we've chased scalability and we've kind of more or less figured that out. So now it's time to go back to like sort of more core roots. Well, I appreciate everyone listening in. I appreciate you guys for coming on the panel, and hope you guys have an awesome Emergence.
Thank you.
Thanks for having us.
Thank you.
Time now for our next Fireside Chat, which is hosted by George Calais.
All right, hello. My name's George Calais. I'm head of research at The Block, and I'll be joined by Anatoly Yakovenko, a founder of Solana and CEO of Solana Labs. Anatoly, thanks for joining us.
Hey guys, how are you?
Awesome. I don't know, can you hear the crowd, or are you?
Yeah, I can hear you.
Awesome. All right, everyone give it up for Anatoly. Sweet. All right, so we plan on using this. We only have 30 minutes here, but there's a lot we want to get into. A lot of things specific to Solana. Really interested in talking more about high-level architecture of Solana, some of the technical differentiators, even get into some of the things happening in the ecosystem. But also, I would love to spend a little time talking to you just about your experience running a large blockchain platform. And so I guess we can start there. Would love to hear a little bit more about the journey and really, I think what I'm most curious about is, as CEO, where are you spending the most time? Where is that focus, and how has it maybe evolved over the past few years?
Yeah, at Labs, we kind of have two big projects. One is the incubator, which kind of grew out of our function at Labs that we started with. And the other one is mobile. And the first one is kind of like, what am I supposed to do in a large decentralized ecosystem? And I kind of think of it as unblocking developers. So Labs doesn't actually build that much, but there's folks that join the ecosystem and they get stuck. They don't know where to find the docs. They don't know how to build their first AMM or how to use the token program. And a lot of those tiny little things we tried to unblock as fast as we could until the ecosystem started unblocking itself. And then we realized that we don't need to do that anymore. And that's been, like, I think the very interesting and fun part of the journey is kind of watching the open source nature of the platform start to really take off and create its own growth loops and things like that. So that gave us the room to go try other things and kind of take some big swings like mobile.
Got it. And I think that's really interesting, kind of hearing more about the balance of your vision and the technology you're building versus the ecosystem you're trying to cultivate. I think it probably makes more sense to start with the former. You guys took a really definitive stance on being an integrated blockchain. And I think it would be useful to start with just talking a little bit about the trade-offs of that decision and how you arrived at that conclusion to begin with.
How do we arrive there is probably easier to answer. When I started working in crypto, I didn't want to compete with Bitcoin because there isn't an engineering problem there that I could solve to make a better Bitcoin. I think it's pretty revolutionary. It's really, really kind of almost more like a miracle of history, so to speak. Like it is like a social experiment more so than an engineering one, even though it is also a very, very cool system from an engineering perspective. And the idea of a settlement layer and kind of what Ethereum was building was already kind of going in its own. And just simply based on my expertise, the thing that I was good at and the problem that I didn't see anyone solving was the execution layer. When you think of finance, you kind of have settlement, which is DT, CC, or whoever else. Like I don't know how many people in this crowd can even name the companies involved with settlement, but everyone can name a dozen companies involved with execution. So I always thought that execution was the more interesting problem and was the one that I had dealt with the shortcomings of in traditional finance. When I was a hobbyist trader, whenever I thought I had an edge, my data would arrive a little slower and my orders would get submitted a little slower to the point that I could never really exploit it in like a live trading environment. And I thought the open source volunteer run systems that these blockchains could enable would allow all those barriers to at least be solvable by an engineer that is on an equal playing field as a professional trader. It's not that those problems don't exist. They're still hard, but you would have access to the entire stack you know exactly where the data is flowing, where the bottlenecks are, and you as a hobbyist, you can go put in your blood and sweat over the weekend and kind of solve those problems and maybe get an edge and earn a return. So that to me was kind of the really, really cool part about it, was that we could build the Linux version of execution. And that guided a lot of our design decisions and things like that. And for me, that meant we had to solve problems that developers couldn't solve over the weekend. You know, kind of like the slogan in the Solana ecosystem is you have to chew some glass. And the reason for that is that we really, really wanted to solve the performance issues in the network, and we didn't focus on anything else. So we really wanted to unblock devs that want to, you know, send 1 million transactions per day, do something crazy that trading systems require, but would be impossible anywhere else. And if we can solve those problems, and that opportunity is important enough to a developer, they will figure out how to build the best SDK and deal with the Explorer and all this other stuff, because that is solvable by, you know, just about any developer out there.
That makes a lot of sense, and I think Solana is you know, very reputably known for its advancements in pushing blockchain performance forward. How do you think about that in the context of, you know, securities and you know, other kind of things like decentralization that blockchain's optimized for? People have been using this blockchain trilemma for ages, and I think there are potentially some language issues with kind of all the assumptions that might have. Like, do you think that is a relevant way of assessing blockchains? What do you guys use internally to?
Yeah, it's not a bad way to think about it, because what I think blockchains are selling is reliability. And when you think of decentralization, it's really fault tolerance in a way that is hard to quantify academically. It's like, did my service provider just like get burned down in a fire? That kind of level of fault tolerance, right? That you don't really typically analyze. When you have enough redundancy in the network, you start getting into those levels of reliability where things are impossible to happen that could happen on AWS even, or even across 3 different cloud providers. So that level of reliability plus the ability for users to run untrusted code and then cranking performance, these are kind of the really, really hard problems. Like constrained by reliability and the ability to run permissionless code, how fast can you go? Becomes kind of this problem. Yeah. So it is a really, really hard engineering problem when you think of security first and then permissionless second, and then performance third. But you know, like, we are focused on performance because we're always trying to increase that final lever and push it as hard as you can without breaking the permissionless nature or the reliable nature of the network.
I think that makes a lot of sense, and it reminded me of something you mentioned earlier, actually, when we were doing some blockchain research on the different performances of different chains, and you made a really interesting point around you know, how your development culture can evolve and exist in the context of hardware developments, where, you know, I think a lot of blockchains and you know, I think Ethereum caught a little bit of flack for their 5-year vision that they posted a couple weeks ago, and you made a point around Solana being able to needing to just keep up with whatever the fastest hardware is. So how does that kind of create unlocks for you guys over the long term?
Yeah, I was working at Qualcomm kind of through the mobile booms from like the aughts to, you know, mid tens of the century, and in my experience, that process and kind of hardware was moving faster than Moore's law. Like every year we'd get a new chip improvement and a design improvement. So you had to write your software in such a way that you didn't need to rewrite it again next year. And you had to kind of think ahead and take advantage of the hardware that's going to be there a year from, you know, in the next release, not today. I was always thinking in how do we parallelize the system? How do we write the data structure such that code can flow without copying and all these other kind of like things that slow you down? Because eventually, whatever that performance bottleneck, you're going to have to go spend weeks debugging it and figuring out, and that like slows down releases and getting features out to customers and things like that. So also what I found is that exponential curve may feel slow in any given moment in time, but it's insanely fast in retrospect. And you can spend a lot of time writing really clever algorithms, or you could just get it to work on something that is going to have twice as many cores next year and not worry about it. So that was, I think, maybe the biggest difference between Solana and a lot of other ecosystems is just, given our experience, we were always thinking about multi-core and how do we take advantage of the hardware and more readily available bandwidth. And it's not that Solana hardware is expensive. It's actually like dropped in price. We basically haven't had to scale the hardware since we started. We started about $1,800 a month for a box. I think it's now about $350 a box on the network. So we haven't, in a way, like I'm almost disappointed that we didn't have enough demand to go keep the price of the hardware high enough to where we needed to continuously, bump the requirements. So we'll see. Like, I think with the cycle kind of picking up, it seems like the demand is much higher, and there's an opportunity now to go double capacity and then fix all the bugs that comes with that.
Right. And speaking of demand and stress tests, Solana, no surprise, has been highly used in this cycle and has been highly performant, whereas in the past there were some instances of network outages and a few performance issues in the early days. How, what changed either in the network architecture or the way you responded to bugs that kind of cleared the way for you guys this cycle?
We were just lucky enough to ship fast enough to have those bugs behind us. That's really like, I think like the challenge with scaling performance with multi-core systems is that you get into like really multi-dimensional problems. You can have like memory bandwidth bottlenecks that impact transactions throughput, that impact network performance, and it all kind of starts getting tied together. And one problem can have cascading effects down the line. And you can get a lot of stuff fixed in testing and kind of with synthetic loads and simulation, but it's nothing like mainnet with permissionless boxes that are, like, I wouldn't even say we've ever even seen really adversarial loads. It's that when there's an economic opportunity to behave in a certain way that's not the default, people will start exploiting it, and then they don't understand the cascading effects they're creating. They're just making more money, and that becomes its own kind of attack vector, which is really interesting to see and kind of unexpected. So in a lot of ways, I think shipping fast is probably the most important thing, and that allows you to figure out where your blind spots are in testing and build out that testing infrastructure and get more and more robust, but also fix the bugs. And probably the best example of this is we did not predict that we needed something like localized fee, like local fee markets and things like that. That was something that was really came up from watching the network load, watching how systems were failing, and then it becoming obvious that, oh yeah, there's multidimensionality here and we need to address it. We can't just kind of like throw an economic hammer at it. And it's even more, I would say it's even more complicated than most folks realize, because on the surface it looks just like multidimensionality across state. You have different hotspots, and that's like a kind of a nice, simple to understand database hotspot problem. But in reality, it's even more nuanced, because you have things like Jito, which is selling a very small percentage of the block with high reliability, and is actually 200 milliseconds slower than the rest of the network. So you have tiering across reliability, speed, and state. And these problems, I just have never seen anyone predict them in research, let alone have solutions for them. So I think just shipping early and fast enough and having those stress tests helped us iterate and get better and better.
Yeah, and I kind of want to double click on something you mentioned around the parallel processing. And I think it's funny that it's almost a blessing and a curse, because it allows for a lot more performance, but then obviously when something breaks, there's more complicated pieces under the hood to work with. So would you mind just walking through kind of the basics of the design of sea level?
Yeah, for sure. So most virtual machines and kind of the easy ones that you can build, you can think of a computer with one giant set of memory, like one set of kind of states or buckets that you can access, and a program runs that has exclusive control over the entire state. So it can do anything in the address space. It can go touch any piece of memory and change it and move it around. And this is how most CPUs work. And in the 90s, the way hardware companies would differentiate themselves is they would crank the frequency, or how fast you can do the single action, as fast as you can. And at some point, they hit a wall somewhere in the mid-90s to how fast the processor can get. They're still getting faster, but not at the same rate. And they realized that the only way to increase performance is to double these units, these cores or hyperthreads, however you want to think of them, that can do things in parallel. But once you add parallelism, you add non-determinism, because the result of core 1 doing stuff first and then core 2 is going to be different than 2 and 1. So when you switch the order of things, if you switch the result of the program, you have non-determinism, and that meant that you have to deal with those problems in software. You have to figure out how do you exclusively lock state to different cores and to different threads and things like that. And I would say 90% of people's software engineering time in systems is spent dealing with those bugs since the 90s. Unimaginable amounts of engineering dollars wasted on dealing with those bugs. So that's been both a blessing and a curse. And it's a blessing because increasing bandwidth is easy instead of frequency. When you increase frequency, you eventually hit speed of light limits. But you can always double the amount of stuff you do in parallel. Right. When you look at memory bandwidth, compute bandwidth, look at the back of your chip. If you still build computers together, there's more pins in the back now. All those things are increases in bandwidth, not so much frequency. So we expect the number of cores to continue to double, and there's already people have built processors with 1,000 cores already, and it's a gnarly engineering systems problem to make those things efficient and never touch state and never have contention, and to all work in parallel.
That makes a lot of sense. And I think moving a little bit to how you see the ecosystem evolving, one thing I've noticed is when, especially kind of the 2021, early 2022 era, a lot of the DeFi you saw on blockchains were more or less, copy paste of the blue chip projects. And I'm really curious, given you've talked a lot about composability and the advantages of having, one state, what do you think is going to be able to be built on Solana that can't be with a chain that tries to scale more horizontally?
I think the difference between kind of synchronous composability and asynchronous is it's subtle. It's a cost reduction. You can do everything in both, but it's going to take you a little bit more time and a little bit more fees to move between different environments. And there's a whole bunch of solutions there, and aggregation layers and things like that, but they're never going to be as cheap and as fast and as simple as here's one giant state machine and two programs that can be called atomically by any developer in any given moment in time. And that creates kind of like these interesting, both problems, but also opportunities. Like Radium did not expect that every meme coin is going to use their pools and stuff for launches, but nobody had to ask Radium, hey, can we do this? Nobody had to go and create, additional bridges or anything like that. It's just those APIs were in the same computer as your launch platform, however you do the TGE for that token. So it just became easy. And that easy use and lack of fees and friction kind of creates a thriving ecosystem. We'll see if you can replicate it. This is kind of like the big unknown. Can this be replicated inside L2s and these other more systems which separate state in a much more well-defined way? In theory, it's possible, but in practice, developers are lazy, and they will take the easiest path of less resistance.
I think that makes a lot of sense for kind of the upstream infrastructure and developer tooling and the way applications work together. But at the end of the day, a lot of it's users. And I mean, Solana has been blessed with being the chain for the recent meme coin mania. How much of that kind of caught you by surprise, or what was sort of your reaction to seeing all of that?
Yeah, it's really honestly was as surprising as kind of the NFT mania. But in retrospect, I kind of think of it as, when you think of the coolest app in mobile, it's like something like Uber, where you have, push a button and a robot comes to pick you up anywhere in the world. That's pretty cool, but Apple makes almost nothing from like the Waymo rides. They make tens of billions of dollars from loot boxes and kind of games and things like that. So in almost all digital economies, entertainment is the biggest place where money is made. So it's not kind of like, when I start to think of it backwards, it's almost obvious in retrospect, but totally unexpected. And also in a way, like, as with NFTs, we were blessed to solve a whole bunch of engineering problems with NFTs. Now we're blessed to solve a whole bunch of engineering problems with meme coins. It just makes the network and all the systems more robust without, risking anyone's 401ks or anything like that. So in a lot of ways, like I always make the joke, blessed are the meme coin traders. For those who can overcome their spam will inherit the metaverse.
I love it, and I'm glad you kind of mentioned the ways in which people are actually interacting with the hardware, and the relationship between the apps and the physical devices, and then the networks that's routed through. You guys have not been shy about getting into that game with the Sagaphone. What kind of led to that decision, and what's your philosophy there on ways you can kind of extend the network out into the hands of people?
Yeah, this is something that, as soon as I got into crypto, I immediately thought that you could build all the integrations that you needed to do signing in a secure kind of way with a ton of ease of use. All that technology, I personally knew the people that had built it at Qualcomm. That was kind of the thing that I immediately saw, and this was in 2017, 2018 time when I first kind of really jumped into it head first. The technology to make sure that your display has a secure input and output where the operating system cannot even read that data and it goes directly to the trust zone and the secure element of that chip. That's close to 20 years old at this point. All this stuff exists. It's just nobody was using it. So I kind of had this immediate idea that there's a way to do this in mobile, build secure signing. And I simply had a friend that I knew could build a phone that was available to do it. That was kind of the impetus of it. Usually you need to find an engineering-led CEO for the project, and I had that person, so we decided to go to build it. At a high level, I think it's really, really hard to compete with Apple on hardware. It's basically nearly impossible. And similar with Google and software, they just have so much bandwidth to build so many features. We're lucky that we can reuse Android and kind of piggyback on Google's work and poke at them at the same time. I think the thing that's hard for those companies to do is to change business models and how they interact with users and developers. So the mobile distribution is based around the idea that the developer can go and create as many copies of the digital content that they're selling, and it costs them nothing to do that. And they can distribute it everywhere they want. So the distributor can take an arbitrary fee because you kind of have, it costs you $0 to create more units, and you can charge on the distribution part because every additional unit is always profitable to the developer. And that's true, but that doesn't work with crypto because crypto is all about digital scarcity. Magic Eden does not own any of the NFTs that they sell. So if you have a $10,000 NFT that's on sale in a mobile store, you can't add the 30% fee because you can't create an additional unit of it, right? You don't have those unit economics anymore. So it's just those business models don't work. And the opportunity is, can we onboard users that care enough about digital, like crypto-based digital content faster than the VPs at these big companies can figure out how to like change their app store policies. And we'll see. And so far, they're moving even slower than I expected. Maybe the cycle will change it. In either case, I feel like us building this device has proven out like a lot of things to me. One thing that was really unexpected is that crypto's already here. Like adoption, like we're actually past point of saturation. We built a simple web page with both credit card and crypto payments, and 50% of people selected crypto as their payment option without any additional incentives. So that was surprising. When we turned off credit cards, the number of sales didn't drop. It just stayed constant. So not only did people pick crypto, they already have crypto available, and it's as easy for them to use as credit cards already. So we're really at a point in adoption where all you need to do is just flip on these rails and users will start using them. And that to me, I thought was really, really cool and really exciting.
That's really interesting. And I think it's interesting also watching some of the big corporates try to figure out how to deal with the technology that might challenge their business model. And it's what's been exciting about crypto because you just don't know what use case or application is actually going to stick and people are going to want. There have been, mountains of paper written about random apps that, no one uses and apps that come out of the woodwork and dominate. So I guess in your opinion, what's been the application or use case or protocol that has surprised you the most in its success?
Oh man. I have like a soft spot for Metaplex. I think the NFTs, while were something from last cycle, is just were really fun, and they've actually proved out a lot of really, really cool technology. The compressed NFT standard and everything that they've built out has as much state in it as the Solana chain itself. It's like roughly 500 million worth of NFTs have been created that nobody realizes. It's if you think of those as things as L2, it's the largest L2 ecosystem in crypto by like a factor of 10x. Yeah. So I think what was cool about it is it unlocked new use cases that weren't possible before, like Drip. So when cost to create digital content dropped, to fractions of a penny, there was a new business that was unlocked. So are there places still like that left in crypto? If transaction fees drop by 100x, what becomes possible? I have a theory that, you think of an ad on online as 0.2 cents. As kind of like, that's the value of one ad based on some, kind of extrapolating from like Google's revenues and things like that and their stats. if your transaction fees are a fraction of that, like 1/100th of 0.2 cents, so like 1/100,000th of a penny, you now have that value that can be captured between those two as available profit for a new business. And that could be something that disrupts the traditional kind of like advertising models. We'll see like if that comes to pass, because there's a lot of whole other problems and friction and everything else to deal with. But you can still, I think, see opportunities to drop costs and create new business models.
Awesome, and we are just over time, but I know that in the agenda we have a little 5-minute gap between the next speaker, and there is one question I just want to quickly ask you, and would request a somewhat shorter answer. But I just thought it was really funny. I was listening to some podcasts the other day, and someone referred to Solana as a cockroach, but like in a positive way. And you know, I think the reference was you guys have survived this nuclear winter. You had this, you know, insane adoption, you know, pre-FTX. You now have so much adoption now, and people are doubling down on your ecosystem. You know, at this conference, we have so many people building other layer ones, building DeFi apps, you name it. Like, what does it actually take to have staying power in this industry?
I think you have to actually build something that is hard to do, like that like delivers value to people, and like that was the unlock. It wasn't like we didn't have good dev UX, we didn't have a huge ecosystem or a huge BD team. In fact, like I think we probably have one of the smallest ones in crypto and stuff. But we built a cheap, fast blockchain, and that was new to developers, you know, 4 or 5 years ago. And that allowed us to kind of build this kind of ecosystem of people that wanted to use that technology. So you have to unlock something that people want. And like the best advice that I heard from any startup book and founder is that your product should be black licorice. Like it's a flavor that only a small percentage of people like, but they love it. And the vast majority of like kind of the market will reject it. If you get lucky, then that flavor becomes the biggest thing. Your TAM grows. That's the part where a bit of luck, and it's really, really hard to predict. But if you try to build what the average developer wants in a survey, you're going to kind of be in a very crowded space with no differentiation. You won't find your black licorice. So like to every startup founder out there, every developer is like builds a feature that you think is like the coolest thing in the world that doesn't exist, and don't worry about what everyone else thinks. It'll take you like 4 iterations to find that black licorice and get it right, and then get lucky with the TAM. But eventually you'll get there. But you'll never get there just chasing what the average person thinks.
I love that metaphor, and appreciate you giving us the candid feedback there. But at this time, we definitely do need to wrap it up. So Anatoly, I want to thank you for joining us.
Thank you.
All right.
Our next keynote is presented by 2 speakers, Mike Cahill and Marius Ciubatariu. Please welcome to the stage, Mike Cahill.
Who here has used a banking, brokerage, or trading app in the last 6 months? Got a couple of hands here. All right, great. You're getting ripped off. We're building the Pyth network, and we're designing that to stop. The reason for the rip-offs has something to do with asymmetries. Asymmetry of price, asymmetry of access, or asymmetry of liquidity. The purpose and mission of the Pyth network is to bring all the prices together, make them universally accepted so that everyone has the equal access and doesn't get ripped off. Let's look at a couple of real-world examples of how people are getting not so great deals today. If you want to invest in the most liquid stocks in India or China, you can do so via BlackRock for a measly fee of 6.5%. Or if you want to participate in the US Treasury market for 4.5% on yields today, as an unsophisticated investor in the US, usually you do that through a savings account. Well, Citibank has an advertisement here which shows you that if you're a priority account, you can get a whopping 0.6% interest rate, or if you're just an everyday user, 0.03%. DeFi is designed to stop this. It's designed to give everybody universal access so that you don't get blocked out. Now, we're not quite there yet. So here's a screenshot of DEX versus SEX liquidity. You probably can't see, but if you look, there's about a 30-cent difference between the DEX and the SEX liquidity. Now, obviously, just a screenshot's not going to tell you too much, so I'm going to tell you how we've gotten some analysis to actually dig into how that actually happens. This is the most simplistic version of the Pyth network that you can see. On the left side, you've got publishers. On the right side, you have blockchain applications. Publishers publish their price of everything, gets aggregated on the PythNet blockchain, and it's made available to over 100 application blockchains as well as builders. Let's zoom in on the publishers. So we're going to get into how do we figure out how that DEX versus SEX liquidity is not as good. Now, you may recognize a lot of these names, but that alone doesn't tell you enough. So let's sort them by the types that they are. Here you can see trading firms, centralized exchanges, and decentralized exchange. Now, based on this, we can start to make a whole lot more inferences. When you do an analysis, empirically, you're able to figure out that, and putting this into real-world terms for everyone, that when you're trading on a centralized exchange versus decentralized exchange, or DEX, is going to cost you, depending upon where you live, the developed world or developing world, something of value. If you're just trading, say, 0.01 Sol, it's going to cost you about a piece of paper in the developed world, maybe a gumball in the developing world. When you go all the way up to 10 Sol, now we're talking about a week's worth of groceries in the developing world, or about a sit-down meal in a restaurant. But I've got good news for you. Kamino swap is better than SEX. And to tell you more about it, here's Marius, the founder of Kamino.
Hi, everyone. My name is Marius. I'm one of the co-founders of Kamino Finance, and I'm super excited to be here to talk to you today about Kamino Swap. It's something we've been working on for months together with Pyth to bring to Solana and to finally stop a lot of the issues that we've faced. To put it simply, from now on, you'll be able to get much better liquidity on-chain, get more for your trades on-chain as a user, and we'll be able to grow the on-chain credit markets because credit protocols such as Kamino Lend will be able to tap into much better swapping venues. I'm super excited it's live today. It's long overdue to bring this to Solana. And before we dig into the mechanics and how it works, let me tell you about how we run into this issue and why this is the solution. So Kamino is a DeFi protocol on Solana. We are Solana maxis. We've been building since 2022. And we believe that the on-chain economy is going to be created and will grow on Solana. And we believe that it's going to grow on Solana only if it has robust DeFi protocols that can capture and service and allocate that value. And that is why we build lending, borrowing, liquidity vaults, and staking. And we've been guided by our 3 core principles, which is an obsession with risk management. We write a lot of tests. We audit everything. We basically drown in paranoia sweats. We are focused on user-centric UX. We care deeply about the user. We empathize with the users. We want the users to understand and get a lot out of this. And we care about solving problems for users and giving them as much utility as possible. So far in our journey, we managed to scale our liquidity vaults from 0 to 250 million PVL and serviced over 17 billion in swaps volume. We scaled the lending market to grow from 0 to 3 billion in asset supply, then over 1 billion in outstanding debt. And we believe this is just the beginning. We think the on-chain economy is only going to grow, and we need to be able to scale and service all of that economy. Which brings us to the question of why Kamino swap? And like Mike mentioned before, the current on-chain economy is pretty bad. For DeFi to catch up with TradFi, we need a much better on-chain economy. We need much better on-chain liquidity and on-chain credit markets. And they both currently suffer because the swapping landscape in Solana is very uncompetitive. For you to participate in the swapping landscape in Solana, you get either value leakage to MEV as a user. As a protocol, it's hard to participate because onboarding new swapping venues there's like lots of high barriers of entry. And by swapping, I mean anything. I mean placing a limit order as a user, a market order as a user, or a liquidation, because a liquidation is also just another form of swap. And because of that, we don't get good value to the users, good liquidity to the users, or good liquidations for the protocols. And that's why we basically built Kamino Swap, to solve all of these problems. So to put it simply, Kamino Swap is an intent-based swapping protocol backed by Pyth Express Relay, which allows users to place an order, and then it broadcasts that order to a network of solvers, which will auction that order and tip to win that order. And the solver that pays the most will win the order, and all of that value goes back to the user. So essentially, you get competitiveness and more value accrual to the user rather than value leakage to MEV. And on top of that, you get standardized swapping interface into which credit markets such as Kamino Land can plug into and get liquidations out of the box. From now on, you'll be able to, you don't have to onboard liquidators. You don't have to write custom code and understand the specifics of each liquidator to be able to have good on-chain credit markets. You'll be able to get this out of the box. This is a very long overdue protocol that had to exist on Solana. I couldn't be happier that it's finally live, and you'll be able to play with it today. Let's look a little bit about how it works under the hood. So, as I mentioned earlier, essentially the user places an order. The order gets broadcasted to a network of solvers or searchers. The searchers start bidding. So, because they want to win the order, they pay a tip. The one that pays higher tip wins the order, and all of that tip plus the swap goes back to the user. So it's all it's all competitively driven and value creative to the user. And I'd like to show you actually a demo how you can compare Kamino with Coinbase. So DEX versus SEX. On the left, you have Kamino Swap. On the right side, you have Coinbase. You say we place an order on both places at the same time. Pay no fee on Kamino, you pay a fee on Coinbase. And Kamino is filled. And Coinbase is not yet filled. We don't need to wait. That's basically the story. Thank you. Yes, you'll be able to access today. It's powered by Pyth Express Relay. Super happy to work with the guys. And go on swap.kamino.finance. And the password is better than sex with a C. Thank you.
Please welcome our next keynote speaker to the stage, Mr. Andrej Babiš.
Bad boys, what you gonna do? What you gonna do when they come for you? Bad boys, what you gonna do? What you gonna do when they come for you?
Good afternoon, ladies and gentlemen. It is a great honor to be here today at the prestigious Emergence conference. It comes as no surprise that this event is taking place in the Czech Republic, a country that has rightfully earned its reputation as a global center for innovation and entrepreneurship in the field of cryptocurrencies. I must admit that I was a little surprised to be invited to speak here, and I'd like to thank the organizers for their courage in having me. I'm not here to lecture anyone. I'm here to listen and learn something new. I'll confess upfront that I feel a bit out of place. Just take a look at my computer. I keep all my meetings and notes in this trusty paper calendar. When plans change, I rely on sophisticated sticky note system, carefully overlaying new appointments on the top of the old ones. And I assure you that in over 30 years, no one has ever hacked this system. But jokes aside, cryptocurrencies are a phenomenon that I used to associate with risk and uncertainty. They seem volatile and difficult to understand. Until 2023, I knew almost nothing about them and honestly paid them little attention. I didn't understand their purpose or potential, perhaps because I come from a traditional industrial economy dominated by tangible products and manufacturing. Yet in some ways, these two worlds are more alike than one might think. When I founded Agrofert, I started with just 4 employees, an idea and a deep desire to be an entrepreneur, which was not possible under communist time. Over the past 30+ years, it became a company with 10 billion euro in annual revenue and more than 40,000 employees across Europe. Cryptocurrencies also began humbly, taking years to gain broader trust. During this time, they overcame numerous obstacles to become what they are today, a phenomenon reshaping how the younger generation thinks about entrepreneurship, investment, finance, trust, and the digital economy. I think everyone here knows that success rarely comes without taking risks. However, we must acknowledge that cryptocurrencies don't always have the best reputation among the public. Responsible use and better public awareness are essential to building greater trust in this field. I believe achieving this shouldn't be complicated, too complicated, at least not in the Czech Republic. Our country is already a global leader in cryptocurrency innovation. The Czech Republic hosted one of the first Bitcoin conferences. Czech companies gave the world the first hardware wallet and established the first mining pool. And what's most remarkable? All of this was accomplished without government funding or support. Today, I see the immense potential of cryptocurrencies and the crypto industry. This is a new, rapidly growing sector that could bring significant benefits to our economy. The Czech Republic has the potential to become Europe's gateway for cryptocurrencies projects from around the world. Even Donald Trump, once skeptical like me, now openly aims to make the United States a crypto superpower. He plans to add Bitcoin to US strategic reserves, design pragmatic cryptocurrency regulations with industry experts, and establish a presidential-level advisory board for cryptocurrencies. I believe this is a direction the Czech Republic should also take. If we want to remain at the forefront, we must adopt a fair and balanced approach to crypto. What do I mean by this? First and foremost, we need fair tax policies for cryptocurrencies holders. Why should crypto investments be treated any differently from stocks? Countries like Germany and the UK have reasonable time-based and value-based tax exceptions. I am pleased that my colleagues have introduced a legislative motion focused on cryptocurrencies aimed at addressing the current situation, which should be discussed right tomorrow in Czech Parliament. The amendment proposes applying a 3-year holding period for tax exemptions or value threshold of 100,000 Czech crowns per year. I see this as the first step, a clear signal of support for the crypto industry. Steps like these have the potential not only to attract more investors, but also to demonstrate that the Czech Republic is not afraid of innovation and is serious about supporting it. The economic potential of a thriving cryptocurrency industry is enormous. According to some estimates, the sector could contribute tens of billions of Czech crowns to the Czech economy over the next decade. This translates to the creation of tens of thousands of well-paying jobs during that period. Imagine what this could mean for our young professionals, engineers, and developers. The younger generation will increasingly engage with cryptocurrencies both in their work and personal lives. This is why I want to support the crypto industry, ensure it has the right environment, and address the barriers it faces. We also need to simplify the rules of using cryptocurrencies in business. Unfortunately, excessive EU regulations and bureaucracy often stifle the industry, risking a situation where European firms fall behind their American and Asian counterparts. In the Czech Republic, we must also address the reluctance of banks to work with crypto firms and puzzling stance, especially when their parent companies abroad take the opposite approach. As for politicians, I believe we should not dictate to crypto industry or bind it with excessive regulation. Instead, we should focus on creating an environment that is fair, transparent, and inspires trust in the system. I want cryptocurrencies to develop freely and bring benefits to society as a whole, without unnecessary obstacles, while remaining mindful of the potential risk. Thank you for your attention.
Please welcome our next keynote speaker to the stage, Erik Zhang from Nomad.
Hello, everyone. So today, I'm going to share some thoughts around the resurgence of ICOs. I'm pretty sure some of you have already seen increasing discussions around bring back ICOs. And this topic has been on my mind a lot recently, especially given that I had the opportunity to lead Binance Launchpad before. So I'm a big supporter of ICOs. And in fact, I'm also launching a new ICO platform. It's not like a Memecoin Launchpad, but more of a crowd fundraising platform for non-meme coins. So today I'm going to share some insights and data around this topic. So first of all, a little background about me. I started a fund called Nomad Capital like a year and a half ago. Prior to that, I've been an early member at Binance, led a few teams there. I was the head of Binance Research, also headed the Binance Launchpad. Also served as CEO of CoinMarketCap. Prior to crypto, I was in TradFi. Right. Now let's take a look at some data. So first of all, let's start by looking at some of the performance of the project, at least on the top exchanges this year. So that I'm showing right now covers from January to October this year, and it does not include meme coins. The return is actually based on the price on the first day of listing until a few days ago. As you can see, the price of majority of the tokens is down. And in fact, 80% of them have seen negative returns, and 45% of them have seen price drop by more than 50%. It's a bloodbath. So what's the reason for that? A lot of people refer to them as VC coins. And there's a lot of criticism towards VCs. But is VC the real issue? I don't think so. First of all, VC did not dump on the retail users because the standard one-year lockup. Also, the low float issue, people talk a lot about this, has nothing to do with VCs, right? It's not something the VCs are directly responsible for. Of course, I agree that there are some issues, like mega funds, because of the pressure of deployed capital very quickly, driving up the valuation in the private market, leaving very little room for growth in the second market. Right? Essentially, the price discovery has already been completed in the private market, leaving a little bit room or even no room for post-listing. But remember, right, VCs are helpful. Without VCs, a lot of the project could not even start it in the first place. So what's the bigger issue? The bigger issue in the past year, at least, is about the broken tokenomics. Of course, it's a multi-factor issue. There are many other reasons, but I think this is one of the biggest issues in the past year. First of all, we have seen a lot of amazing on-chain stats, but how much of that was real? Second, a lot of the token airdrop were screwed up by the airdrop farmers, not the genuine users, creating a lot of concentrated down pressure post-listing. Some of the airdrop did go to real users, but the conversion rate of those users to real users is very low. And also the retention rate is low because those people quickly move on to the next thing. At its core, I just do not think the airdrop mechanism work for most of the cases. Right? For certain cases, it was, but it's very rare. Because remember, people do not value what they are given for free. This is very important. I think I want to stress for today, something we all need to keep in mind when designing better tokenomics for your own project. Then, what's a better solution? I do think we need to bring back ICOs, or you can call it crowd fundraising, right? For a few reasons. First of all, the project can raise capital through ICOs instead of giving out tokens for free. Also, compared to raising only from VCs, the ICOs result in better token distribution, wider distribution, which is healthier. Second, because users pay to get the tokens, they naturally have more skin in the game. Right? Because of that, they are more willing to support the projects long term and be more engaged. So the ICOs do help projects build real, genuine communities. And it might be a small group of people, but it's better than a wide group with a lot of airdrop farmers, which you can never convert to real users or high-value supporters. There's also some data I want to highlight. This is the list of the projects that did ICOs before, built amazing communities, and seen very solid price performance. A lot of people didn't remember, but even Solana actually did a crowdfunding raising round on CoinList in 2020. I personally worked with a lot of these projects on their ICOs. So based on my first-hand experience, I can tell that the ICOs did play a very important role in helping them build very genuine and loyal community. Those community members stay with them for a long time through the ups and downs. There's another very interesting data point I want to show. So 30% of the ICO participants did not dump their tokens immediately at TGE. And some even bought more. Right? This is the first-hand data I collected from the ICOs I worked on before. Because those guys had the opportunity to participate in the earlier round, similar to the valuation of the VCs. So they are grateful, and they were there to support the projects. Then another question is, do we still need VCs? Of course we do. I think the project teams still need to talk to the VCs, but only take the money from the ones that is strategic, that can share with you their building experience, give you some guidance, and very importantly, their connection, because this is the stuff that the retail users do not typically have. But of course, there's not that many VCs like that, right? So I think what makes sense is, as a project, you reserve a smaller portion for the VCs and bigger portion for the broader audience during the ICO. Lastly, I'm going to launch an ICO platform called BuildPad. The URL is buildpad.com, and if you search on Twitter, is BuildPad, BUIDL. Is a compliant platform that is only open to KYC users from non-restricted regions. We will do very thorough vetting process to make sure only the high-quality projects are selected. And we are also integrating some of the licenses we learned from the previous ICOs we worked on. Right? So if there's anyone interested in this topic, I want to discuss synergies, please find me. I hope today's talk is helpful, and some of the data insights is something you can think about and potentially implement for your own project. Thank you.
Ariane Murphy returns to host our next panel discussion with guests Jorge Cerna, Stacy Warden, Xochitl Ivory, and Erin Kelly.
You're unbelievable.
Hey, there's like 10 people.
You're so unbelievable.
Okay. Good afternoon, everybody. I'm very happy to be moderating this panel today. My name is Ariane Murphy. I'm the CMO of Flight 3. Today's panel is exploring RWA's real-world assets in the digital age. Before I introduce the panelists, I'd love to frame the discussion. So real-world assets have been a buzzword for quite some time, and for good reason. It's not just transforming finance by making assets such as commodities, art, real estate more accessible. It's opening doors to entirely new ways of thinking about ownership, value, and innovation. By 2030, the space is expected to reach $16 trillion US, but the impact goes far beyond numbers. Tokenization is helping transform and streamline many, many industries. Of course, challenges like regulation and trust still need work, but the potential is undeniable. Today, we'll explore how RWAs are moving from buzzword to game changer in finance and beyond. So let me introduce the panelists, starting with Jorge Cerna, Chief Product Officer at Securitize. Then we have Stacy Warden, CEO and board member of the Algorand Foundation. We have Xochitl, Head of Enterprise Growth at Matter Labs. And then we have Erin Kelly, Director of Partnerships at Stellar Foundation. So let's dive into the conversation. Real-world assets, as I said, has been a buzzword for a while. let's start maybe with you, Jorge, since you're closest to me. How would you define its current state? Are we still in early adoption phase, or are we beginning to see meaningful integration in industries?
I think we are starting to see a meaningful integration, particularly coming from institutions, although, as you have discussed, we're going to talk about real-world assets beyond financial products. The part that I'm more related with in what we're doing in Securitize, it's related with the tokenization of financial assets. And I think that the biggest change and the biggest impact that has happened this year has been the contribution of institutional investors and big players coming into this field, from the ETFs on Bitcoin coming up, which has given access to that kind of products, to products in which the tokenization of financial instruments has come to go over the numbers that we have seen before, reaching over $1 billion in tokenized treasuries, for instance. That it's one of the main cases that we have been working on. So yeah, I think it's coming. There's still a long way to go, but it's now becoming a real use.
Fantastic. Stacey, how would you define its current state?
I think we are.
Yeah, that's working.
I think we're in absolutely early days. When I think of the potential for Web3, I think of it in several different ways, but really I think of it as the opportunity for continuous finance. And, you know, finance right now is quite lumpy. It can be lumpy in that, you know, in the United States, the lowest amount you really can use, you know, with cash is like a quarter, right? And a piece of art is very lumpy, and a building is very lumpy. And what Web3 enables you to do, what the blockchain enables you to do, is to make everything into a continuum. And if you think about the implications of that, they're pretty wild, right? Like, why would you have, you know, cash is an asset, so is your share of a money market fund is also an asset. Why would you walk around carrying cash like ever that's not earning any kind of yield, which you could potentially pay for your, you know, cheeseburger or your cup of coffee with a tiny little piece of, you know, a securitized, tokenized money market fund? And, you know, as soon as you hand it over to the cashier, you're not earning yield on that anymore. The cashier is earning yield on it. And the idea that you can have, you know, we already sort of laugh at TradFi because they're like, how cute is that the opening bell, you know, starts on Monday morning and they don't work on the weekends? But this can be really 24/7, 365-degree, absolute continuous finance. And I can see that. I think we all on the stage can see that vision very clearly. So in that sense, we have made progress, but we're not there yet. And I think that if you think about that like finance nirvana, we have quite a few cycles left, I think, to get there.
So, Jill, what do you think are the biggest challenges, be it regulatory, technical, or market-related, for RWAs that hinder adoption of RWAs today?
Yeah, I mean, obviously, we're all waiting for regulatory clarity for the floodgates to really open. But I also think that once we have clarity, it's important to, as a blockchain platform, offer compliance seamlessly, or to at least address that seamlessly for builders and for companies building on-chain. But also another challenge that I think we overlook, and I think we should talk more about also, is the fact that the industry sometimes is not very good at explaining the value of blockchain use cases that are coming out in a very accessible way. We still overcomplicate the way we explain things. It's still very technical. I know we say, hey, the best way to say that something is adopted is that people are basically not realizing that they're interacting with blockchain. I agree with that on a user interface level perspective, but I do think that educating why you should be on blockchain is essential to increasing consumer demand, and with that also driving adoption, increasing adoption. Because if people don't know why they should be on blockchain, then what's to say that it's going to stick?
Absolutely. I mean, we definitely have a big, huge challenge when it comes to positioning and marketing what we are doing. And simplification is probably the key. Erin, what do you think are the biggest challenges that will hinder adoption and progress for the industry?
Yeah, I think similarly to what Sochil was saying, especially on the retail side, there's obviously a lot of user experience issues that we need to get beyond for people not to actually realize that a product is on blockchain on the back end. But I think on the institutional side, that's where we'll also see kind of this big tipping point of larger volumes actually coming into the space. And in that area, it's the really boring things like standardization and back-end processes that institutions are kind of waiting to develop alongside regulation in order for them to actually be able to move their processes onto blockchain. Like, they know what the theoretical value is, but it's not trivial for them to bring on a new supplier of any kind or integrate a new technology. So it's getting to a place where they feel comfortable that they know what the reward is for them kind of making that investment. And I think we're still slowly getting there.
Yeah, I think that's a really good point. And even more, I would say, or in addition, I would say, the thing about finance is that you just can't move by yourself. Everything is so interconnected. So if you want to tokenize something, and that's great, like you have money on chain and you've got securities on chain tokenized, you can now do an atomic swap where clearing is settlement, no counterparty risk, no nothing. But like, who are you going to do that with if your counterparty isn't also doing atomic swaps and they're like still doing T+2 settlement? It's not available to you. So I think everybody's just kind of like waiting, and they've all got to use your point, a tipping point. They've all got to kind of wait till that tipping point comes, and then, so I think we'll see slow, and then we'll see like outrageous growth, exponential or parabolic at least growth as the whole industry kind of can coordinate and get up to that tipped point.
Yeah, so I was just in Geneva earlier this week meeting with a bunch of asset managers, and they're all talking about how, we want collaboration between the ecosystem of, these big players. I was talking to someone who was like, we have a really specific technical problem we want to solve, and we would love for anyone to solve it. Like, we want all of our competitors to also be using this because it means we can all then finally move our processes on chain. So agreed, there's definitely going to be once everyone sort of gets on the same page of what rails are they using, what regulations are they following, like which custodians can they use, all of that type of stuff is then when that wave will crest.
So get ready, ladies and gentlemen.
So just going back to the regulatory piece, and I wanted to ask you, Jorge, because you told me backstage that one of your advisors for Securitize, is fun fact for everyone, is Paul Atkins, the new SEC commissioner. So,
well, nominee from
well, yes,
from the coming president, which
hopefully
that has not been. Yeah.
So, how do you view that? Do you think the US politics and 2025 are going to help this industry?
I think there's going to be a significant change, and hopefully that it's going to bring a lot of clarity. I think that a big problem that we have seen with the tokenization of financial instruments has been lack of clarity. Because the model that the former SEC regime in the US has driven has been very much focused on trying to do enforcement via litigation, but without creating a clear structure of what can or cannot be done. Just try to do something and then we'll sue you, which definitely is not good for any kind of industry. And I think that if there's a change in which there's clarity in any direction, and if it's much more open to what are the advantages that come with blockchain technology and so on, that's going to be a definite improvement. That's going to be great. And that's in the US. And in contrast, for instance, in Europe, although there's more clarity with regulation like MiCA or initiatives like the European Union DLT pilot regime, the issue has been, I would say, speed of bureaucracy. The model for the pilot regime, for instance, was expected to start having market infrastructures relying on blockchain from March this year, and the first company that has been approved to do that has happened this week, last Tuesday, and there are a lot of other companies, including Securities, that are trying to get into that space, and there are clearer rules, but there's an, I would say, excess of regulation and of bureaucracy that it's making things move very, very slowly.
Yeah, I think Paul Atkins is going to be a terrific nominee, and the betting markets have him at like 97% being confirmed. You know, he's done 2 stints at the SEC before. He was a protege of Arthur Levitt, one of the most famous SEC chairmen. He was on the board of BATS, which is a really early electronic trading venue. So he understands even beyond, and he's, you know, pro-crypto, pro-blockchain, which is important to us. But even beyond that, he understands digital markets very well. And he, I think, is going to I think he'll do a lot for staff morale, first of all, and I think he will really bring that institution up to speed to like the new world. And that's me, Chairman Atkins, from the Algorand Foundation, saying very nice things about you before you even got appointed. Thank you very much.
Yeah, always say nice things. You never know what's going to happen. Okay, so now looking ahead and looking at the future. Obviously, the future is looking very bright, hopefully, fingers crossed. Yes. But how do you envision, and an open question, how do you envision the role of RWAs evolving in the next 2 to 3 years? Do you see it thriving in financial markets or in more niche sectors?
I mean, I think that definitely in financial markets, but I think the other very interesting aspect is the convergence between AI and blockchain, where it will drive more of a supporting factor. So not just will it drive very interesting opportunities, but also very necessary ones, such as making sure that we combat misinformation, make sure that the content that's published is actually real. I know there's this debate going on in crypto, hey, do regular people even care about decentralization? And I think it's more of a question, do they understand what that means? Because I think if you ask a regular person what this decentralization is, they don't know what that means. But if you ask them, hey, do you care if your data is stored securely and that it can't be tampered with, they will say likely yes. And I think the rise of AI is really making that concern very real. People are starting to pay attention to their digital footprints. They're concerned now that you can make an entire video out of just having a picture of them. And I envision blockchain really having a role here where it can really help step in, be a solution to authenticate what's real and what isn't. So there will be a huge rise in demand for products doing that, solving for that in a world that's increasingly shaped by AI.
Touching on new technologies, and we can touch more on AI, but what are sort of the key areas that are going to accelerate adoption, whether it's ZK proofs, AI, interoperability protocols? What is going to be that accelerator?
I think the aspects related with privacy are going to be very critical. One of the things that have allowed the boost of tokenization in some use cases has been the specific characteristics of blockchain that make it a more open and auditable element. But on the counterpoint around that is that, for instance, for financial markets, there's an expectation of privacy and confidentiality on certain kind of transactions that right now it's not, I would say, properly solved in a blockchain environment, and that technologies like zero knowledge proofs and other capabilities that can drive that kind of ability of adding a confidentiality and privacy layer into tokenization are one of the things that are required to also foster this additional adoption.
Will AI help with that?
I don't know,
Remains
probably.
to be seen.
Maybe, but right now the focus of AI, particularly around generative AI, is going into a different direction, but it may help also to facilitate discovering other approaches in that kind of aspect.
Yeah, if I could say, just from a layer one point of view, this is not rocket science, right? Like you have, this is not hard. You tokenize something, it's digital, so you can break it up into tiny little pieces and then you distribute it, right? This is not where the difficulty is. And then, once you're there and once you have money on chain, you can have atomic swaps, you can settle instantly. Where I think is harder, the two ends. First, and we've spoken about this before, but the user interface, making sure that that's very easy for people that want to buy that hamburger with a piece of their money market fund or want to invest in property or whatever it is that they want to do. The other end of it is just the legal framework. Like, what is the legal status of ownership when you own the digital the digital of something, and you own just a fraction of it. If it's a piece of art and you own a little tiny piece of art, what are your rights actually with respect to that art? Where does that lie? And those are legal issues. Those are not technology issues. The technology is not hard. You don't need AI to tokenize real-world assets, in my view.
I would agree with that. I think that privacy is a huge need, but it's, again, probably a solvable issue. It's not necessarily what's holding the market back from adoption. It's more of the kind of legal and market issues that we're seeing. And still also, I think a lot of it isn't necessarily a problem that needs to be solved. It's theses that still need to be tested. Like if we're talking about tokenization is important to open up asset classes to people who haven't had access to it, whether that's VC funds or someone in a developing economy getting access. We still haven't proven out that thesis yet, so I think those are going to be pushing on those boundaries to see, like, is this actually right, is this not? And then we'll kind of roll from there once the market determines where there's actually traction, because it is still very early for a lot of these. Like, we see cool projects popping up in all different kinds of use cases, but there aren't enough of them yet to really say, like, oh, this is the one that's going to stick. Like, we've seen kind of a marquee partnership that we talk about all the time is Franklin Templeton's Benji on Stellar. Securitize talks about BlackRock's Biddle as well. And so we have, okay, great, we know money market funds, there's some traction, but still if we zoom out, like those numbers are so tiny in comparison to like financial services overall.
Pilots still, really.
Yeah.
Amazing. So let me move on to the next part, which is sort of started touching on it, but it's use cases. We love use cases in crypto. We need to find more. But yeah, can you share some examples of unique ways in which tokenization is being applied today? Maybe Xochitl, you want to start?
Sure, yeah. One use case I'm particularly excited about was our recent collaboration with the government of Buenos Aires, Argentina, where we basically collaborated with them, and they rolled out digital identity to its 3.6 million citizens, so sovereign identity, in an effort to give back control of identity, independent of government control. And so what they did is they already had an established digital identity app, and everybody was using it for several years, so that made onboarding really easy. And so what they did, they ripped and replaced the centralized backend of that app for a decentralized one, for an open source protocol called QuarkID, powered by ZK Sync. And so what they did, essentially think about when you go and try to confirm your identity, how often you have to expose sensitive information. So at the core of ZK proofs is obviously solving for that, proving that a statement is true without showing sensitive information. And so this upgrade now enables citizens to access and use over 60 government documents without having to expose sensitive information. So to put it in a very practical way, when you go to the liquor store in Buenos Aires today, you have to prove that you are of legal age to buy the liquor. So instead of pulling out your identity card with your name, your date of birth, your address, even there, you now pull up the app, which functions as almost as an Apple Wallet. You pull up the credentials of your digital identity card. It populates a code. The store scans it, and that settles it. It settles that you are who you say you are, and that you're of legal age to get that nice Argentinian wine. And so what's really compelling about that is that the government issues the credentials, but because it's open source, they can't revoke it, nor can they see how citizens are moving around. So there's no centralized database that houses all the digital identity movement of people. And so I think this is a really compelling way of seeing how tokenization can help transform government services in a way that it prioritizes trust and empowerment.
And there's a really nice podcast that you guys did just a couple weeks ago on Unchained with Laura Shin. If I could, sorry, Frank, but it was a good podcast on Unchained on this use case.
That is a fantastic use case in which you're touching on both elements, practicality as well as privacy. You're ensuring that the information is encrypted and governments don't have access to that information. So great example there. Any other exciting use cases.
Yeah, why don't I give two quickly that are not financial exactly. One is PropTech, and it's a company called Lofty AI. They take rental properties, sell you a share in the equity of that property for as little as $50. You become an owner of that property. Every property is organized around a DAO, and so these investors, for $50, they can see, if you go to the Lofty AI website, all the documents on the property, all the sales history, the macro trends in the neighborhood, all of that. These DAOs have gotten together. In two instances I know, one, they fired the property management company. And in another instance, they gave a woman 3 months of a respite on her rent because she was having some medical issues and she was coming up short. So they act like owners, but on a property-by-property basis. And because it's Web3, this is my point on continuous finance again, they see their share of that rental income daily, not at the end of the month. And then another example I would give is a company, a Latin American company called TravelX, an Argentinian company, and they, like the relationship that you hate the most in your life is probably your relationship with your airline. You can't make the trip, right? You have to go to the same place within a year. They fine you $200, blah, blah, blah. They saw that and they said, well, why can't you actually own that ticket and sell it when you don't have you don't want to make your trip anymore. So now and if you go, this thing is, built on Algorand, the company is called TravelX, but if you go to the Flybondi website, which was their first airline, there's no Algorand, there's no TravelX. It's to your point earlier. It's completely just invisible. And you just see a website of people selling their tickets and people bidding for the price of these tickets. And if you're a frequent flyer, you can transfer also your lounge pass, all the good things that come with your ticket, you can transfer to that. These are really cool examples, I think.
I think this gets to your question earlier when you're talking about will it have impact in really niche areas or really broad areas, and I think it's some of both, because like I had mentioned before with Franklin Templeton Benji, the thing that we talk about all the time is what's has been important for them, it's a cost savings. They save 50% of their costs. So it's I think it's to send 50,000 transactions. It would have cost them $50,000 originally, and now it costs them $120. So there's things like that that are really financial services that maybe aren't super sexy, but they have a really broad reach. And then there's things that are really niche, so similar to that, my husband is getting his private pilot's license, and he's talking about the complexities of booking hours on a plane in order to get your license. And tokenization is something that can solve that, where it's not about fractionalizing something, it's just showing ownership. And so I think those niche industries have those problems because they also don't have the volume and the attention and the resources to solve them, where other industries maybe would have before. But this is something where they can do it themselves now and unlock that. And so I think you're going to see a mix of really interesting, cool things that we like to talk about, and then the things that will actually roll out really big impact that maybe won't seem as sexy because it's a savings account or something, but it will be a little more widespread.
One key piece that I think it's super important is the programmability. That the fact that we have elements that are actually programmable and you can combine them with other things and provide additional value. So we were talking about before the concept of money market funds that are in a tokenized fund. That it's something that we have done with Biddle, and things that have been able to be built around that. We've worked with a company that had to do a payment process, payout based on certain circumstances, something that they were paying in stable coins, and by using something like Biddle, that they can combine and atomically turn into USDC via a smart contract that does the automatic redemption process, and then doing an atomic swap with another kind of tokens that they were issuing to their customers, they have been able to do that kind of process in a totally automatic form and have the amount of money that they had to distribute not sitting on stable coins that it's not providing any kind of yield, but sitting in tokenized money market funds that it's giving them a risk-free yield, and handle that all automatically and with zero risk. And the idea is that these are pieces that are being used that way, but combining them in different ways, there are going to be new pieces that will become foundations of other things that we can even think right now.
the creativity that's coming out is absolutely fantastic. Sorry.
And that's financial inclusion, and that's more liquid, better liquid markets, right? Because people that aren't accredited investors, they can now buy a piece of something instead of having to be in a
Absolutely. There's I don't know how many people will be aware of this, but there's a building in London that is about to be launched by Solana. It's called The Square, and that is basically a community-owned building, so people can go and co-work from this building. We have our Christmas party actually at Flight 3 next week there, so I'm very excited to see it, but you can actually own a piece of the building, so that, yeah, fantastic.
Solana on this panel? No.
No, sorry.
I don't see any reason for us to be talking about a Solana project on this panel.
But we love use cases, whatever chain they're on. Okay, now, looking ahead one more time, I want to ask you, I'm sure there's some founders in this room that would love to know how to future-proof their tokenization strategies, particularly in this evolving market. What are the 2-3 things you tell them?
Be multi-chain. I mean, I think that you'll find like there's a fit in different chains for different use cases, but I think you want to be able to be flexible, and interoperability is something that we always hear about, especially from big players. That's going to be more and more important. So I would say don't box yourself in and see where there's a fit.
Okay.
Yeah, I agree with that. I would also say, there's a lot of pressure on blockchain teams to come up, or innovation teams to come up with a strategy. Don't just YOLO yourself into any chain, right? Like, do your due diligence, and without mentioning any particular chain, look at things like interoperability, or make sure it's on the roadmap to make sure you don't get stuck in a siloed ecosystem. I would say privacy options to make sure that you can adhere to compliance. That's just the reality of it. And then, of course, scalability to make sure you're set up for future demands. Also look not just into the tech, I would still suggest look into the team, right? Are they building for the future? And are they level-headed? Very important in crypto.
It's not a problem that we face today, but if I was putting really large value on chain, I would be very concerned about quantum security. And that's the kind of thing that would keep me up at night, and it's not too early to start worrying about that. The history of the chain on Algorand is quantum secure, but even we need to make sure that our VRF is quantum secure. We as an industry have a lot of work to do in that regard.
I think being open-minded and flexible, and don't think you can future-proof it, because things are changing so fast that trying to think that you're going to do something that it's going to be the same in the future, it's naive. So the way to future-proof it is think you cannot future-proof it and be open and flexible.
Fantastic. Well, thank you so much. I'm going to end on that note. Stay flexible, open-minded. The space is changing constantly, so make sure that you can adapt. So thank you so much to the panelists. I hope you enjoyed it, and have a good rest of your day. Thank you so much.
Thank you.
The changing regulatory environment following the U.S. election. Please welcome moderator Patrick Jordan and his panel, Greg Exathalis, Hadley Stern, and Marcus Hughes.
If you wanna run away with me, I know a galaxy and I can take you for a ride. I had a premonition that we fell into a rhythm where the music don't stop for life.
All right, welcome to the last panel of the day. Robust audience here. I'm Patrick Jordan from M Group Strategic Communications, probably the least important person on the stage at the moment, so I'll let my panel introduce themselves, starting with Greg and moving along.
Hi, I'm Greg Exathalis. I'm the General Counsel at Multicoin Capital and also a visiting lecturing fellow at Duke Law.
Hi, I'm Marcus Hughes, VP and Global Head of Regulatory Strategy at Kraken.
Hadley Stern, Chief Commercial Officer at Marinade.
Okay. Thanks for being here, guys. So I'd like to start from a kind of macro level before we dive into the nitty-gritty of regulation. But what has the U.S. election, obviously, President-elect Trump, meant for the crypto market in general? We've seen a lot of changes, and I'll let you guys kind of expound on that.
I think I don't even need to respond to it. I think the AV team can just throw the big fireworks of 100,000 onto the screen. Obviously, the market has been excited, and the dynamics on that play out. One in people putting capital to work, one in TradFi institutions looking harder at some of the structured products that are available through traditional accounts. But almost more importantly, the idea of people coming back to the US and viewing US as an environment that can once again be welcoming for builders, developers, investors, consumers, and users of these products. So I think there's been a lot of optimism and at the same time a lot of desire to see, the follow through. I don't know.
Yeah, maybe I could just kind of add something to that, which is that, to my mind, what it is certainty. For the first time in many years, it's certainty for the crypto industry. We don't know exactly where everything will shake out, but there'll be a degree of regulatory certainty, and that's a positive. We've had years of regulation by enforcement. It's been pretty negative. We've been trying to build in an environment where it's very hard to know what the rules of the road are, and they can change, on a dime. And so I think what we're excited about Kraken is finally we can get to a place where we can start building, have constructive engagement with the government, with regulators, and really start to, grow out the crypto ecosystem in the US, even more.
Great.
Yeah, U.S. elections are always such funny things because they're so exhausting, right? And for European context, like it's odd. It goes on and on forever, and then even once the president is elected, you have to wait so long. So it sometimes feels like this moment was like very slowly, but then suddenly very quickly. When I woke up the next day in Boston, there was an immediate and palpable change in conversation. So Marinade is a staking provider on Sol. Solana has had a history of, is it a security, is it not a security? Staking has a history of, confusion around what validators do. So just very, tactically and tangibly for me, the conversations that once it was clear have changed. I do feel like we're operating in an environment of just complete exuberance, and so we now need to see what actually happens. But obviously a sea change, and for those of us, I've been doing this since 2014 in the US, kind of a relief moment.
And if I could just double click on one thing Mark just said, is the idea of an environment where discussion is available is really important. Essentially, for the last 3 years, people haven't been able to engage with regulators in the US because engaging with regulators voluntarily was putting yourself at risk as a protocol or as a company or as an individual developer. I think that's the most fundamental thing that's going to change and lead to that clarity and certainty. We didn't wake up on November 6th, or we won't wake up on January 21st with a sudden world where everything is solved. There's a lot of hard work that's going to go into creating a proper regulatory framework, both in the US and around the globe, but it has to start with conversation. For example, ethics rules in the US government don't permit our regulators at the CFTC, SEC, et cetera, from owning, holding, and using crypto. You can't learn this stuff if you can't engage with it. And you furthermore can't learn it if you're not able to have a conversation with the people who are actually doing the work and understanding how these disintermediated systems are different than the traditional financial intermediated systems that our regulatory infrastructure has been built around for 90 years. So having the conversation, having the meeting room, having it be in an environment where you're not going to walk out with a thank you note that says subpoena at the top.
One thing I'd like to pick up on what you said is, to a certain extent, a framework that other countries have that we're now just having the opportunity to probably get. From a global perspective, Marcus, how does the changes in the U.S. fit in with what you're seeing in other areas?
Yeah, I mean, I've been working in crypto since 2018 and kind of interested for a while before that. So I've seen the evolution globally. And, I'd go back to kind of FINMA in Switzerland, first publishing those classifications of different types of crypto assets. And that was a real kind of milestone. And then you had Japan and Singapore evolving their own regulatory systems. Where I think there's been a lot of success is that kind of, slowly but surely, engagement with the industry, a bit of education. What is crypto custody? What is hot and cold storage? I mean, these fundamental questions can seem pretty complex to governments and regulators that are not used to dealing with it. And so I think that early engagement, and then slowly but surely you focus on the key issues. And you see, in Germany, when they brought out their legislative framework, it was focused on custody and consumer protection, safeguarding of assets, making sure you know your customer and their source of funds, just the kind of founding kind of principles you'd expect. And then you layer in kind of more rules over time. And I think that's where we've seen, degree of success. Obviously, MiCA is kind of underway in the EU now. We're excited to see that. I think it's a great step in the right direction. The UK has very recently said that they're going to be accelerating crypto legislation through Parliament. Again, there are more consultations, but within the next 18 months, hopefully, we see something there. Canada has pursued a more kind of crypto as securities path, but it has a legislative framework. The CSA has built that out. There's some big questions still undecided, but it's all kind of constructive, and it's a process of engagement and dialogue. And I think that's where the US has a huge opportunity now to have that dialogue, that process of education, with kind of no fear of kind of enforcement action down the track, and hopefully, moving towards kind of building, generating jobs, generating growth in the industry. For Kraken, it's that partnership between TradFi and crypto, and how do we bring people through from traditional finance? And I think all of that becomes possible now.
Great. I wanted to drill down a little bit as we move through this and talk about, there's been some talk of, from the US side, of crypto legislation possibly passing during the lame duck session. I mean, we're early December, and that would be an optimistic view, I would say, at the least. But, what in your views could we see from a crypto legislation, either lame duck or early in the Trump administration?
Yeah, so I think it is not completely impossible to see a very short form market structure bill in the lame duck, but the likelihood of that has significantly reduced. And the lame duck period, by the way, is the close of the 118th Congress in the US, which technically ends on January 2nd. So Congress is meeting now, and they're passing certain final measures as well as confirming certain nominations. To get floor time in the lame duck is very difficult, and it seems quite highly unlikely that we'll see a shortened version of Senator Stabenow's DCA move through. But I do think we will see some crypto legislation in 2025, starting first with certain tax measures that will appear in the reconciliation period at the start of Congress, where things are a little easier to pass. And then Q3 or Q4 of next year, we'll start to see a reintroduction of market structure bills based probably on the DCA, as well as Congressman Hill and Thompson's FIT 21, as well as stablecoin legislation, perhaps based on Senator Haggerty's most recently socialized bill. It will take time because crypto will not be the top legislative priority in 2025, but a lot of progress has been made in 23 and 24, and that will build up towards getting actual legislation. Important to note, though, that as we see Trump install not necessarily always pro-crypto, but crypto-friendly or crypto-open heads of administration, the pressure on Congress to functionally save the industry from an aggressive administrative state is significantly reduced.
Excellent. Guys?
I would just add, I think you articulated that very well. I mean, I think what's been good to see as part of that process is the engagement across the aisle. I mean, you've genuinely seen people kind of put aside differences in other areas of policy and actually try to come together to create something constructive. I think wherever we land on the lame duck legislation, that's a positive, and we can carry that into the kind of future engagement.
Yeah, there were three crypto-specific votes in Congress in this last cycle. FIT 21 out of the House, and then SAB 121 in the House and the Senate. And FIT 21 in the House had 72 Democrats vote in favor of it, and SAB 121 had 12 Democrats vote in favor of it in the Senate. That's not irrelevant. There are crypto allies on both sides of the aisle, and there are people who are working together to find solutions, in part, to be frank, because if you're a legislator or a staffer in a legislator's office, there aren't that many things, that many topics where legislation is actually necessary. So crypto actually allows people to do real work on something interesting and new, and if you're the sponsor of that bill, possibly put your name on it.
Excellent point. Hadley, anything?
I guess I'll be a little contrarian here. Appreciate all the explanation of the dynamics. I don't think anything's going to happen in the lame duck session. I think there's too many other things going on, and I don't see, a lot of benefit for the political machinery. But I don't think it will have a broad impact anyway, because the big story is not the lame duck session. The big story, as you alluded to, is what happens in 25, and I think that's what we should be focused on.
Greg, you brought up the new presidential appointees, so I wanted to discuss that a little bit. How do you see, or how do all three of you see the changes, with new Treasury Secretary Bissett versus, after 4 years of Janet Yellen? And I mean, Janet Yellen was a known quantity in DC before she was a Treasury Secretary. It's not so much the case now. Where do we see the leadership of Treasury going?
Yeah. I mean, my initial thoughts on Bissett are that, clearly very open to crypto, and the Treasury Department is expansive. So one of the key aspects is Bissett working with the transition team to find those deputy level participants and how they staff underneath. Scott Bessent is not going to be focusing a significant portion of his time on crypto issues, but he's going to be directing those that are. So among the very significant positions that we're keeping an eye on is who gets installed at Terrorism and Financial Intelligence, which is a deputy, an undersecretary position, and domestic finance, and how they staff up those positions. But I think very positive. Treasury's been very difficult for the crypto industry over frankly, the last 5 years, and I think it's very, very positive.
Yeah, I would echo that comment. I think for me, it's just the open-mindedness. No, it's not you have to be pro-crypto to work at the Treasury. It's just you have to be open to the fact that this is a new aspect of financial services. You have to be open to having that dialogue and to start learning about it and understanding it. And I think if that can kind of percolate down from the top level, that's got to be a positive.
Yeah, just to echo, I think, Greg mentioned earlier that it's not about having people who are just going to say yes to everyone. I think all this industry is desperate for is a rational conversation with people who are willing to roll their sleeves up and solve complex problems. So it seems hopeful that we're going to see that. The other piece that's always been a dynamic has been who has authority over what. So the other thing that I'm cautiously optimistic on is that egos can be parked and the SEC can say, not only will we work with you to help figure this out, but we'll let other people work with you on things that aren't in our purview. And that's something that has caused a lot of stress in the system between the various bank regulators, SEC, CFTC, et cetera. So again, cautiously optimistic.
Hadley, you just mentioned the CFTC. Any of you can answer this. Do we see a bigger role for the CFTC now that we have a different SEC commissioner coming in who may not want to necessarily bogart all of crypto legislation?
Yeah, I mean, I would say a bigger but smaller or right-sized, so... and I don't envy the regulators. This is a very complex problem to figure out, and between the Howey test and what isn't a commodity, and when I look at something like staking, what exactly is staking? Is it fuel? Is it is it a security? It's not. But just to say that yes, I think this is almost something, and I know there's been talk of a crypto czar, which I'm curious to see what other people's opinion on, but. Part of the challenge here is how to structure all these conversations, and are we talking about something so new that some of the old paradigms do not apply from a regulatory structure standpoint? But then again, God forbid we have yet another regulator. So I'm not sure what the solution is, but I would imagine the CFTC will be more involved, but hopefully in a prudent way.
Mark?
Yeah, I mean, maybe it's interesting to kind of compare and contrast. I think in the US you have a unique complexity because you've got federal versus state. You've got a lot of different regulators, the OCC, CFTC, SEC. the Howey test is something that's rooted, in the Securities Act of many, many years ago, and you're trying to apply that to novel, digital assets. And I think just all these things combine to make it very hard to reach that consensus. So I think that's going to the point around kind of collaboration, hopefully something we can move towards. Whereas you look at the EU, there are standardized ways of making rules. There are consultations, member states. You can argue that it's imperfect, but it's resulted in MiCA. And I feel, kind of cautiously optimistic that we're trending in a positive direction there, and in many other countries. So I feel that what we almost need is that injection of willingness to figure out a solution. And it feels to me that the trend is that these, for the most part, these assets are commodities and therefore subject to CFTC's purview, and they are not, for the most part, securities. And I think it's that kind of certainty. We've had conflicting statements, from the chair of the SEC at different times. It's been a complete hodgepodge, whereas now I feel like we're trending towards a positive direction. So again, let's not take it for granted, but the mood music is looking good.
Excellent. Greg?
Yeah, I think they're both spot on, and it seems inevitable that the CFTC will have a larger role. Whether or not they actually get spot authority, which typically the proposed legislation has assigned it to the CFTC, remains to be seen. But I think working across between Union Station and F Street is going to be really important for the CFTC and the SEC to work together. The US, the fragmentation of the regulation of commodity interests and securities is one which, as a practicing lawyer, I've had to grapple with a lot. But one thing I want to hit on again also, which you mentioned, not envying the regulators, I think people should remember and be kind to their regulators and their staffers, because this is really hard stuff. 90 years of financial markets regulation in the US and across Western society focuses not on regulating users, not always on regulating products, but on regulating intermediaries who have the ability to see the field. So when you replace a DCM for derivatives with a perps DEX, who are you going to regulate? These are difficult questions, and do you need to regulate anyone at all? And I would hearken back, I think within the US, the most effective and best and common sense regulation of crypto was the first ever global regulation, which was guidance put out by FinCEN, a division of the Treasury, in 2013, that said, no, we don't need to regulate Bitcoin and other convertible virtual currencies like Bitcoin as payments administrators, because there's alternative methodologies of having the correct policy goals. In this case, don't regulate Bitcoin, regulate, the Coinbases of the world or the Krakens of the world, who are the gateways where people go from fiat to convertible virtual currency, and where it's a party that rationally looks like a regulated intermediary who can see the field and provide the type of consumer protections that are required. But ultimately, I think crypto is a technology that's about individual empowerment and individual responsibility. If you're using an HSM, you're taking that role on for yourself, and I think governments ought to recognize that type of power in the individual user.
Excellent. We'd be remiss if we didn't bring this up, but how do we think I'd be interested to hear from you guys, how we think the change from Gary Gensler to Paul Atkins is going to be?
I think we can all smile and answer that question.
Easiest question of the day.
Yeah.
Come on, guys.
Paul Atkins, he's a former commissioner appointed by George W. Bush, libertarian. He thinks very carefully about promoting market competition rather than regulation for regulation's sake. Also importantly, when he was commissioner, he actually hired as counsel two people named Hester Peirce and Mark Ueda, who are the current outstanding and very pro-crypto Republican commissions at the SEC. The expectation is that Commissioner Peirce, who for those of you in Europe who may not be familiar with her, is known as Crypto Mom and is perhaps the deepest thinker among regulators on crypto issues. She is expected to carry the torch and lead within the SEC on the crypto portfolio. And I think it's a really exciting time for the industry to engage with them and be able to come up with solutions that actually protect consumers and investors in the space while allowing people to grow around the world, but also for the first time in a while onshore in the US.
Yeah, I mean, as you say, almost the easiest question of the day, isn't it? I just think
Had to ask it though.
Yeah, of course. I mean, it's Gary Gensler's just been so negative for the crypto industry, and you look at the resources that the SEC has poured into pursuing, a small part of the total financial services market in the US. The unwillingness to engage, the regulation by enforcement, it's been a very kind of negative process and disappointing, frankly. And so I think just the fact that to have someone as chair of the SEC who's just prepared to have that constructive dialogue and figure out how do we move forward in a constructive manner is just going to be great. So I think obviously we're feeling very excited about it. I think it's a great step forward. And hopefully we can kind of draw a line under the Gensler years and look forward in a positive way.
Hadley?
Bullish. Yeah, I mean, I think these two gentlemen summed it up, so bullish. Anything will be better than what was, even if there's going to be a lot of hard work to do, but as you alluded to, the intellect behind the people there and the experience with Hester, very, very, I mean, she was the dissenter for a lot of the Gensler period, so very excited.
And to your point, Marcus, on the type of activity that Chair Gensler undertook, I think there was optimism when he came on board.
There was. MIT blockchain member.
Yep, there was optimism because of his familiarity, but his personality does not bode well for being a regulator in this space. And what he ended up doing over the course of the last 3.5 years is, instead of providing guidance to the good actors in the space, he gave them an enforcement division. Mm-hmm. An enforcement division that could have been better served protecting investors rather than harming people who were trying their best to do right and do well. And the number of enforcement actions in crypto that did not involve fraud is a condemnation not of the subpoena recipients, but of the party giving the subpoena. Yeah. Instead of guidance, good actors got subpoenas. Yeah.
I want to pick on something you said earlier, Greg, about the broad nature of the Treasury Department. Is there, we talk about tax legislation for crypto, but are there tax changes the IRS could make on its own under a new administration that would make life easier for crypto users?
There are a lot of proposals that have been made over the course of the last 4 years, 5 years, most of which have not been finalized, but the IRS has rulemaking authority, and as they work to finalize some of those rules, there are a couple of different aspects. One, for example, there's a broker reporting rule. There is a software developer component to that, which makes it very difficult to be a decentralized developer. There is the interpretation of 6050I, which is a pernicious third-party doctrine component of the Bank Secrecy Act that was passed in the 2021 infrastructure bill, which basically says that if Hadley sells me an NFT for $10,001, we've got to share with each other our passports and file a report to the IRS. That's just insane honeypotting. So if you want a meme coin today, honeypot would be the meme coin if you were looking at some of the treasury implications. It's unclear whether we will go that route. Okay. Earlier this week, the Corporate Transparency Act was struck down by the Fifth Circuit in Texas, which was, again, another honeypotting provision passed by Congress. My hope would be that Treasury would move back on some of those components and, again, work to understand the technology and create rules that make sense rather than rules that make it just very difficult for this industry to do anything. And there is optimism. There's a lot of people within the law enforcement side and the FinCEN side at Treasury who really get it on crypto. They're actually better than most, even though some of the policy decisions that have been made have been pretty disturbing.
Excellent. As we kind of wrap up here a little bit, any last burning thoughts from you guys about, as we move forward, anything we haven't touched on? I mean, we have court cases and whatnot we could discuss, but we don't need to get into that minutia. So, what's burning in your
Yeah.
talk about.
So maybe just let's zoom out and look where we were back in, say, 2018, 2017, and look where we've come to now. I mean, I think there's a real cause for optimism. We're getting regulatory frameworks built out, many of them sensible, step-by-step approaches in a lot of key jurisdictions around the world. Crypto adoption is climbing. I think we're seeing lots more interesting use cases for crypto come out. It's not just Bitcoin, 100K and beyond, which is great, but there are a lot of other interesting things happening in the ecosystem. So I think to your point, we should be bullish. We're still early stage in the development of this kind of crypto world, but it's very, very encouraging. So I think we can go into the new year kind of with renewed optimism that we can really start to build something interesting.
Hadley, what do you?
Yeah, I think not to sound too patriotic or ethnocentric, but it's been hard to be an American in this space. And one of the things I love about this industry is it is a global industry. And we all work together across nations and cultures and languages, and we all work on teams. And that's what makes it so interesting. At the same time, I'm very, again, optimistic and bullish that the kind of American inclination to innovate and do things at a really big scale can now finally come back to crypto. The reins have been held back for so long. And so excited to collaborate again with the world and create some great new products that delight users and solve meaningful problems. So I think to this global audience here, the word hopefully is we're back open for business again. We're hopefully able to collaborate in a meaningful way that we really haven't been able to, and this whole IP blocking and use a VPN or don't do it because you can't do it or create a legal entity here nonsense will go away, tempered with reasonable regulation that protects consumers in the industry. So I hope that we are open for business again and that we can really interact in this global crypto movement together again.
Great.
Yeah, that's a great point. I mean, harmonization across industries. I don't think the U.S. has been a particularly helpful party with respect to the global regulation of crypto, and I think that's definitely a big point. The other thing I would say is everyone thinks of November 5 and thinks of it as pro-crypto and a big Republican win, but within crypto is decidedly not partisan. As I think it was Marcus mentioned earlier, the votes that we've seen, particularly on the House side, there's a lot of Democrat support for crypto as well. There's a small subsegment of the Democratic Party that has been decidedly anti-crypto. That segment is a little bit smaller today than it was on November 5. And I have great enthusiasm and hope from the efforts of organizations like Fairshake that were explicitly bipartisan that more of the Democratic Party will join the Republican caucus and the GOP platform under Trump that has embraced crypto and the potential to open up new economic avenues, also personal empowerment avenues. So it's one of those moments where you just say, let's go.
Excellent. Way to wrap it up. Thank you, guys. We had finishing right on time. And it's been great chatting out here with you guys.
Thank you.
Look forward to it.
It's a high chair.